Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no. Just call your boss. Take a crust from out your eyes. So tasty, not a coffee.
Nikki, we are back, son. No. Good morning, you knuckleheads. Hello, Vanetta.
Good morning. Are you okay?
Yeah. You know, sometimes if I read or I get a little sidetracked for some reason.
He's losing it slowly, day by day.
Do you think?
No.
I think I'm holding up better than I expected.
You are.
Yeah.
You've actually. I was
like a shooting star. I think I was getting like, you know, I was dying as like a star was dying, and now I'm shining bright, and then I think
he's had a little bit of a come up
sure
recently.
That's not how astronomy works.
Why let facts get in the way of a good story, Vanetta? Why let facts get in the way of a good story?
Okay, you're right.
Anyway, how are you this morning? I know you're going to the eye doctor. My other son is going to the eye doctor. What's going on with the eyes today?
It's a good day for eye doctors. So
Yeah.
No, I've just been having an issue with my retina. I see a retinologist yearly for past shenanigans, but I'm having to see one a little more regularly. But let me tell you, my eye doctor is the most gorgeous man, and I have never seen this man in focus in my life.
So what are you wearing there? You got the little something for him?
He looks like a Disney prince.
A doctor, though, that's a good pull.
Did you get this doctor from your girlfriend? Because that's how my wife got her knee doctor.
Yeah.
My wife has a knee doctor.
And the physical therapist.
No physical therapist yet that looks like, you know, a Disney prince. But
be careful.
Yeah. My wife got her a knee doctor the same way. She would always
Good for Chrissy.
Yeah. Did you get it from a girlfriend, though? Is that how you found him?
No.
That's how she found him. Yeah.
But what's wrong with Vinnie?
He needs to miss school. Test today.
Finals.
Yeah.
Finals. If he misses the final, he gets to spend more time. Yeah. One eye is a little, for about a week, it's been like red, but he has allergies. This is we've had drops from 4 different doctors from 4 different ages. Every once in a while, this time of the year, he gets them. Now he's convinced it's pink eye or something else like that, but it's not. It's his allergies. But he's going to go to the doctor.
Well, it's good to get it checked out.
Yeah. It's been a week. It should be checked out. I agree.
Yeah.
I agree. But he'll be fine.
Pink eye, he could be getting into some shenanigans. Who knows?
Let's hope not. Let's hope not. Anyway, what about you, son?
Vanessa's just like,
you would give your sister pink eye all the time.
I don't know. I don't remember ever having pink eye.
She didn't get pink eye, but she said you would give her pink eye by the things that you would do. It's true. You know it's true.
Yes.
It's the memories. It's the memories I have. 13, 14 years old.
What is happening?
Oh my God.
Nikki, save us. What did you do last night? Please tell us a pickleball story.
I can't save us. No, I did play last night. I watched some of the basketball game. That was the first time I've watched a basketball game in
Knicks. I watched it too because of Vecchio, I think. Yeah.
I got some buddies that are
about women's basketball. Now I'm not interested.
No. I was watching the Knicks Cavs game. I mean, it was a wild. I mean, the Knicks were down 20, I think.
Yeah.
Like
they looked
6
horrible. I
minutes
could only
left.
imagine what Vecchio was doing, spinning around.
He must have been. Well, he did he put out the meme of Roaring Kitty when he is kind of like this, and then it
lean forward.
the lean forward, and then lean back, like he's back awake. But I saw
was it the last game of the series?
It was game 7 for right, wasn't it? They win the series, didn't they? But they won the series. So. It's over. That was it. Overtime, game 7. Yeah, that was it.
I was just curious. I wasn't trying to trap you. I just haven't.
No, that was the first game. That was game 1. Yeah.
You're right. Oh yeah, I thought it was game 7.
It was game 1.
I saw it went all the way to overtime.
Yeah. But I saw that it was the probability on it was 99.9% predicted had Cavs winning with 5 minutes left or something like that.
I love it. And then the chart just falls off a cliff.
And then the chart just... Yeah, exactly.
Yeah,
it was pretty crazy. And the Knicks...
You didn't bet it?
No, the Knicks were 7.5-point favorites. I saw some stat that like 95% of the money came in on the Knicks, whether it be like Knicks money line,
Right.
Knicks spread.
Wow.
It was like 90
people
or
got
90.
paid.
People ended up getting paid, but it looked like the book was about to clean house.
Oh.
I mean, because
Okay,
the
well, good
Cavs
for the
were
people.
outright winners.
Yeah.
You know, with 10 minutes left in the game. So, but that was a good game.
Do you have FOMO?
Not really. Basketball just doesn't. It doesn't. I guess because the Bulls are just like not competitive, so it's not interesting to me. But I don't know the product. Too many games. Nobody plays in the games. It doesn't seem to matter ever until the playoffs. So it's just not.
I agree with you.
And we are mad at Klay Thompson for what he did to my girl Meg.
That is right. I can't stand him. Oh, so horrible.
I'm going to
I
abstain.
hope he never wins anything ever again.
Definitely.
People are writing in the Porsche didn't fix the pink eye.
Oh,
No, it made it
it's
worse.
so funny because the Porsche. So we've already started the money hemorrhaging here. New key,
Yeah, new key. He needs a key. Oh, he only has one key. I think
tires.
one tire has a little bubble on it. I don't know if it happened before I bought
What's
it.
the next thing? Those are the two updates in the last.
That's it.
So we've had it for
2 weeks. Week and a half. Yeah.
all right.
Yeah.
So we got
And,
nothing.
and
new.
who is the financier of these adjustments?
He's
working it
paying
off.
back in installments.
Yeah,
No, I did.
Okay.
I
the
took
key will take them 4 weeks. It makes
'Cause
about
I
200 bucks.
thought-
200 bucks a week.
How much do you think a key is? Did I tell you?
I mean, I know
$250.
a key for a normal car, and by normal I mean like one that like a normal person drives, like like
Average.
yeah, like an average car.
Average,
is
yeah.
probably 200 to 300 bucks.
Yeah, yeah.
The
Yeah, I said
Porsche
250.
probably doubles. Everything is double. So a tire,
tires
200 bucks is
tires
gonna be
are-
400 bucks.
No, about $250. Yeah, for the tires. Balanced,
Yeah.
blah, blah, blah.
Yeah.
But you need two because
Yeah.
you can't put just one.
Oh, yeah,
on,
there you
right?
go.
got to match kind of thing.
Yeah, of course.
Right.
Of course.
Right. Key 700.
You got to talk to my girl
Yeah.
Tracy. Her husband is like the tire king of Ohio.
Oh, I didn't know that.
Yeah,
I didn't know
really?
we had an in.
Yeah.
Shoot.
I told them Costco. I was like, hey, I found out this
Costco's also very
got
good.
tires too.
I like to go local. I go to Loyola, just a little local place. But
Yeah.
yeah.
That's good.
Yeah.
Support your local business. It's good.
Support the kids that went to private school.
Yeah.
You know what I mean?
It's good.
Right.
It's good.
For sure.
That's funny. Hey, this is crazy. I like to watch YouTube, in the evening as I'm putting the show together, and I watch, people going like on travels or adventures or, camping and stuff like that. And so I was watching a video last night, and this guy is driving his camper van to Alaska, right?
Ooh.
So he's
cool.
going to drive to Alaska, have all these adventures, whatever. But you have to drive from the U.S. You have to go into Canada first before you can get to Alaska.
They made a movie
So he
like that. It
stopped-
didn't end up well for the guy. But go ahead.
No, so he stops in Canada, and there's the last big city in Alberta, right before you get to Dawson Creek for the Alaska Highway. So it's the last big city in Canada. There's a Best Buy. He buys 3 1-terabyte drives for the footage, that he's going to be shooting. How much do you think that cost?
Oh man.
Because this was just like a couple weeks, like a week or two ago.
It's anything
'cause
like
he's
a
doing
key.
it,
It's
like,
going to be
right now.
$700.
But in Canadian. So I'll tell you what the price that he said it was in Canadian. So 3 1-terabyte solid state drives, external solid state drives.
I feel like they're
$200, $150.
Yeah, I don't know. I don't even know where to start. Probably
Talk
$100
about
a pop.
Like when you were
Yeah.
kids, you would
Yeah.
plug it in to
But
stick your games
knowing
in.
what you know
Yeah.
about
To
memory
pirate
prices
music.
now.
Yeah,
Yeah,
or the
memory
pirated
pri-
music, right? It was like 50.
But have memory
prices.
prices gone to retail? Like to consumer memory
I
too?
will tell you. So this man, fine as he is, he spent $1,181 Canadian for 3 T7 1 terabyte drives.
Wow. So that's probably like $250 a pop.
You only got
US?
1,200 Canadian?
No, it's
the Canadian dollar is like 60 cents on the dollar, right?
No, it's like
70 cents.
70 cents.
70 cents on the dollar. So it's $750, $250 a pop.
yeah.
$50. That's what I said. If I'm looking right now, $50, $60, $40
On Amazon?
The giant warehouse. I don't know. I'm just looking.
Is that a terabyte or 250 gigabytes?
1 terabyte hard drive.
That's crazy though.
Solid state drive. There's a difference though.
See, I'm not.
Some of these are $250 a piece. Yeah.
There you go.
Yeah.
Yeah. But I was just surprised. That's it. It was just a fun anecdotal because I'm not, buying drives.
Well, they got to pay for the carbon footprint that they're doing, so that doubles the price or something like that.
Is it tax on that?
Yeah,
there's tax on the carbon footprint. There you go. You got to pay for recycling before.
You got to pay for recycling before.
Yeah.
Recycling after.
You know what?
Shenanigans all around. Hey, we got a great show for you today, you bunch of weirdos. It is a wonderful Wednesday. Hey, hump day. Here in TC Live, a lot of great content headed your way at the top of the 8 o'clock hour. We have an options jive, how Vega decay gives sellers an edge.
Yeah, it's a good one. Just a primer on Vega decay. We're looking at it on duration as well. So we're going to talk about like calendar spreads and how Vega affects those positions. We're going to talk about just generally how Vega responds to the passage of time. So as you get closer to expiration, what happens to your Vega? So it's a good little primer on just short premium and volatility.
We don't
exposure.
talk about Vega a lot, specifically.
Yeah, it's one of those things that's like, it's good to know and understand what side of volatility you're on. And when you're selling premium, you're short Vega, of course. But it's not as consistent or as meaningful as like time decay or delta exposure. Vega just kind of like is what it is. And there isn't a common denominator, right? There's no beta weighted Vega that you have. It's just per position. So it's too granular to really focus on a high level.
Okay. Well, it will help to expand everyone's understanding of it as a concept. And then we have, because it's assume the position, Wednesday, we've got What's Your Assumption at 8:40. The bats are going to do viewer submitted trades. This is where viewers write in with their trade ideas, but they have an underlying, and more importantly, they have a bias. So we are going to see, especially had a nice little down day yesterday, maybe some opportunities presented themselves. Our viewers are very smart, and they see things that we don't see because we're doing stuff.
I see things.
Yeah. And then we got a little tasty extra with TP. Thomas Preston in the house. What are you talking about with TP today?
It'll be on the cherry picks. I don't know. Oh, we do have slides in there. So we're looking at Nvidia today. Ooh,
earnings.
Looking at
earnings.
earnings.
On deck for earnings. So yeah.
And I think I will be on with.
TP got pissed at you for making fun of his 90-cent puts, and he's going right to Nvidia.
Yeah, that's good. That's good. I will be on with Vecchio and Ilya after the close today. For Nvidia.
Very nice.
Just
okay.
watching.
That's very exciting.
I mean, because this is might as well be like D-Day.
The Super Bowl of earnings right now. It's at the end of the season, too.
Yeah, the world as we know it is on the precipice.
Nvidia up $4 this morning.
Hold.
$13 expected
and then we
move.
have live from the trade desk at around 9:20 with Q in the house counting down all the top trending tickers at TC Trade, and Glenn G Money on the FX side of things. And at 10 a.m. we have the very lovely Liz and Jenny live from the SIBO. It's always electric when the ladies are live. Especially it's be interesting to see how much market activity there is or isn't as we wait for Nvidia earnings based on how loud it is where Liz and Jenny film. But if you have a question for Liz and Jenny, use that hashtag on Twitter, LIZJNY, and you could have your question answered by Liz and Jenny.
You don't need
hey, that's
my
our running
alibi.
show for today. In the meantime, in between time, you guys want your daily dose?
Sure.
Yeah, hit me with my theme music. Let's go.
Our leading story, breaking news.
Breaking
Coming across the wire. Leading story. Top story. Just in.
In today's headline, this just in.
Breaking news. Story.
All right, everybody. Today is a wonderful Wednesday. It's May the 20th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
Ready for the news.
Nikki, your birthday's coming up, right?
Yes.
End of the month.
Yes. No gifts, please.
In lieu of gifts, you can give him money.
Yes. Yes.
Are you a Taurus?
Gemini.
Oh, you're a Gemini? Yeah,
Yeah.
that explains a lot.
Oh.
What does it
Anyway,
explain?
this is the part of the show we
Hold
like
on.
to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
I'm ready for the news, but hold on. Sharp, intelligent, dual-natured, adaptability, charisma, communication skills.
Okay, but ask a woman what it's like to date a Gemini, and then report
Restless,
back to me.
inconsistent, easily bored.
Clock it.
Yeah. Fair assessment. I got it. I hear you. Heard. Yes, chef.
Social butterflies who could talk to a brick wall. Intelligent and curious.
Thank you.
Highly
I didn't
adaptable.
say it was all bad, but
Yeah.
again, just
Yeah.
some
thinkers.
women that have strong feelings about Geminis. Earnings, Mr. Bat.
Well, Nvidia is going to be the big one. I think we had Target this morning. I don't think that did much from my memory. Looks like it's up $2.
Yeah.
And I think Intuit was this morning too, possibly. Looks like it's down $2.
Lowe's, TJX.
Oh no, Intuit's after the close today. Sorry, go ahead.
Yeah. Lowe's and TJX were also this morning. But yeah, Intuit and Nvidia is the Nvidia. It's Nvidia. And then you got Intuit, Elf Beauty.
Getting to my first headline of the day, Trump has signed an executive order directing the Fed to open its payment rails to fintechs and crypto firms. The EO directs the Fed to evaluate the legal framework for non-bank access to reserve bank payment accounts. Ripple, Anchorage Digital, and Wise are all seeking Fed master accounts. Kraken is the first crypto exchange to get a Fed master account. The Fed report will be due in 120 days. So I just put PayPal up here because that's the one that you can trade. So
Crypto needs any headline it can get. I guess this is helping a little bit today.
well, does
Up
Tasty
small.
want access to the Fed master account?
Can we skim from it? Does the money
Hey, there's that dual personality. No.
Yeah.
No skimming. Bitcoin up around 700. PayPal was doing nothing. PYPL, $43 and change, up a dime. On its butt, Ivy rank of 26. No earnings looming. I don't know, maybe you could do something in July. $2.50 wide strikes doesn't make it that interesting.
I think this goes to the conversation yesterday a little bit too. Anything that can help with speeding up settlement and transacting and just making that more frictionless is a positive. You would think that this would be part of that.
Right.
So I think for a consumer, it's really good. It's probably not good for any place that charges like $25 for a wire fee. Like JP Morgan. Like those places, there's a reason that this hasn't been done in the last 4 or 5 years because those places make a lot of money.
Yeah. It's all goes to the bottom line.
Yeah.
It's gravy.
So
Stupid too.
Hey, in other news, of new Fed chair, Kevin Warsh is set to be sworn in on Friday, and Trump says he'll let Warsh do what he wants on rates. A remark Fed watchers have been waiting for. The rate hike odds by December have now climbed to 55%. What did you say was that tipping point?
60.
Okay, well, we're at 55, my guy.
Yeah.
there you go. Do what he wants. Close.
So bonds hit a 22-year high yesterday. I'm sorry, Treasury yields. I misspoke. I'm so sorry. Treasury yields hit a 22-year high yesterday. So what are we doing now?
I don't know. I saw some putties in the bonds down around 1 standard deviation yesterday. For option trades today, which you were so I saw my media team tweeted it out, gave me a very good headline on that, so I appreciate that. It's not my bid yet, but another tick or two it will be.
I also
Buy
have
those
some
back.
long delta in bonds. Sold the 107s and the 106 puts. We did the 106 yesterday. 107s are.
I think I did well. Synthetically, that's the 105s, right? You did the 106. Oh no, 107, 106.
107.
I think I did the 105s. I will look for you. Yes. Just a little bit under you.
What adjustments do you make, if any, now that you see that the rate hike odds are 55%?
Nothing.
It's already. I mean, that's priced into.
That's why that's why the bonds were so weak.
Yeah.
And
Okay.
yeah.
Okay.
Exactly. So I mean, that's the whole funny thing about it, is that the market is what is moving the projection for rate hikes.
That's
now
right.
it's nothing else. So it's the market is determining what the Fed ultimately is doing. It raises the question of like, why do we have the Fed, right? If you have a market that is trading what the rates are going to be, what purpose do you need, a guy in a suit to tell you what they're doing?
Because they also charge $25 for any type of wire.
That's true. That's very true. So
Investors are all in on stocks. And in fact, investors haven't been this bullish since the peak of the 2021 meme stock era. There's been record monthly equity allocation surges, but Bank of America warns that this surge in bullish sentiment could lead to a June swoon. Energy inflation plus Iran war risks plus overbought semis equal a recipe for a June pullback. The record monthly surge in equity allocations destined to fall in June. What are your thoughts?
It's all bullshit.
These are.
Remember April, Vanessa?
Yeah,
you were bringing us the same articles from different companies that were saying, it's been the biggest.
Retail was as long as it's ever been, and CTA hedge funds were as short as they've ever been.
Exactly.
And the market ripped 30% in a straight line.
Exactly.
And
this is just pulling something out of the drawer to come up with for
it's a headline.
headlines.
Yeah.
But we are at record highs, though. Like, and
Yes,
at some
we are.
point, people
Yeah,
are
no.
going to want to take profits.
Mm-hmm.
Years ago, it was cash on the sidelines. Remember the money markets?
I do remember, yeah.
Money markets were at the highest number they've ever been, blah, 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 blah. I mean, the market is we were talking about SPY yesterday being, $300 pre-COVID.
Yeah.
And it's now $750. Everything has gotten bigger. Like, measuring today versus 10 years ago in any facet is just a bigger number.
Right, you got to take it with a grain of salt.
Like, it just is what it is. And so, I
don't put any weight in it, Vanessa.
yeah.
Okay.
The spin I would have is all the retail traders that were buying when all the big wigs, and by big wigs, not the politicians, because they were actively trading and participating in the upside as well. I'm talking about all the smart people with the suits. When the smart people in the suits were on the sidelines while retail was buying and the market went up 40%, they're now using their profits here to speculate a little bit of extra upside.
What are you doing?
If it goes
in the
down, no
indices,
big deal.
Nikki, I know you were trading NASDAQ a lot yesterday. What's going on today?
Today, I have a feeling today's going to be a choppy day. You have such a big kind of event at the end of the day today that I don't think we're going to have a huge move in either direction. I think we'll chop around right here at 7,400, and
7,400 seems to be kind of a magnet, right? We got about 30, 40 handles lower than that last couple of days. Got 30, 40 handles above that. We're right here at 7,400.
Yeah. Got a little bit of a washout into the close yesterday, so that was good to see. You have all these chip names kind of bouncing back today, which, I think overall, if you in a vacuum, if you told me that Nvidia was, here at 220, I would be more bullish than going into earnings than if it was at 240 like it was, middle of last week. I think this has been kind of a good thing for the market overall to have this little bit of a pullback in some of these names. So, but ultimately, I think it depends on end of the day today. And I was wrong about vol expiration because Memorial Day, there's one less trading day. So the vol futures actually expired and rolled yesterday. I thought it was today, which would be like another sort of event. So you do have a little bit of an unpinning in volatility, and volatility is down a little bit today.
And even the S&Ps just caught a bid. They rallied about 10 handles. They're up near their highs, up 34.
Yeah.
The SEC is proposing sweeping IPO and reporting reforms that would ease the path for companies looking to go public. There would be a new large accelerated filer threshold for companies that have market caps of $2 billion. The current from the current $700 million float threshold, and 81% of public companies would be getting scaled disclosures under the new reforms. There would also be some changes to shelf offerings that would be available to companies without a 12-month seasoning requirement. And again, the SEC just looking to streamline the reporting and the filing and some of the other regulatory red tape that goes with the path to IPO.
Okie dokie.
I mean, yeah, I've actually thought about this a little bit because you have so much money.
Really? Have you really thought about this?
No, not about this
He's been
specifically.
thinking about it a lot in terms of SpaceX and OpenAI.
IPO
and
stuff. Like, it kind of irks me. I feel like there should be, because it's so hard.
Be a GoFundMe? God, what?
It's so hard for the little Johnny one lot to get access to these things that have asymmetric upside. Like,
oh, you're talking on the retail end that you want in. You don't care that it's easier for a company. You want it easier for you.
no, I think it should be easier for a company to go public because I think it should go public earlier. Like, I think there should be like a number, let's say 100 billion or once you get to a $250 billion value, you've got to go public in some fashion. Like, some of that has to go to an open market. Because it's all, between the accredited investor, between the, lack of accessibility. I mean, you got to know somebody like a me lord to get access to these sort of things that have any sort of upside.
And keep it up and you're going to lose your me lord status. Make
it's
a phone
just,
call.
it's an interesting situation because the numbers are getting so big and the money flowing into just this space of the companies that can just raise seemingly endless amounts of money. By the time it gets to the public, it's at, there is a lot of the upside has already been realized.
Yeah.
And so, I just think there's got to be some way to get that. Maybe you got get rid of the accredited investor threshold. Maybe you make, any raise, you have to put half of it or 10% of it to a retail public.
Have you checked on Cerebras today? Are there earnings, Cerebras?
I don't know if I doubt they have.
Are there
earnings.
options? I'm sorry.
There are
options.
Options are there, but
yeah.
I
mean, they were trading a little bit. I mean, they're $2 or $3 wide. They're relatively tight to a new IPO, $400, $300 stock. So probably something that
IPO's $300-$400. Never thought I'd see the day.
Well, I know, but that's the whole point.
No, I know. They used to be $30 stocks. I get your point. Your
it's
point
like why is the only person that can invest in SpaceX is like a Bill Ackman.
It's not even accredited investors anymore. It's billionaires.
It's just billionaires. Yeah, it's just the biggest money that's sloshing around is the first one in on all of these things, and it's just there's got to be a way.
I love that for them. Hey, here's a wild headline that you would think it's kind of like man bites dog, but the CFTC is suing Minnesota to block a Walt-signed prediction market ban that would turn users into felons overnight. Minnesota ban takes effect, if not blocked, August 1st. It would be a felony for operating a prediction market in the state of Minnesota. 5 states have now been sued by the CFTC. The CFTC says, hey, this is our money laundering scheme, and you will not shut it down. The CFTC law even extends liability to the Minnesota law would extend liability to banks, payment processors, and sports leagues. It would criminalize sports, elections, weather, war, death, and pop culture contracts. But the CFTC probably will not let this go forward.
Yeah, I mean, and everything they do, politicians are usually like, they swing way too far on everything. Like, why not just, make it, you got to track all the bets. Like, no, you have the thing about the Iran strikes, like, make it so that every bet is tracked by
transparency
like,
is what you're saying.
We have AI that can, pull up literally everything in the entire universe. We can't program something that, can flag a bad bet, like a bet that's done not in good faith.
Yeah.
Yeah, but some states don't allow gambling, so it's kind of like in that vein. We're like, hey, we don't want prediction markets, we don't want gambling, we don't want, marijuana, whatever.
Yeah,
like,
but people want it. People want to do it.
But it's the states.
Yeah, no, I know. It's the bigwigs that are 95 years old. They get to choose.
Well, in other prediction market news, this might be your path to getting into those IPOs, Nikki. Polymarket has launched private company trading, so users can now speculate on Anthropic and OpenAI. So NASDAQ Private Market is exclusive data provider. It's the first ever free private valuation data, and the contracts cover IPO timing, valuation milestones, secondary market activity, and then you can bet on all of these things. So there's 94% odds that Anthropic will be worth more than OpenAI, 88% odds that Anthropic hits $1 trillion in valuation by December.
Not the same. It's not the same as being able to buy the shares, hold them.
It's not the same.
It's not the same. It's
okay.
It's exactly what the headline says.
Something.
No, I know. It's a step in the right direction, but it's not the same as being able to, see something early, want to act on it, put your money where your mouth is, and hold it, and and invest. This is trading. This is sports betting. This is, I see the Knicks game on, and I'm going to take the Knicks money line.
But in this economy, who can afford to invest?
You really are sick. You really are sick.
I'm going to keep it moving. SpaceX has picked Goldman Sachs as its lead underwriter for its record-breaking IPO. The S1 is supposed to hit the street today. Goldman Sachs, again, will be the lead underwriter. SpaceX targeting a June 12th NASDAQ debut. They are expected to raise $75 billion in capital. Goldman also led Tesla's IPO in 2010. That was the last time Elon Musk took a company public. So SpaceX and XAI merged in February, and the combined valuation of the company sits at $1.75 trillion.
Boom shakalaka up $7. It's been on a 4-day slide after almost making new highs, somewhere close to 980, 975 and change. Got down.
Goldman?
Goldman got down to under 930. Now sitting at 930. I don't know. 937, 938. Market's a little bit wide, maybe up $8, $9, $10. Even the S&Ps are up 34. NASDAQ's up 200.
Nikki, what are your thoughts on this, if any?
Congrats to the bankers. Good job, boys. They get to bring $1.5 trillion to the market, get their nice little fee.
Good gig if you can get it.
Good gig. It's a good gig.
Yeah, this is good. Nice work if you can get it.
Yeah.
Hey, Google I.O. was yesterday, and they announced a whole bunch of stuff. Gemini Spark, they're bringing back Google Glass, intelligent smart glasses, an Ask YouTube feature, and a tidal wave of AI upgrades. Google Spark will be Gemini's 24/7 new personal AI agent. It can take actions across Gmail, Docs, and third-party apps. Also, Google Search is getting a new look. So when you go to Google, you can give it you can actually type in more like AI prompts instead of just typing in like how Bat does, who was the blonde in that White Snake video? Which you could type in more information.
She passed, my girl. Google up about $1.50. It's been doing much like the market, right? It's been kind of sideways, a little bit weaker.
It was up a handful yesterday and sold off pretty much to the lows throughout the day. So.
Almost flirted with 400, got up to 397, and got down to low as 387. So it had a big $10 range. So you are correct.
Nikki, do you want smart glasses, whether they're from Meta or from Google?
I don't know. I don't wear glasses, so obviously that's like kind of the first hurdle for me is like I just am not. I think if you wore glasses, I think it's a really interesting thing because you're used to it. It's a part of your thing. Like you could get some AI glasses. You could use them.
I didn't start wearing glasses until I was in my 50s.
Yeah. See, the horny old men like him, they're gonna be snapping like this. They're gonna be walking around.
Oh yeah, you're already seeing it on TikTok. Like, people are and they don't.
God giving me the eyes.
Yeah.
Now he gave me technology.
They gotta put like a red light if it's recording, so I can look at him and be like, "Hey, old man, turn your glasses off, you weirdo."
You weirdo.
Yeah.
Well, Meta is going to lay off 8,000 employees starting today. That's 10% of the workforce. But they are moving 7,000 employees to AI roles. Meta's 2026 AI capex is an eye-watering $145 billion. It's the third wave of job cuts in 2026. There's also 6,000 open jobs that will also just be canceled. So it's an effective 14,000 position reduction. What are your thoughts on Meta?
Usually this is a bullish thing for a stock. Meta has been going sideways now for about 2 weeks at the middle of its most recent range here. It's up about $2, $1.50, $2 this morning. I don't know. Meta might be a little bit of a lean long. What do you think, son?
I've been leaning long it. I mean, it's been stuck at 600 for the better part of the last, couple weeks here, month of May. I've been leaning long Microsoft and Meta. That's not been the place to be. Yesterday was a good day, or the last couple sessions were a good day for Microsoft. Microsoft and Meta, though, no love in general.
Yep.
When you look at everything else.
Yep.
Google had, $5 trillion, and Meta, has been stuck here at $1 trillion.
After a 6-year absence, Epic's Fortnite is back in the Apple App Store as Epic signals confidence in Apple antitrust case. The two companies went to battle and court with each other because Apple is a pimp and they want 30%. The commission rate was being challenged, and Epic they took offense to that, and so the two companies were fighting it out. But Epic has Fortnite is now back on iOS. EU's Digital Market Act forced Apple to allow alternative marketplaces first in Europe in 2024. Epic was like, people should be free to choose an app, ecosystem, and Epic skipping Apple's billing. Players can now buy V-Bucks directly from Epic at a 20% discount.
Apple's
V-Bucks.
got nothing on the mafia. Z-Bucks. V-Bucks were the
You had to take out a second mortgage for those.
They were great back in the day. You could bribe a kid with or do anything with V-Bucks.
I know. My worry is that they were fighting this so long. I was like, is Fortnite even still cool?
The thing that gets me with the V-Bucks and the Fortnite is that it doesn't give you any advantage.
No.
It literally is just...
You get a new outfit.
You get a new outfit.
It's just a cosmetic. It does nothing like, if you were
if it gave you a better shooting or some sort of
better
cloaking.
Sight. It's a better something. You get more armor.
Yeah, right.
Literally just like
you get to
the
look like
lights
Bad
on the
Bunny or
TV
something like
change for $50.
What are you guys doing in Apple?
Apple's hanging in there at the high end of its range, flirting with 300, 298 this morning. It's actually maybe down a dime or so, but like I said, it's been on the high end of its range, hanging in there.
Hey, Astera Labs stock surged 13% yesterday as Evercore raised the price target, and the CEO's AI switch presentation at JP Morgan got pretty good reception. A-Lab, what are you doing?
Not one that I have traded. I know it's kind of been caught up in the optical space. It's on the kind of second or third tier, probably third tier of the momentum AI names, not exactly a semiconductor name. I have not traded it, but not going to be trading it now.
Yeah, Ivy rank is good. It's 74. Looking at June options, they're wide at $2. So
okay.
And
well,
maybe I do look. I mean, volatility's through the.
Oh, and he's back in, folks.
Don't look. Have you looked?
no, what?
Okay. You want me? Let's say Delta. So what do you think the one standard deviation is on the upside? Stock's at 250 in the next 29 days, the June monthly.
What's the stock? 250?
Yeah, it's got
$40.
It's got 100% implied volatility.
Oh, so it's going to be
the 340s. The stock's at 250, $90 out of the money.
Oh, I was going to say $40
on the upside.
Yeah,
crazy. Right. This will be a good one to get my face ripped off in.
Don't blame me.
No. You know, I have a lineage to uphold, and this.
I mean, stock's up $150 since the April lows. Yeah. This month, it's had a $50 range already.
Yeah. Unbelievable.
Yeah.
Well, we were talking about V-Bucks earlier. Well, Roblox is announcing its first ever $3 billion share repurchase program. They're going to buy $1 billion to buy back in 12 months. So that's $3 billion total. The $1 billion, the instant to buy in the next 12 months. It's the first ever share repurchase program for Roblox. Stock is up 40% year to date in 2026.
What do you think of
that? Roblox, I mean, it's trading at 45 and change here. We've traded a handful of times.
Down near the low end of its range, right? Yeah. Hasn't caught any kind of bid. It's got a good IV rank of 42. I'm looking at June options here. They're 20-ish cents wide, but they do have $half wide strikes. Yeah. So you can get as small as you want in there. You may have did something for option trades today, where yesterday I did two. Not one, but two trades, Vanetta.
Yes.
Thank you.
Hey, I'm skipping a story here, Laura. Sad news to report, but Schlitz beer is going to be brewed one last time, May 23rd, after 177 years. Pabst cites rising costs as the beloved brand ends.
It's the beer that made Milwaukee famous.
In 1849.
Oof, a classic.
It was the world's best-selling beer in 1902.
When you're out of Schlitz, you're out of beer. That was their slogan. And they made Milwaukee famous. That was their other.
Blame Gen Z. Gen Z doesn't drink.
You see, this is the beer you like a lot of, like the Purple Haze. Or
do you now blame Gen Z? Because you blame millennials for everything. Now that Gen Z is like,
I'm moving on to Gen Z. I am. I'm moving on to.
I was just wondering if
to Gen Z. I am. Schlitz doesn't have Bapple. That's the problem.
Oh, yeah. They're so behind. They
didn't make any flavored beers.
Fruity flavor.
Right. They made good beer.
Yeah.
Beer that tastes like beer.
Yeah. That was cheap, too. They better not take hams from me, though. I like a good hams, too.
I think hams has already been discontinued. I don't know.
No, they still got hams.
Yeah,
they still got hams? Okay.
Oh, you got hams.
Yeah. Okay. You go ham on some hams?
Oh, yeah. Schlitz, good one. A fireside classic.
The Cleveland Browns are set to sell a 3% stake to Arctos Partners, valuing the franchise at $6.4 billion. Get the heck out of here. It's the fourth NFL team with a private equity minority owner. What are your thoughts?
Oof.
I mean, all these franchises have doubled, tripled, quadrupled in just a handful of years. I mean, I think it makes sense. It's an illiquid market, so these numbers are probably going to continue to go up.
Agreed.
Yeah.
And
I don't know if I'd want the Browns, though.
How do you value them? I mean, that's the problem. That's why you see them. Here's 3%. I mean,
it's a nibble. Less than a nibble.
Yep.
Yeah. All right. Hey, finally today for my viral video of the day. I did not know that this is a thing, but I might have to buy a ticket to the next Monster Jam. I might need to go see this in person. Check this out.
They have these at Allstate.
I know, you buy a ticket for the whole seat, but you only need the edge.
That's good.
I stole that. That's what they say, but check this out. It's Sparkle Smash. It's this lady, and she drives a monster truck that is decorated like a unicorn.
That's awesome. Awesome.
She's a badass.
That's great.
Awesome. Is Gravedigger still around?
I think so,
what?
yes.
Gravedigger.
Yeah, I'm sure. You kidding me? That's a brand.
Yeah.
Yeah, but I
for
want
sure.
a Sparkle Smash shirt.
It's awesome. I love it.
I love it too.
Thank you, Laura.
Yeah, I would like to go to Allstate. The one problem I see there is it's all enclosed, so you're just breathing in those fumes. You gotta be
the carbon monoxide.
Yeah, it's gotta be not that great, but probably a lot of fun.
A lot of
Let's
fun.
go team event. Work
That's
team.
true. We can do that, and then we'll parlay it into dinner at medieval times.
Boom. What a 1-2 combination. Perfect.
Awesome.
Good job out of you, Vanetta. We're going to take a quick 90-second break and come back. We got more Tasty Live, a little Tasty Extra look back at yesterday. Got some confirm and send, got an option jive, opening bell, a lot of stuff to do in the next hour, 45 minutes. We're back in 90 seconds with Tasty Live.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
I've got some huge news for traders everywhere. On June 4th, the pattern day trader rule will be replaced by new intraday margin rules. Tasty Trade has been advocating for an updated PDT rule for years, and we're ready to go on day one. You'll have more flexibility to manage risk when and how you want. Join Tasty Trade today.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Think you know where ball's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform, so I love that.
When you trade options at Tasty Trade, you see your probability of profit and loss right where you need it. Earn up to $3,000 in commission rebates.
Nicky, we are back, son. You know what that means. Time for a little bit more Tasty Live. This Tasty Extra with a little bit of a look back at yesterday. Go.
Yeah.
Non-volatility day again yesterday.
It's really unbelievable.
Right.
I mean, what did we close down? 60? 55, something like that.
Yeah, 58, something. Yeah, right there. Yeah.
And oil at highs.
The
market looked crap.
Flirting with 105. It's still, I mean, it's down this morning, down about $2.50. But it's 101.5. You would think there'd be more volatility in the market sitting right here at $20, $20.25. Just going sideways, not doing much of anything. But go ahead.
Absolutely.
Let's take a look at
volatility. Mm-hmm. Cool. All right. So yesterday had a little bit of an underwater close into, we closed at the lows, which, was below 7,400 here on the E-minis. And, has been a stretch of some weakness here the last 3
Yeah, Sunday night's low was like 73.75, and we got down to around 73.50-ish or so on the E-mini S&Ps. That's been pretty much the whole week's range. And on the upside, it's been around 74. 30 or 40, something like that. I didn't look exactly. But you have about a 50-point range up or down above and below 74, and we're right there, 74.05.
Mm-hmm. Russell, the weakest of the group here. You had a huge move in the bonds. That was kind of moving a lot of the Russell and NASDAQ.
And good volatility in the bonds, too. Sorry to interrupt there. There's a product that's gotten quite itself a little bit of a bid in volatility.
For sure. I haven't looked the MOVE index, which isn't in the platform, but it's something that you can look at. It's down a little bit. The MOVE index is like bond volatility. So it's like OVX or like a VIX for bonds. It is near the higher end of where it's been trading here. It was a little bit higher in April. We had, some of the uncertainty around rates upticking a little bit here. Getting over to the Mag 7. So when we look at the Mag 7 stocks, the only one up was Apple, which has just been, kind of pinned up here at all-time highs, trading $1 lower this morning, but it's been right here at 300. Nvidia was off the highs a little bit yesterday, and I've been saying, in my own opinion, it feels like the move lower in Nvidia is actually a good thing into earnings. You put a little bit of fear in the market here, and by fear I mean minimal amount, a little skosh of fear. Meta.
We didn't go up.
Yeah.
Right? We really didn't go down.
I would be worried if Nvidia was at 250, 240, 250. Then I feel like it's a buy the rumor, sell the news event. At 220, I feel like you can make the case for a $10
move. This morning, up around $3. Yeah.
I feel like you can make the case for a $10 move in either direction, which is good. They
expect the moves right
there.
Make
it tradable. Mm-hmm. Meta and Microsoft been rough. Tesla's been rough. Amazon and Google were the biggest movers to the downside. Amazon was down like $8 or $9 at one point. I don't know if it was news driven or just the stock having a really nice rally and just kind of taking a little bit off the top. Google, same way. You had the Google conference yesterday. Stock was up a handful into the event, sold off after the event. So I don't take a ton out of them. Out of either of those moves, just given that these stocks have had an incredible run. Sometimes
I don't take much from any of these moves that these stocks have had, right? It's really more just kind of cyclical, two-sided action.
Yeah.
These past 48 hours have been a little bit more red than usual. What are you going to do about it?
Yeah. I actually like the call of cyclical action. I think like seeing some downside in SMH, although it's not like huge, and just in general, all the things that have gone pretty much parabolic, it's good. It feels healthy to be down 10% on those stocks.
Yeah.
You can't go up 3 to 5% every single day forever.
Usually when you mention a stock is down 10%, it's going to be, flirting with its lows, on its lows, making new lows. These are down 10%. VRT, I mentioned yesterday on my option trades today, down 17%, but off of its highs.
Yeah.
Which is still 80% off of its lows, and I'm making that number up. I don't know exactly what the number was. 17% down is accurate. 80% off the lows, I don't know. But I'm just saying, they're off of their highs by a good percentage. What do you want to do about it? That's...
Well, it makes it more tradable. You get an opportunity where if you miss the boat, you
can participate now.
It makes it easier to sell some puts or buy a call diagonal spread or do whatever you want. It's harder to do that when everything goes up 5% every day because it gets FOMO-y and you're
buy high, sell higher, buy high again, sell higher the next day is a rough way to do it.
Yeah.
I agree.
So when we look at the sectors themselves, it was a mixed bag here, as it has been. Energy was strong. XOM, I took off a couple positions there. USO has been unbelievable. That trade has been perfect. Oil volatility itself has come in pretty nicely here. It's sitting at 7.
Another one without vol, right? It hasn't increased. It's sitting at 72 or 72 and change. Anyway.
I think oil sits at 90 to 100 for the foreseeable future. I think that's the spot. I think volatility is telling you that. You had a move in utilities and healthcare there. On the downside, metals and mining. Metals were very weak yesterday. A lot of I took off some risk in like GDX, GDXJ. You had financials down. I got long a little bit of JP Morgan yesterday. Semiconductors were pretty mixed. So I don't know. The market's, it's a trader's market. So when things are down, you buy them. When things are up, you sell into them, and it's been a good move.
And a good two-sided action, agree.
Yeah. These will probably flip today.
Right.
You know what I mean?
It's been that kind of way.
It's been that way for a month now. Semiconductors down one day, they're back up the next day. Energy is down one day, it's back up the next day. So
just sit and wait, like the weather will change.
I'm no macro genius, but I can spot the pattern that's happened.
Even you can do that, then anybody can do it.
Yeah, if somebody as dumb as this guy can do it, anybody can do it.
You said it, I didn't.
When we look at the biggest movers to the upside here, so on the upside, you had some of the momentum stuff. I mean, SanDisk and Micron, they were probably down like 5-ish% to up 5% by the end of the day. But they had
SanDisk trade as low as I'll round down. Let's say 12.75, and on the high side,
14,
almost 14. Yeah.
I mean, you're having.
That's almost a 7% move top to bottom.
Yeah. And we've been trading these, Micron specifically. We've been doing these like wide butterflies on the upside. It's very hard to trade these unless you are willing to put a significant amount of capital into like buy calls, buy puts. It really isn't a short. It really isn't a short premium trade because of how much volatility there is here.
Directional play, but you can do it having a short premium component to it, like you've mentioned.
Butterflies, the ratios, something like diagonal spread, something like that has been kind of the trade here. Eli Lilly, some of the healthcare names were stronger yesterday. Eli Lilly, I think, is back 1,000 and change here. Yeah, 1,021 now. Again, a lot of it is kind of the momentum names here: SanDisk, Ciena. You got some of the other ones.
Not the usual suspects, but they are a rotation of stocks that seem to. When you have $1,000 stocks or $1,400 stocks like SanDisk, you're going to get some movement in them, some good magnitude of the move there.
Yeah.
Options though are horrible to trade. You can't. Very hard to do anything in there.
Yeah.
Vertical spreads trade pretty cheap. Yeah. Hard to trade in there. But
when we look at the downside here. So you had some of the tech names, Akamai, in there. For solar, VRT is one that you've been mentioning. Mm-hmm. Some of the semiconductor names have kind of taken it on the chin a little bit over the last couple sessions here. That has really been the story here. Has kind of been momentum in both directions. Seen a little bit of it here as well. When we look at the heat map,
this is going to be interesting.
It's been this flip. You have one day it's tech leading the way, one day it's energy leading the way. That's kind of what you're seeing here.
Right now it's setting up to flip this, as you talked about just a moment ago on a few slides, as you've got energy kind of down with oil down, $2.50. You also have, Nvidia up big, Microsoft up, Google up, Meta up, all the opposite. I don't know what Tesla's doing. I haven't looked there for a minute. Let's take a look at Tesla real quick. Tesla up $4. So you're gonna get a flip flop. Good job
out of you.
All right, well, let's take a quick 90-second break. Even the S&P is about 12 handles off of their highs, up 24. We'll take a quick 90-second break and come back. We got more Tasty Live after this with viewer emails. We'll be back in 90 seconds. Confirm and send next.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
I've got some huge news for traders everywhere. On June 4th, the pattern day trader rule will be replaced by new intraday margin rules. Tasty Trade has been advocating for an updated PDT rule for years, and we're ready to go on day one. You'll have more flexibility to manage risk when and how you want. Join Tasty Trade today.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform. Being able to see graphically where your profit and loss zones are. Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Nicky, we are back, son. You know what that means. Time for a little bit more Tasty Live with Confirm and Send this Wednesday. Easy for me to say, May 20th. Even the S&P is up 24. NASDAQ up 184. But as you can see, they're both off of their highs. 16 handles on the S&Ps, about 60 handles or so on the NASDAQ. NASDAQ and the Russell are your strongest of the group ever so slightly on a percentage basis. Russell up 15, Dow up 157, Dow and the S&P's up around a third of a percentage point so far this morning. Volatility in by 16 cents, also a small move. We've had small moves to the upside in volatility, but very small moves to the downside. Volatility has been absolutely dead, which is scary at times for me. Bonds are up 5 ticks, but they're off of their highs of 110.07, well off of their lows of 109.16, up 5 ticks. Bitcoin 77.6. Really on its lows, up $700 or $800 right now, but closer to its lows and its highs. You can see here, Bitcoin been sliding the last 4 or 5 days of trading, trying to catch itself a little bit of a bid here. The opposite, and Ethereum is up 21, I should say that too. The opposite of that action has been oil. Oil's been nothing but straight up as of late, as you can see here, up near the high end of its range. It is down 2% today, which is $2.30, but still in the stratosphere, just under 102. Had a big range already of about $4. That's $4,000 on these futures, down to around 101, up to around 104.5. Gold down 11, smallish move, $11. Silver up 37 cents, decent sized move to the upside. Net gas, after going up every day for the last week or more, is down small relative. 2% move, 6 cents is a big move. But yeah, as you can see on the right-hand side here, it's been going parabolic to the upside. I have to mention Nvidia. That's the earnings du jour. I mean, do you The Nvidia $13 expected move. Yeah, just about $13 for the next 2 days. Nvidia, good IV rank of 57. Good markets in there. It's always one of the leaders most actively traded at Tasty Trade, the brokerage firm. I hope you're all supporting.
Yes.
Nvidia, this has got to be your whole AI game here, right? I mean,
the numbers are going to be astronomical.
I know, but I think it's going to be, I hate to say this, like, the guidance that they put out there. Everybody's put so much pressure on Nvidia as the AI kind
They're going
of.
to raise everything.
It's the solar plex of the AI world.
Yes.
No, really. Like, it could be a gut punch to AI, or it could be a major boom.
I am very flat here, delta-wise.
In Nvidia,
I'm short a lot of front premium.
In Nvidia?
Yeah, like I have,
Nvidia front premium, what he's talking about, 2 days, 87%, 6 days, 61%. You look, even if you go to June to July, you've got 6 vol points of vol differential, something to take advantage of on a strategic play, selling front month, buying back month, with a directional bias, right?
Yes.
And I know you're flat, but you're selling out of the money premium in the front month, buying back month premium. Makes you delta neutral, flat-ish, couple of deltas one way or the other, but that'll move after.
I think an inside move, which is what I'm playing for, which is what I'm positioned for, is the best outcome here. Not because I will make lots of money on it, which is good. But I think to get a little bit of the volatility to come out of the space, I think it's going to come out across the board after Nvidia earnings, if it is kind of a sideways move. If it's a kind of a nothing move, everybody's going to breathe a sigh of relief. The call skew, hopefully, will come in. The volatility in the space will come in. And I think that would be, would lead to market volatility coming in and would be a good thing for, a continuation of this march higher. I think if you get a crazy move to either direction, then things get whippy because these stocks have become very momentum trading. Like they are the movers here, and the realized volatility has been just through the roof. So I think that has to come in.
Confirm and send Wednesday, May 20th. Go.
Cool.
First question, please. I'll do this in English. How can you tell if you are overtrading?
It's a good question. I think it's more of just like kind of feel. I think there's been times where the market has done nothing and you're just like kind of putting stuff on because you're bored or the numbers aren't moving enough to make you feel something, so to speak. I think when you just like, when you get outside, when you're doing trades and stuff that you'd never trade in, that you're, doing earnings trades for the engagement, for the volatility that, you never would have traded. I think that's kind of where I get to my over trading point.
I think you can look at buying power too. If your buying power is getting too heavy relative to your account for the implied volatility that we have now, maybe you're using 50% of your, and again, everybody's account is different. I'm going with more of a over $50,000 account. You're using more than 50% of your buying power in this relatively low volatility. You're probably using too much. Should be closer to 25 to 35%. So I think that's a way to look at it. But you are right. When you get into the futures and you're just, clicking away, if you usually trade futures 2-3 times a day and all of a sudden you're trading at 6-10 times a day and there's really nothing going on in the market, right? It's not like big movement. And, you're having 1% moves back and forth, it warrants it. If you're getting a small relative move, it's not. Next question, please.
Are market makers required to take trades that come in the event of a severe fall? Do they still have to provide liquidity, or can they just stop taking orders?
Now, you can't just stop taking orders. You can widen your parameters, meaning, if you're making markets that are 3 cent wide and things are going nuts, you can make them 10, 20, 50 cents wide, dollar wide. Now, they're in the business. It's almost like a convenience store. They're in the business to sell milk. If they're not competitive with the market, they don't sell any milk. They don't make any money. What's the sense of being there? So yes, the markets will eventually tighten up, but they do get a little bit wider when markets are in severe volatility times, but no, they are required. It's your fiduciary responsibility.
Yes.
Next question, please. I mean, a fish got to swim. I mean, I don't know.
Yeah.
Is there a defined point for interest rates where it makes more sense to just own bonds versus buy stocks?
I mean, the question becomes, at what point are risk-free rates more?
Risk-free rates, let's say 4%. Let's just, if you're looking at it,
would you rather have 4%? Yeah, would you rather have 4% or guaranteed, no risk, essentially?
Well,
you have risk of changes in rates, or
but you'll get that 4% at the end of the month. It pays a dividend. In my example,
assuming the U.S. government isn't going underwater.
Then we need a bunker. But
then you need a bunker.
You have other problems.
Yes. So the question becomes: is that rate, more attractive than
investing in the market
in whatever your alternative is?
And it's not 4% versus 5%. If I make 5% in the year in the market, was probably taking 4% guaranteed was probably a better play, right?
Yeah.
If you're making 8%, 10%, 30%, then it's probably.
I think it's for me. There's no if rates were 10%, it wouldn't matter to me. Like, I would rather the upside of markets. Like, I'm not. It's a different situation. Maybe for you, it's better to have the 10%.
Yeah.
It's a different. It's so hard to kind of blanket answer this.
Yes.
There's a ton of factors here, but that's the basis of the question is whether risk-free rates are attractive enough to not participate in financial markets.
Good. Next one, please.
Do you use the same strategy for all of your earnings trades? What do you do?
No, but you go, and this should be a question better for you because you trade more earnings than I do. You go to what makes you comfortable. And I usually go to what makes me comfortable in my trading. Usually, I get into a pattern of strategies. If I'm looking at something like, if I want more defined risk, I might be doing something like, broker wing butterfly. If I'm taking on more risk, I might do something, a 1/2 put ratio spread. If the stock was going lower and I think it's going to go higher, kind of thing. So you find your comfort zone with the strategy. I think that's the most important thing. Are you?
No, it sounds good.
Let's take a quick 90-second break and come back. We got more Tasty Live after this. We've got an option jive next. Back in 90 seconds. Even the S&P's steady, up 24.
70.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
I love to take risks. I love the instant pain, the instant gain of trading. I would describe my trading style as a calculated risk taker. I like to play towards volatility, which is something that you can quantify high and low points of. Well, my favorite strategy currently is the diagonal spread. I like the idea of having defined risk, but while also having a little bit of positive decay that works in your favor if you're not directionally correct. But the best part about it is the positive gamma that you get from it. I really like that the position can grow and get bigger as you're more correct on that position. So I think that the variable of trading on a day-to-day, hour-to-hour, minute-to-minute basis is really powerful and really fun to have access to.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the board. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
It's option jive. Diggy, we are back. Option jive, go.
Let's do it. How Vega decay gives sellers an edge. Let's do this. So, obviously, for premium sellers, the goal, sell high on entry. You collect premium when volatility is elevated, and then buying back that premium when volatility contracts. One of the things that we can play for, time and volatility are the two things that we can quantify value from, right? So volatility is mean reverting. So when volatility gets high, it tends to only stay at a high point for a period of time. We don't know the exact period of time, but it generally mean reverts. And so it goes it squiggles up and down and up and down. And so you can play for that. It's mean reverting. Time, passage of time, we know, days are going to pass.
It's absolute.
So it is absolute. So those are the two things that we trade for. Here, we're talking about volatility, selling high, buying low. That is the basis of short premium in any facet. And we're going to talk about a couple different ways that you're exposed to short premium here. So the two things that you're playing for here, volatility contraction. So implied volatility tends to overstate the realized moves, the realized volatility. So that's one part of the equation. Even when volatility is in the middle of its range or even low, it still tends to come in after the fact with a realized volatility that is lesser. When volatility is high, you just have more wiggle room for that realized volatility to be lesser than what is implied. As time passes, without a large move, IV often contracts, so reducing the price of options. The higher vol today with 30 days to go, if nothing happens today, the volatility is going to contract in some fashion going into tomorrow, because every day that passes, that the volatility of that volatility also decays. So they go hand in hand. You also have Vega decay. So even if IV stays flat, the option sensitivity to volatility, which is your Vega, shrinks as expiration approaches. What that means is that 30-day option, 20 points out of the money is going to have a lot more exposure to volatility. And volatility in this phrasing is just movements in the stock, right? A $20 out of the money option with 1 day to go till expiration doesn't change with a $5 move in the stock. 30 days out in time, if the stock moves $5, that option is going to change. And so that is the volatility and time go hand in hand in that regard. So just what is Vega? Vega is a measure of how much an option's price can change with every 1% change in implied volatility, the number that you see on the trade page, not IVR. So IVR is a measure of whether that volatility is high or low relative to itself over the last year. When you look at actual Vega, and when you're talking about Vega, it's the actual implied volatility of the stock. Micron has a 75 IV rank. Its actual implied volatility is 93%. So they're two different metrics here. Higher Vega is going to be more sensitive to IV changes. Lower Vega is going to be less sensitive to IV changes. And you can add Vega as a column in the platform there. At the money options.
You can, which a lot of people don't realize because we don't talk too much about Vega, but you could put it in there if you really want to see what it is.
Yes, for sure. And you can have it as a column in your portfolio. It's good. It's good to It's more so to understand what Vega is rather than looking at the actual number. The number doesn't tell you a whole lot, and that's goes with just the way volatility changes and Vega exposure changes as you get closer to expiration. You get further out in time, options are going to have more Vega exposure. When you look at with at the money options, those are going to be your highest vol exposure. Out of the money are going to be lesser volatility exposure. Higher, more time is going to have more exposure to Vega, to changes in implied volatility versus lesser time. So Vega decay as expiration approaches, it's a lot like your theta decay curve, but with a little bit lesser of kind of a tail off. It's a little bit more linear as you get closer to expiration. This is just going from 45 to 1 day. And this is for the same strike. You can't, this won't be the same graph if you change delta, because delta is going to move the strikes closer. But we're just talking about like you started at 20 delta strangle. This is what your Vega exposure is going to look like as you get closer to expiration, assuming the stock stays where it is.
Yeah, the big assumption because it never does.
Yes. Where it stays in a range.
Yeah.
If realized volatility is less than implied, that's what this would look like. So the question becomes, why do we start at 45 days? Why is that our entry point? So maximum, you get the maximum Vega exposure, at least relative to time. So there is a, as you get further out in time, when you talk about like leap options, those options are a lot less sensitive to Vega. It's more delta exposure just because those options have so much time. The change of 1 day, of the passage of 1 day, doesn't really affect a 300-day option. It is a lot more of an effect on a 40-day option or a 20-day option. Though this 20 to 40-day range is kind of the spot. So any drop in IV produces the largest dollar impact on the premium decay. Volatility contracts on a stock and you have a 300-day option. It's not going to move all that much relative from a percentage standpoint relative to the 45-day options. Theta and Vega are kind of in their sweet spot around this 45 days. At 45 days, you get a meaningful theta decay and a high volatility exposure. It's kind of just the sweet spot for where volatility is priced at its peak, time value is priced near its peak. That steepness of the value of time decay starts to level off as you get to 45 days, whereas when you go from 45 to 0, it gets very, very steep. So when you talk about your exposure to volatility from that 45-day point in time, the first 20 days or so is where you get the most volatility exposure. Once you get to the 21 days mark, your volatility exposure is much lesser. You're more exposed to delta, theta to some regard here. So most of Vega decay, most of that value of volatility decays in the first 20 or some odd days. It lines up with everything we've talked about for many, many years now. This means that vol selling edge is front loaded. So like looking at there isn't, and by edge, we mean just the exposure to volatility and the overstatement of volatility. It can certainly be understated. I mean, you look at a micron, volatility has been understated. But this 45-day window is really where that spot is. By the 21-day mark, much of the sensitivity to IV is already gone, and the options become insensitive to vol changes. It doesn't. The options are more reflective of where the stock is trading, your delta and gamma exposure. And this is just why we manage trades around that 21 days. Right. Really all just kind of lines up there. So when we talk about exploiting volatility, and a lot of things that we do, or that I like to do, like calendar spreads, diagonal spreads, really exploit volatility because they give you the short-term decay of options. You don't really have you're exposed to volatility because you're selling like 30 or 20 to 30-day implied volatility, buying back month implied volatility. But calendar spreads specifically, you're long volatility. So you want the price movement, even though you're selling some sort of premium, you have that long volatility component. When you start to do diagonal spreads, you're long volatility in the sense that you want the stock to move to some point.
In the direction that you put it on, right?
Yes. So when we talk about a progression through the expiration,
which is different than, say, a strangle where you don't want it to move at all because you really are selling Vega on both sides.
Yes, exactly.
Or have Vega risk on both sides.
Yes. So when you talk about the Vega decay within a single trade, starting at 45 days entry point, you're going to have the max volatility exposure. The volatility contraction is going to be a big part of where your P&L goes from there in the short term. When you get into the 21-day mark, your Vega is roughly halved. most of the vol has been captured. We usually say like, if the trade was going to work, it would have worked
already
at the 21-day mark. That's because, you're selling the high volatility. You're getting the theta decay of 20 some odd days, 20 to 25 days. If you're at a scratch at 21 days, you were kind of just wrong on the trade. The stock probably moved too much in one direction. Either, if you're a strangle, it went to one of your strikes. If you're just selling calls or just selling puts, you're probably being tested at 21 days and you're a scratch or a small loser. You've been wrong on the trade at 21 days if you're a scratch or a loser. It's just not been the right trade. And that's okay. When you get to the 7-day mark where you're getting like near expiration, you don't have the volatility exposure. You don't really have the theta exposure. It depends on where your position is, but it's more about the gamma risk and your delta exposure and ultimately where the stock is in the next 7 days. It's binary, whereas the first 40 days are you're trading something. Couple takeaways. Premium sellers benefit from two forces. You get the volatility contraction and which is really the Vega decay over time. Vega is its highest at 45 days. This is when vol changes have the most impact on your P&L. By 21 days, much of that Vega edge, so to speak, has been captured, whether you're profitable or not. If you're not profitable, the volatility that's come in has made it so you've lost less money.
Right.
Like that volatility
didn't work.
It didn't work, but instead of $500 loss, you're losing $200.
Sure.
Whatever the number.
And now you got to decide whether you want all the delta or all the positive Vega that you have left on the trade.
Yes. So calendar spreads, diagonal spreads, they exploit the Vega differential between expirations. They benefit, I don't like the word vol expansion, but volatility moves, realized volatility. You want to see volatility in the stock price. But yes, vol expansion. The first half of the expiration cycle is consistently more reliable for premium selling strategies. Once you get past the 21-day mark, the vol selling is a little bit less predictable, for lack of better words.
Very good, sir. Let's take a quick 90-second break. We've only got about a minute or two extra. We'll be back in 90 seconds. Tasty Live, opening bell next. The moment you've been waiting for.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Nicky, we are back, son. You know what that means. Time for a little bit more Tasty Live. That's right. With the opening bell is imminent. Nvidia up around $3 now, maybe 2.5. It was up around 4 a moment ago. Even the S&Ps, which were up over 7,400 or 7,496, they're up 18. NASDAQ still your strongest of the group with the Russell being a little bit stronger than the NASDAQ on a percentage basis. Oil down $2 and change, hasn't moved, but it is over 102 for the first time this morning that I've seen. Gold down 17, silver up 12, gold-silver ratio not moving too much, wrapped around that 60-ish number. Bitcoin hanging out at 77.3. We got about 20 seconds before the market opens here, so I'll let the market do its thing.
Just got a big time update. We're going to have Marty Supreme on for live from the trade desk.
Beautiful. No
Big
cue,
day.
Marty Supreme. I like it.
Yeah, nothing gets the juices flowing like a little Marty in the morning.
Said very few people in Marty's life. But yes, I felt that way for a long time. I did. Whoa, there's a quick one. What are you doing?
I got a little natty gas. You mentioned it was down about 2%. I got a little long delta there. I scalped out of some of it yesterday. But I was in an M contract, which is
sure. Natty gas down around 1 3/4% off of its highs, though. It's had quite a nice little move to the upside.
Yes.
Good job out of you. Scoopy.
Little scoopy.
Let's see what's moving this market on the Nvidia watch. We'll do that first if you want to.
Sure.
Nvidia up $1 right now. On the downside, well, these are all the earnings plays. I should have put them up.
I don't think you're getting much movement.
No, Intuit's down around $15 for earnings. Nvidia's up around $1 right now, giving it up a little bit to the upside. I'm going to change this list from all our earnings, come down to high option volume list. And when we look at the downside target, going back to earnings, down $7 and change. Costco down $9 and change. It has earnings on the 28th. Adobe down around $6. USO, IBM. I haven't mentioned IBM in a long time. Microsoft down $3. IBM down a little more than $3. Home Depot down about $3. Microsoft down about 2 3/4. What's to the upside here? Here you go, your big guys. SanDisk up 43. MU up 27. AMD up 14. AMAT up 13. SMH up 10. BE up 9. Intel, they love it again, up $7.
Horse. Gotta have it.
It is a horse. Volatility. Talk about volatility staying bid. Volatility in Intel has been staying bid for sure. IV rank at 82.
Yeah, I wish I waited to sell out those calls.
Push that
again.
trade through for me on the neck.
Yes. Sorry about that.
That's okay. Thank you very much for playing. Do appreciate it.
Yeah, a lot of the stuff that I scalped out of yesterday, like the Intel calls, we talked about it a little bit, like these upside crab trades, diagonal trades that in these stocks where I have a lot of short delta, the hedges worked. We looked at BE, sold some calls for $15. They were marked at $5. Yeah. Same thing in AMD. And those are back to marked at $15. Not so much. The BE option is at $9 now. So it saved you $4 or $5 just scalping out of those trades. And the point I was making with it yesterday was that if we were to open up 20 points lower today, that I would have missed out on $1 more on those calls versus you wake up and the stock's up $10 today and you miss out on $4. So there's like an asymmetry of kind of risk reward moving forward with something that has gotten to such a low price. It kind of goes to what we were talking about with Vega too, where you get to a point where there's not the risk reward skews against you at a certain point. And that's all I was doing there. I wish BE would have opened down another $10 today and I missed out on $1 on those calls.
Of course.
Or
it wasn't the heavier side of the position.
Like the Intel calls, I closed out of them yesterday at, I'll give you the exact what I did. So I closed out of the 145s with 29 days and the 135s in June for, let's just call it $2, 187 and 217. I sold the 140s out for $345. The 135s are now at $6. So, you close those and today the stock is up $8. You miss out on the $3.
Sure.
Those or $4 on each of those. So it's
market's missing out in the Dow. The Dow is turned red here, down $90. That's about $100 off of its lows from last night, significantly off of its highs. Even the S&Ps are up 15, about as low as I've seen them today so far. They were red last night. You can see them down at 356, about 30-ish handles or more lower than where they are right now. NASDAQ up 200 and change. NASDAQ still the strongest of the group. Russell, which was the strongest of the group, now in line with the E-mini S&Ps. I don't know what else to look at here. I can't hold a rally, can't hold a sell-off. Volatility down 22 cents, pretty much giving back the small yesterday move to the upside in volatility.
I feel like
it is a stock picker's market, though. It does seem like we do have a rotation of stocks, you know what I mean, that have come back and forth, right? I mean, it's one day up, one day down. You look at that heat map, and I know it's pretty early in the day, but you look at it and it's kind of flip-flopped around, right?
Yeah.
What was down yesterday is now up today, kind of thing. You look at yesterday compared to today, and it looks exactly the opposite, ever so slightly. What do you think, son? Bonds up 8.
I'm trying to.
We're gonna sit here. Is this it?
I think we're sitting here all day. I think you want to do a 0 day?
Sure. Why not? Do both sides like we haven't done lately.
Yeah.
Just do the 20-ish delta on both sides.
We've been doing both sides. We just did that. We did the Jade Lizard, which at the end of the day
worked out.
I mean, I took it off too early, but
it was a hard hold.
Yeah.
Yeah, it was a hard hold. I mean, you can go 15 wide on each side if you want to. What do you do? You could do something like the 0520, 740520, and then on the put side 733520.
Yeah,
that would be pretty much delta-ish neutral. You want to lean a little bit one way or the other, you can by moving the strike 1. It's up to you.
495.
Beautiful.
All
Beautiful.
Right, we're in.
5 bid. Just kidding.
I know. I had it in at 5, and then I moved it a nickel. I was like, I'm gonna get filled. That's fine. Okay. What else do we have going on?
Push that through. That would be good. Yeah, kind of a unchanged, boring day. Expect a little bit more to the upside, at least on the opening. Yeah. Haven't gotten that so far today.
Yeah.
Double top, as my friend Aaron told me from last.
Double top.
74.16 from last night. We made it this morning before the pre-market open. Even the S&Ps are unchanged. Let's look at what Nvidia's doing. Nvidia was up around $4 pre-market, completely unchanged now. Why are we mentioning Nvidia so much? It has earnings after the market closes today, up near the high end of its range.
I do something. You mentioned IBM. Those markets stink.
They do. They do.
I'm gonna get myself in some trouble here.
Go ahead.
I don't know where I'll get. I'm just gonna get some long delta here. So this is when you know you're overtrading.
Okay, somebody asked how do you know you're overtrading. Now
how do you know.
Now you know, right?
Yeah.
What did you just do there? You did it. Oh, an IBM.
IBM. I did diagonal spread.
Yeah, markets in IBM are really horrible.
Yeah, they're not good.
You just did that 20-ish delta that we normally put on for any type of directional bias when you're doing a diagonal spread. That's pretty much the modus operandi.
Yeah. We do have what's your assumption, so we'll get some.
We do have what's your assumption.
I'm just trying to go through all my positions and see if anything's like I can take anything off the table here.
Dow was down around 100, it's down around 60. Even the S&Ps haven't really moved. Russell caught a small bid again. It's up the same as the NASDAQ. NASDAQ was the leader. The clubhouse actually come down a little bit. Much to do about nothing right now.
What do you think for today? You think we just kind of chop?
I do think we sit 7,400. We close.
Like today's going to be one of those grinds.
Yeah. Maybe volatility stays bid for the day.
Yeah.
I don't think it gets up to 2075 where we were earlier today, but it could, or last night, but it could.
No, I was looking at
lows are probably in, which is only 10 cents lower than where we are right now on volatility.
I was looking at gold.
I think everybody. I hate to say it, I think everybody's waiting for Nvidia.
Yeah, I think that's.
I really do.
I mean, I think that's the correct assessment here.
I hate that because it's a very public thing to say.
Yeah. It's the truth, though.
Yeah.
The truth will set you free.
Yeah, yes, it will. Yes, it will.
I don't know. I have some short delta and CRM. Like, I feel like.
See, here's what happens when you're looking for things to do. I have short delta and CRM.
Like I'm looking at positions that that are profitable that I kind of want to hold.
Yeah, CRM has earnings May 27th.
Yeah,
down $4.
Yeah.
All right.
Stinks.
You ready to take a quick 90-second break?
Today's going to be a grind.
Today's going to be, but it could. Hey, listen.
Did you put something in for our SPX?
I did. I put it in around 415.
Okay.
I did it 495, 80 cents, 20. I don't know.
Sure.
Whatever you want to.
That sounds good.
Let's take a quick 90-second break and come back. We got more Tasty Live coming up. Much more Tasty Live coming up with What's Your Assumption? That's you. We go to you.
I lay out the risks I took off in AMD. I bought back the call spread. It was a crab trade.
Wow, AMD up $15.
I bought it back for $3. It said $6.
Right. Nice.
So I put it back out.
Ivy Rank is hanging in there, up 87. Volatility is expanding. You would expect it to expand on the upside on these stocks. I mean, the velocity to the move, even though the stock's gone from 200 to 400 and change, is still to the upside. Skew is to the upside. Probably.
Yeah, 665. So that was another one of the ones.
So you just took it off for $3,
put it back on for $665. So it's the same trade, but I scalped $3 out of it. It doesn't.
That's what you. I'm probably hoping to make on the overall trade.
Yes, but the ideal situation was the stock being down $18, and I'm missing out on the 50 cents.
That's right.
You look back on it, it's like, oh, I should have waited. I could have closed it at $2.50. Now I'm selling it for $6. I bought it for $3, but the overall trade, no bueno.
I know, but it's a great scalp. It's a good cost reduction, or taking back some of the losses that you have in there. I mean, it's just trading. Your account doesn't care where you make the money. It just cares that it stair steps higher. We'll take a quick 90-second break and come back. Even the S&P's up 13. The bad boy on the red side is the Dow down 70. Good boy to the upside is the NASDAQ and the Russell. NASDAQ up 175, Russell up 16. They're both up the same on a percentage basis. We'll take a quick 90-second break and come back. We got much more Tasty Live with your What's Your Assumption? You came up with trades. We're going to do them back in 90 seconds with Tasty Live.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
We wanted to call in because recently some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty-gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you.
This was not a paid, you're not getting paid for this advertisement.
I've got some huge news for traders everywhere. On June 4th, the pattern day trader rule will be replaced by new intraday margin rules. Tasty Trade has been advocating for an updated PDT rule for years, and we're ready to go on day one. You'll have more flexibility to manage risk when and how you want. Join Tasty Trade today.
Looking for market insights you can count on? Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, Tasty Live, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades Today.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Nicky, we are back, son. You know what that means. Time for a little bit more Tasty Live as the evening S&Ps are up 24, hanging out at 74.02. Go. What's your assumption? I think we're right there.
E-mini is at 7,400.
7,400.
I did a call ratio spread in ARM.
You did
probably going to get my face ripped off.
You did a call ratio spread in ARM. You bought the 275, sold the 300.
$2.25. I got it instantly filled too.
Oof. Markets are wide in there, as you can see the bid ask here. I don't even have to open up the option chain here, but you can see it's wide. But I like the spread well over a standard deviation. Playing a little bit of reversion to the mean here on price for a short period of time. ARM making all-time highs, volatility going up and expanding. A matter of fact, over the last 5 days, it's up another 2%.
Mm-hmm.
I like the trade. Yeah. I like the trade. You're going to get your face ripped off first, but I like
For sure. For sure.
I'm just kidding. I don't know.
For sure. I know. It's funny. I was thinking of, I was looking at A-Lab as well.
Have you looked
at the 300, 350 for a 95-cent debit?
A-Lab.
Remember?
Yeah.
I was mentioning
yeah.
it. The stock's up like 5 billion %.
Mm-hmm. Yeah,
Do you want to get your face ripped off? That is the big question.
300. Here's another one where markets are just, these are small trades. You got to do them small. But yes, there is a lot of upside skew in here. I mean, you could do the 70, 90 for you're doing the 300, 350. You're going.
You're talking all the way out there.
Well, I mean, if you're going to go out there,
True.
I know you're going to have to go a little bit tighter.
I already got one on that's going to rip my face off.
You can do the 340, 370. Mid price is 2 something.
Yeah.
This call skew is
unbelievable.
But the markets are wide in there. You got to be careful. Liquidity is king, son. How about CBRS? Let's just take a look at it while we have a quick second here. Up $25,
Oh my God.
Let's take a look at the markets here, or the option markets here in June. Volume already. Well, this is open interest, not that much volume, I guess, if that's open interest. But markets here are about $1.50 wide. Stock bid ask looks to be about $1 wide on average, so you can't expect too much more from the option side.
What does a new subscriber do here?
In this stock?
Yeah.
Probably abstain. It's hard to borrow. Let's see what the hard to borrow rate is. Look. Oh, it's small. It's nothing. It's under 1%. So I guess you could trade it if you want to.
Yeah. Oh.
Give me S&Ps up 29.
All right. I sold some calls out in Amazon. I scalped out of them yesterday. I'm long calls 265, 270, 275 in July. I sold the 285s against it, but I legged out in similar fashion in some of the other ones yesterday at like $1.
Oh, nice.
And they're at 227. So
nice.
I'm selling them out again. I'm scalping around these. I'm scalping around Delta, long Delta that I have further out in time with the shorter dated options here.
Congratulations.
Still long.
Congratulations on your wealth, my lord.
Thank you. Let's do it. Let's see what
ready.
we got.
Let's go.
Here. I need some new trades.
I do too. Go. In simpatico.
Nvidia bullish earnings.
Oh!
You have to play the upside, Andrew. And thank you, Mr. Market, for giving Nvidia a few pullback days. I'm locked and loaded. I am short premium in the weeklies. It's defined risk because I have these crab trades, diagonal spreads. I'm sitting inside move. That's what I need here. What's the expected move now?
In Nvidia, it was $13 this morning when I looked the first time. It's $12.30 right now.
Anywhere inside, I'm a happy man.
Yeah.
So that's what
I mean, we both feel it's going to be inside the expected move, which means it's probably going to be a face ripper.
Yeah, yes. So hopefully it's inside the expected move.
Yes.
I don't hate the long play if that's your prerogative.
Okay.
But I'm not adding. I'm with you, though.
Beautiful. Let's go. Good job.
SPX. See, we front ran this. Damn. I heard you guys say Monday and Tuesdays were good for 0DTE. And
Thursdays are typically the worst, right?
Thursdays have been the worst. And that is nothing scientific other than just what the data.
Past performance, right.
The past performance has had. I don't think that, well, yeah, I guess you have some big earnings and stuff on Thursdays. I think Wednesdays could set up the same way before Nvidia earnings. Iron Condor, we have that. We did the, on the downside, we have the 73.35, 73.20. On the upside, we have the 74.05, 74.20. That is currently unchanged-ish from where we put it on, right around $5. We're trying to take like 70, 80 cents out of it. I like it, Jake. I'm already in it. So not passive.
Brilliant minds think alike?
Yeah, exactly.
Yeah,
That's
there you go.
Way to put it.
Yeah.
Good way to put it.
Yeah.
So we're in. Hymns. Everybody loves the hymns.
Yeah, they do, and it's been on its butt, right? Long-term bullish here. HIMS does seem to have news that comes out that pops the stock, no pun intended. But it stair steps down, and it has been doing a stair step down from around $30, $32, let's say, down to $22. Lost about 30%, and that's not for the year. That's just since the middle of April or so. Ivy rank at 25 is good, not great. You might look to do some sort of diagonal spread here if you want to. July, June, you got about 2 vol differentials. Or you could just stay right in June. Puts look juicy, and especially in a smaller account. Too bad we weren't doing something for the Johnny.
You want to stay in June?
You certainly could.
Do like the.
I mean, if you're more inclined to like the directional bias of your trade, you stay in June. If you're looking for time value, you're going to go out to July or June diagonal spread. It's a stock that.
There you go.
Oh, beautiful.
I sold the 21 strike puts. And we'll wheel that. If it goes
and
down.
It's got no correlation to the market. It does its own thing here.
Yeah. 0.05 correlation.
Right.
So
you just sold the 21 puts, right? That's a classic 30-ish delta option, maybe 35, a little bit more aggressive.
Small. If we go down, I'll take shares and wheel into covered calls.
Oh, look at you. Look at you. You're a wheel. All of a sudden, your name's Liz and Jenny. Go.
I don't know. We don't do it all that often. It's a low-price stock. Why not?
Of course.
Got to rain on my parade all the time. Like, come on, dude. Ugh.
It's my job here. It's a living.
It's crotchety. All right, Brent, we are in, brother. Thank you very much. They were looking at a Jade Lizard over there. They were just looking long.
Qualcomm,
Jade Lizard, July bullish. Okay. We have currently, I think we did an Iron Condor last week for what's your assumption. I also have a diagonal spread. So I do have some
for me for HIMS.
So I do have some, yes, I will push that through. So I do have some long delta here in Qualcomm. High IV and lower stock price, either selling the 185 naked put or using a Jade Lizard. So I have, I'm looking at the wrong stock. So I have a June Iron Condor and a call diagonal spread that's July, June. What do you do? Do you stay in June?
Qualcomm's never been good to me to be. I'm going to put my cards on the table here. Trade $197. Had a little bit of a pullback, right? Out from 240, down from 140. Kind of in the middle of its range here. I mean, I don't know if I'm bullish, but 1 to 2 vol differentials between June and July. What did you do here? You did a little bit of a kind of a crabbish trade?
No, Jade Lizard.
Oh, Jade Lizard. There you go.
Lizard.
Yeah. Oh, I like that. I like a Jade Lizard over a naked put. You did a $10 wide call spread. I like that.
So I did the June. I went into the June expiration, 29 days. I sold the 180 put. You were looking at the 185 here. I just moved this one more strike. I did it closer to $10 on the dot here. And then I sold the 205, 215 call spread against it. That call spread I sell for $3 or $4 ish, right? Like $4, $3 to $4.
Yeah, I like it.
So I did it at 1010.
Gives you break even down at 170. If you're looking at 170 on here, I mean that's lower than where it was at the end of last year. I don't know. If it means anything. I'm just putting it in context.
My delta here is neutral to bullish. I have a lot of short premium in June. I got some long premium in July via the diagonal spread. So I'm wrapped around here. Like I would love to see it float up to 210, 205, 210. That'd be perfect.
Mm-hmm.
Cool. So I'm in.
Good job out of you.
Yes, I will push that through. Oh no, this is your favorite.
Ooh, love. It's my favorite because my sister works there. It's up 37 cents. Congratulations on your wealth. But this stock is not cooperated after going up to around $55 at the beginning of last year, down to 37. I guess they're not as good as they thought they were going to be at giving their seats numbers. What do you want to do here? At or around its recent low that it saw back in March. I'm a little bullish on this one too. Not because my sister works there, just because. Oil prices are going higher though. June, July has a little bit of vol differential, like a lot, like from 50 to 60. Now, I don't know if that's because July markets are wide. They're not that wide. I guess 30 cents, 20 to 30 cents.
Yeah. All right. I can do some.
Markets are a little bit wide for a 30 some odd dollar stock, but you probably can get something going.
Yeah, these.
Yes. What are you looking at?
Markets in June kind of stink. Why do they stink?
I don't know. There's no earnings coming there. July aren't
Everybody trading this?
Much better.
There's no volume.
Limited volume, yeah.
They opened up some of the strikes. That's why. So they had $2.50 wide strikes.
They got $half wide strikes in June, yeah.
What does a new subscriber do here?
Not a lot of interest there.
I'm going to see if I can get.
Okay.
Like a poor man's cover call type trade.
Okay. You got to leave it in at your price because it is.
So I did the 35.40 poor man's cover call diagonal spread type thing. I'm buying the 35s in July, selling the 40s in June against it. I did it.
Gives you 60-ish delta. So when you say poor man's covered call, you really are there. If you buy stock and sell a 30 delta option, you got about 70-ish delta. You got about 70-ish delta there too, 60 some odd. And you only using $3.25 in it's good.
Yeah.
1/10.
Yeah.
The price of buying the stock. I like it.
Your break even on this, or at least based on the long option, because you're doing this at 325.
Mm-hmm.
If you add that on to the 35 strike call, puts you at 38.25.
Right.
50 cents higher is kind of like, your break even spot. I mean, you'll get some decay out of that short option, but
right. Cool.
All right. So we're in. Tough one. I mean, I guess you could sell the 35 strike puts if you wanted to do that.
You could.
In July.
Yeah, you could. I like your play better.
Yeah.
Use less buying power.
Yeah.
I like it.
Walmart, Sean, earnings play. Bullish Walmart because the business looks great fundamentally. I'm a Costco guy, so that's where my loyalty lives. They opened a record number of stores and performance has been strong, but the stock is at all-time highs. What strategy would you guys do? So I did yesterday, I believe. The 135, I did diagonals, but I'm thinking the same thing as you are. It's hard to get long here at, a tiny bit off of highs here. So
Walmart down too.
I did the 135, 140 diagonal spread. I sold the 140s in the weekly, bought the 135s in June. The trade is now marked at like $3. I did it at $3.50, so I'm out like 50 cents here. The 140s have about 70 cents of extrinsic value left in them. If that comes in a little bit today, I might even just take it off.
Okay.
Should I add something here though?
Good. Why not?
Maybe do July. What do you think?
Yeah. I mean, I don't know.
You know what? We'll do June, July. Or July, June.
Yeah, you got 3 vol differential. I mean, I like that vol differential if you're going to do something in a
This one's going to be a little further out in time. Okay. So I got the one in the weeklies. It's going to be a little bit more volatile. This one is not going to be as volatile. I'm doing the 135, 140 diagonal
Just
spread.
because the monthly implied volatility is not that volatile, right?
Yeah, you're buying 30% implied volatility. You're selling 34% implied volatility. I'm doing it July, June for $3. Buying the 135, selling the 140 in the June expiration, get you some added long delta here into the down move.
Yep, good.
And I think earnings are tomorrow morning.
In Walmart?
Yeah.
Earnings.
Or are they after the close tomorrow?
Tomorrow
morning.
21st, that is correct.
There you go.
21st. There you go. Good job.
So we're in, Sean. I like it.
Thanks for bringing that to attention.
ETH A, long term.
Tyler, New York City.
Anytime it's near 15. Well, it's certainly near there right now. I have long stock here. I will participate when this finally goes up. It has not, unfortunately. So I'm not going to add to the position. I'm just straight up long shares. I'm long shares in IBIT.
It's up 7 cents today.
Amazing.
Yeah.
Amazing.
It hasn't gone anywhere quickly, right?
Crypto just not in favor right now.
Right.
So I'm not going to add, but I'm with you, Tyler.
Okie dokie. Next one, please.
Roblox.
RBLX, July. Aaron.
40 puts. What say you?
I mean, so this is a tough one. I believe this has never had an uptick. The 40 puts are wide markets in here too, 50 cents wide. I mean, you really have to.
In July, not June.
Well, if you go to July,
they're like 20.
They're better markets actually, but they're gonna. I mean, I don't know. IB rank of 47 is good. Stock has. I mean, what about a defined risk trade? Even if you did a 40-30, I know you're paying 35 cents for that out of the money option. Does it make a difference to you or no? You got the buying power or no?
I get the buying power.
Yeah, that's what I'm talking about.
Here's what I'm going to do. I mean, the stock is in
free fall mode.
Free fall.
Although it's up 96 cents today, you'd be selling these puts on an uptick.
Oh my God, how could you ever do that? So I'm doing the 45-50 diagonal spread in July and then June, and I'm going to sell the 40 strike puts in July. So I'm getting about 100 deltas.
You did it 2 separate trades?
Yeah.
Oh, okay.
I just put them in. Hey,
okay.
You could do it all together if you want.
Could do it all together. Yeah.
Right. I didn't think about it. I just put them as different.
That's okay. That's okay.
So the whole thing I do for like $1 debit.
Got it.
40 debit.
Got it.
But it's an upside play.
Perfect.
It's a stupid.
Did you do? Yeah, you did something on the right. You did the call side first.
I did the calls first,
and then you did the puts. Got it. Yeah. Yep. Did you buy the puts?
No, I sold them.
You sold them. There you
sold
go.
The put.
Yep.
Sold the put.
I read it bad.
It's an upside play. You're getting, my net delta on that position is probably close to 100.
Yeah.
It's 50. It's 50 deltas right now, but
it will be 100
as it gets closer.
Yep. Even the S&P's up 12. Dow down 20. Russell up 140, and NASDAQ up 140. Russell's up 140. That would be a very big day. Russell up 26 is still up 1%. Russell, the strongest of the group. Bonds up 5 ticks, not near their highs, right, kind of in the middle of the range.
Cool.
Beautiful. Home Depot.
Just had earnings. We
down $1.90. Like I told you, if you looked at the flower
that.
selection, you knew the stock was going to be lower, down $1.90.
Yeah, we took like $50 out of the earnings trade. The stock opened down like $6 or $7 and then rallied a little bit into the middle of the day. What are they looking at here?
Yeah, traded this morning traded down to 296. It's 300 down to almost $2. They're bullish. I hope they waited a little bit because the stock's a little bit lower. What do you think about Home Depot? IB rank of 65 is pretty good. Markets are mid.
You just sell puts here?
As young kids like to say. Say again?
You sell puts here?
$300 stock takes a little bit of buying power. I mean, you're going to go out to July?
Yeah. Like the 275s?
Yeah, that would be a straight 20-ish delta play. Yeah. I mean...
they're looking at a spread.
I mean, you can do the 280, 275, 1x2, which would be capital intensive as the naked put, just to give you a little bit of a comparison. You can sell a 275 put, let's say for $4.40, or you can give up $1.30 or so and do the 1x2. You opted to go with the...
So they were looking at a put spread.
Okay, so you stayed with the put spread.
Yeah,
I like it.
So I did the 290, 280 short put spread. $10 wide, I did it at $3.20, one-third the
classic spread. I like it.
Yeah.
I like it.
Won't use as much buying power.
Obviously. I agree with you. $300 stock.
Don't have as much risk.
Yep. Good IV rank, yet only has a 28% monthly implied volatility. You know, $300 stock tying up a lot of buying power. I like it.
So we're in. Thank you, Eli.
Yeah, thank you, Eli. Appreciate it. Syracuse, New York. Last one, OKLO. We haven't traded that one in a while. OKLO up $3, 5% move to 50, almost 59. This is the first uptick the stock has had since the early part of May.
In August, June. Poor man's covered call. August, 93 days out. Okay.
Yeah, I mean, I get the thinking. I mean, they've got it right. I mean, let's see what August vol is. 92, June 94. Makes sense. I mean, I don't hate it. You like it. It gives you some of that play to the upside.
It's just tough because it's expensive.
It is expensive.
I mean, you have so much volatility here.
You do.
I mean, do you do it out of the money?
I mean, you could. I mean, it's expensive.
I just don't want. I don't want to put $2,000 on it. You know,
it's expensive because of the call skew.
Yeah.
So if you're going to do it, you probably have to go out of the money.
Let's do like this. I'm thinking this one's going to be more so a calendar spread, at least in the short term. I'm looking at the 65 in August and then selling the 70 in June. You got one more roll baked into this, so you got to think that you can roll and collect, $1 or $2, even more than that potentially. 20 delta long. We'll play.
I like it.
All right.
I like it. On the Nvidia watch, it's up $2 and change, just hanging in there. I think you did pretty good here. You did OKLO, you did Home Depot, Roblox, Love, Qualcomm, HIMS.
Seems like,
there you go.
Seems like a win to me.
Yeah. Definitely looks like a win. Better than I would have done. Good job out of you. Some of these markets were a little bit wide. We're hanging out at 73.90 on the E-mini S&Ps. NASDAQ's up 167. Russell, strongest of the group. Weakest yesterday, strongest today. Kind of that back and forth market that we've seen. In the clubhouse here, you've got ARM up 31. A-Lab, which you've been looking at and trading, IV rank at 91. Big implied volatility up over the last 5 days by 10%, but the markets aren't the greatest. A-Lab, AMD up 25. Marvell up 14. SMH up 14. SanDisk also up around 15 or so. AMAT, Intel, they love it again. Opened up around $6 or so. It's now up $11. Intel obviously cured cancer. Let's see what else is going on here. Costco down 20. Yeah, risk on trade coming here with.
I guess so. Yeah, Walmart, Costco.
Yeah, your Target's down, your Walmart's down, your Microsoft down, your Meta's down, CRM down, Google down, your Home Depot down, even your beloved AAOI down. We'll be back in 90 seconds. We got more Tasty Live. We're going to bring in my man, TP. Tasty Extra right after this. We're back in 90 seconds. Tasty Live.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Nicky, we are back, son. And you know what that means? Well, that means the E-mini S&Ps are not. They're up $3 now, about as low as I've seen them for the day. And it's surprising because we've got this man, the highlight of my day, Mr. TP. How are you?
Bad, I'm doing well. And Tony, you're the highlight of my week. Okay, can I just say that? Can I just say that?
Thanks, TP.
You know, it's like the only person I actually feel comfortable with these days. It's like the whole world's going crazy. These kids are out of control. No, it's like, Tony, it's like...
See, TP...
You're the only person.
You only get that once a week. I get it 5 days a week. I get to live this 5 days a week with this man. It's a blessing.
Here, let me get the complaint file out here. Okay. Nick Batista.
No complaints.
Okay, complaining about
That sounded a little bit like he was complaining, didn't it, TP? Yeah, it sounded a little bit like he was complaining.
No.
TP, E-mini S&P down $1. What do you got for us?
Yeah, I sold some put spreads in there earlier in the SPX like I normally do with our little SPX put spread trade. Got a little bit of money, but like what happened yesterday, which was really interesting, I thought. We had a nice sell-off in the morning. SPOOs are down, what, $60, $70 or something like that? And then they came back, closed down 20. And that's just, as long as you're not trading huge size, you can handle moves like that. I just sat on the stupid put spread. It never touched my short strike, but I was losing money. And then again, it's not like I knew anything. It's not like I knew they were going to bounce back, but just hanging on to it, and it turned out to be a profitable trade. That's kind of what I'm hoping for now. SPOOs are up, what, $11 now?
They just rallied 10.
Yeah, that was the dip. That was the dip, TP. You missed it.
That was your dip of the day.
That's it. That's it. That's all you get.
Don't come back for a second one.
No.
Don't come back for a second one. You only got the one dip cone today. Anyway,
E-mini's up 20 now. They're back to 73, just under 7,400.
Yeah, we're huge. We are huge. So what I'm kind of hoping, and this might be wishful thinking, guys, but Nick, we've talked about this in the past, that really the traditional market news cycle has been broken or has been supplanted, let's say, by the Iranian war, what Trump tweets out, et cetera, et cetera. Yeah. That the regular stuff, whether it's something going on at Treasury or whatever, doesn't necessarily matter. Look, hey, Nick, 30-year bond yields are over 5% right now. What are they, 5.20 or something like that now?
That
is like insane. That's crazy. I don't remember what the 10 years are trading at or the yield is right now, but that is crazy. And with the money that could be, we talked about this last week, the money that's floating around out there, that it's not going to T-bills or treasury bonds or something like that to collect presumably risk-free money, they're still chasing stocks. They're still pushing stocks up. And so my hope is maybe that Nvidia will break the cycle, that can we get back into more of a regular sort of non-tweet market. Now,
10-year yields around 4.65 TP.
What is it, Tony?
4.65 approximately.
Yeah, that's very high.
We had a good question on Confirm and Send today about like T-bills and what it would take for it to be, what number would it have to be for you to be out of equities? What would you say, TP? Like what's a rate that says to you, you know what? I don't want the equity risk. I want the rates.
Thinking back literally to like 1979, 1980, when short-term rates were 12%, 14%. It was a completely different world, and inflation was real back in those days, and it was hard. So would I ever switch over from, let's say, biased long from equities to interest rates? I'd say it'd have to be like 15% for 3 months.
Okay.
And ride that for a little while. Seriously, if I could make 15%, and remember, these are annualized numbers.
Yeah.
Right. So 15% starts to push the envelope of equity returns. Now they're not as high. Okay, we know this, but talking to the general population, selling put spreads generates a much higher return on capital. Right. Okay, you can get much higher return. But if you're just thinking, I have a bunch of mutual funds or whatever, I'm long an S&P, they're all the same.
Right.
Okay, they're all the same.
Yeah.
I'm just long the market. What would it take for me to back out of that and into T-bills? Probably something like 15% on the 3-month rate, something like that. But right now, you don't need.
I'm glad you go there because that's an astronomical number.
It is an astronomical.
And it tells you everything you need to know. And we kind of talked about this when oil was popping off. Like, oil's high, but it's not like scary high, right? Like, it's not in banana land. It's the same thing with rates. Like, everybody's going to talk about rates being high. Yeah, they're high, and it's going to squeeze, home buying and home prices and lending and all that stuff. Okay. But there's nobody that can sit there and be like, oh yeah, I'm going to take my money out of equities because rates are at 4 3/4%.
Right.
Like, Nick, it's just not enough.
That is 100%. Regarding oil, we're scared right now of oil in 3 digits. 100. What is it? What is it?
101, just under 101 now. This is about as low as it's been today. I mean, it traded down to 99.5. I didn't see it, but for the last 4 days or so, this is about as low as it's been.
And just full disclosure, what we're talking about is the CL futures. That's West Texas Intermediate oil. Brent crude typically trades a little bit higher.
Right.
Okay, fine. But yeah, Nick, it's not 150.
Right.
Yeah.
Okay. It's not 150. And to your point about the 10 years and making it harder to buy houses, Unfortunately, that applies only to the people who already have enough money to take out a loan, pay for a mortgage, and buy a house. There's lots of people who, for the past 10, 15 years, haven't been able to participate in that at all. It doesn't matter what the
if interest
mortgage
rates
rate
go
is.
higher,
I can come up with the money. What's that, Tony?
Yeah, but if interest rates go higher, savings of money you benefit, and maybe houses come down.
Yeah, but nobody's saving money. That's the whole point.
Right.
Like TP's
Well,
like,
that's
I'm only
the
going to
picture
save
you're
my.
painting.
Yeah, I know, but talking about like just generally speaking, it takes TP 15% interest rates for him to get out of the market. You're not saving money at 5%.
Yes,
like,
that's true.
yeah, you make a couple extra dollars each
And
month.
so
That's great.
What
but
I
it's not
mean
like,
is.
Sorry, I cut you off.
No, that's okay. So what I mean is that there's a lot of stuff going on right now that's scary. I understand that. Inflation, oil, the Iranian war, all that stuff, I get it.
Sure.
But we can't lose sight of the fact that you can never disengage from the market. If I decided, Nick, to pull money out of hey, I'm short, okay? But the point is, if I started taking money out and sticking into T-bills, I'm not watching the market anymore.
Right.
No.
Okay. And that is a huge cost.
Yes.
That is a huge cost. Let's talk about Nvidia. The only stock that matters right now
It
is Nvidia.
The whole world depends on it.
Yeah.
It's and here's the thing. Nvidia is obviously his whatever its returns have been over the past few years, it's enormous. It's the most valuable company in the world.
Yeah.
I think Apple was more valuable at one point. Maybe I'd have to look at the market caps, but it is currently the most valuable company in the world. It is right now on May 20th. It is the bellwether stock for a whole slew of things. The whole world, Nick, is pinning its hopes and dreams on Nvidia for AI, semiconductor construction sales, capital expenditures, all that stuff. Unfortunately, well, for better or worse, Nvidia is carrying all that stuff. So what I did for the cherry picks yesterday and what we'll talk about today is some of the data I looked at over the past 3 years. I just pulled 3 years of Nvidia data. And what I did was looked at, and we've done this sort of thing before. I wanted to look at it a little bit different way, though, where what was the price of Nvidia before earnings? Because they always come out after the close.
Yes.
What was the closing price before? Then what was it one day after? A week later, and then a month later. Okay. What was it on those two time frames? And then how often did it break through its predicted range? In other words, the standard deviation range. So Nvidia almost always beats earnings estimates. Almost always. But it doesn't mean that Nvidia always rallies post-earnings.
Sure.
And we've seen that over the past couple of cycles. Nvidia has actually been lower. So let's go into the first slide, Nick.
Let's do it.
One day post-earnings returns. I think we lost our man TP here for a quick second.
Oh, there we go.
Oops, sorry, guys.
No worries,
All
no
good.
worries. Come back to us. Come back to the five and dime.
Leave.
I had to blow my nose, Tony. Sorry.
No worries. No, I'm glad you did.
So this is what we're looking at, Nick. So this is the most recent data is on the top. Okay. And this is 1 day post-earnings returns. 1 day later, in August of the past 3 cycles, the stock was actually down 1 day later. Earlier, like 3 years ago, it was higher and a lot higher.
Yeah.
Okay? The downside has been limited for Nvidia. The upside has been much more expansive. Now you could say, well, 3 years, that's ancient history. Okay, yeah, it could be. But at least it gives you some sort of 12 data points starts to get you into something statistically interesting. Let's go into the weekly the 1 week post earnings. The next slide. Then you see basically the same thing. Okay. Relatively, it's basically an even split between being lower 1 week later and higher 1 week later. But the 1 week later ups have been typically stronger than the downs. That's 1 week later. Now we go into 1 month later. Next slide. Here, it's a lot more apparent. Yes, it is more frequently down 1 month later. But again, the upsides are huge. And that's what's those returns, a month later, post earnings, and then sort of compounding over the past few years. That's what's given Nvidia just the huge returns it's seen over the past couple of years. So the next question is, how volatile are these returns? What numbers are we looking at? Let's go to the next slide. So one of the things is there's no single. I don't look at charts like you got that. I don't look at charts. I tend to look at data. And there's no single piece of data that is convincing necessarily. It's a bunch of stuff, right? So you look at these three graphs of the post earnings returns. Great. Okay. Let's go and look at some of the summary statistics of those things. The average was always up. The average return, but the median. Remember, the average is you add up the values, divide by the number of values. The median is the number that has an equal number of points below and points above. The median is actually negative. So that's where you get those, out of 12 data points, you get 6 down, 6 up. That's the median sort of thing. The minimums, again, 15% or so. The maxes are almost twice as high. And then the standard deviation, I just tossed that in there. It is obvious, it grows over time, as you might expect. So what you have is, the way I look at this is those big returns we saw from 3 years ago are bringing up the average. Okay, that's what's making that average positive. The median, you got to be a little bit more careful with the median returns being negative. Let's go to the next slide. And how many of these happened? Again, 1 day later, it's an even split. 1 week later, a little bit biased towards the upside. 1 month later, huge bias toward the upside. In other words, this is how many times they violated the one standard deviation range. So it took the volatility at earnings, whatever Nvidia's volatility was, calculated a range for 1 day, 1 week, 1 month, went forward 1 day, 1 week, 1 month. How often was it outside the range? 1 day, it's an even split. It broke through the range to the downside and the upside 4 times each. 1 week later, starts to look a little bit more bullish. It breaks towards the upside a little bit more frequently. 1 month later, the standard deviation breakthroughs, it's all on the upside, not on the downside. So this is why, I'm looking at...
This is call skew is what you're saying right here, TP.
Did we lose him?
What's that again, Tony?
This is call skew.
Yeah,
you're looking at call skew. I mean, you're looking at the pricing. I mean, what you're finding is why the pricing is the way it is.
And from the last earnings, the last 3 earnings, I think, what I saw from the first couple slides, they've all been downside moves, which kind of goes to you talked about it, obviously, a couple years ago. Nvidia was $1 trillion stock. It's now $5 trillion stock. Right. There's a lot of value that's been added in a very short period of time. And so you have an asymmetric, upside tail from the past events. More recently, it's gotten to be, kind of a more mature market, buy the rumor, sell the news on earnings, even though these earnings have been amazing. You said they blew out earnings and they've gone past expectations every single time. The stock's going lower. You get to a point where how much bigger does it get? You know?
Right. In such a short period of time.
Such a short period of time. Oh, man.
Short answer, Nick. A lot bigger.
That's true.
So I am now. The bottom line is, it's all this is nice. I look at the volatility skew. I see which way the options are pointed. So you can go through all this analysis. What I do is, okay, maybe I have an upward bias. But again, I'm not going to base a trade on all that stuff. I'm going to look at the option markets right now. Out of the money, Nvidia calls are trading over puts. And that is real live money taking real live risk on an opinion. It's not some data set or whatever. I have a hard time arguing with the market. I'm selling a put spread 30 days out in Nvidia.
Love it.
Sounds good, my friend. Good job out of you. Even the S&Ps are having a good job. They're up 45. They're about as high as they've been. Volatility traded under 20 to $19.99, but it's $20.50, down 37 cents. NASDAQ up 300 and change. That's a 1% move. The Russell up 1 in the order percent, up $47. Volatility, Dow up 260. On the oil front, it's flirting with going under 100. It's $100.11. On the Nvidia front, Nvidia was up $3 and change just a moment ago. It is up still $3.89. TP, we're going to let you take a quick 90-second break. We're going to let you go. We've got more Tasty Live at the Tasty Trade World Headquarters immediately following these messages. Let's Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
I've got some huge news for traders everywhere. On June 4th, the pattern day trader rule will be replaced by new intraday margin rules. Tasty Trade has been advocating for an updated PDT rule for years, and we're ready to go on day one. You'll have more flexibility to manage risk when and how you want. Join Tasty Trade today.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Switch to Tasty Trade and earn up to $3,000 in commission rebates.
Nicky, we are back, son. And you know what that means? So's the market back, too. Even the S&Ps, well, Nvidia up over $4 now. Let me start that way. It was up around $3 and change. Even the S&P's up 45. NASDAQ up 315. That's about as high as I've seen it, although it's been about $30 higher this morning already. Russell up 49. That's your leader in the clubhouse to the upside on a percentage base, up almost 2%. Big move. Dow is your weakest, up 300. Volatility in by 32 cents. But you know what?
I don't know what just happened because they I'm looking.
Bonds
gold rallied 60 handles.
Yeah.
Silver's up almost $2 here.
Oil's under 100.
Oil's under 100.
Pump prices still haven't moved.
No.
All that means nothing because this man makes me move.
Oh, whoa.
I tend
Marty,
to,
it's moving.
I tend to have that effect on you.
You do.
Right.
You do.
That DDD.
So you came over my house. You were supposed to come over my house this weekend. My wife put on makeup. She got ready for you because I've been telling her all about Marty all these years. You know what I mean?
I didn't know you guys were swingers.
No.
Well, we're not officially.
We're not.
Right.
We're not.
Laurel.
We're not. We're not.
Right.
But I've been telling her about Marty for years and years and years because, you know, she was out on the street there for a little while. And I said, you know, probably ran into Marty. She said, no, didn't run in those bad circles. But I said,
no, she did not. No, she didn't.
But only your son came out, which was nice to meet.
Yeah, he wanted to like do this thing on his own.
It's good, man. I like it. I like it. I like it.
He had to meet, and when he's meeting a celebrity, he doesn't want to share that moment with, you know,
he was
very upscale and cool.
Yeah, he was a little awestruck.
But yeah, he's.
But nice to meet the young man.
Yeah.
Fine
Good one.
Junior.
Yeah, he's a good one.
Is he making? Now my son is a sophomore. He just started talking about college. You talking about colleges yet?
He is, and
the path he's going to take.
We'll see.
Or is it HVAC?
We're going to lean him away from that. Not that there's anything wrong with it. It's a nice
I like it.
It's a great career.
I think
he's not really cut out for them.
Yeah.
Maybe he'll become a motorcycle racer. You know, he's got
He
that
likes
whole
real
team.
estate. I spoke to him about it.
Yeah. He loves going into real estate.
Yeah,
You know, so we'll see what happens when he graduates. But, you know, I think a couple of years in college isn't going to hurt, right?
No, it's good.
It's a nice
mature
experience
thing to do. Yeah.
It's like a free vacation for 2 years.
For a couple of years, yeah.
For a couple of years.
Sure.
You know, it's like a...
Yeah. The best part is if you want to, you could even extend it after that.
5 years.
5, 6 years.
Right.
Take a victory lap.
Right.
You didn't. You did 4 years on time.
Well, you couldn't wait
You're
to...
supposed to do.
You couldn't wait to get here. You couldn't wait to get here, right? So,
Exactly. Please.
Come on.
Yes.
But yeah, I think that he'll end up maybe going for a couple of years. He wants to go maybe to Florida where his sister is. So
nice.
See if we can't move this whole Venet Hillbillies thing down there.
Talent in Florida probably a lot better than Kansas.
Yes.
Right.
Yes.
I mean, you know, I guess he could go to IU or something, but I just don't see it. Not for him anyway.
All right.
All right.
Yeah.
Did you
How's
get the
the
full Batista experience? Did you get to do like sauna, cold plunge, pool, hot tub?
He was in. He was out.
I was not. I was disinvited, and he told me that he was going up like with a friend of his, right? Which I found out
Came up solo, which I
solo. So his friend must have bailed on him too.
Yeah.
Wow.
Because I was just going to have him drop me off here, go up to Casa Batista.
Yeah.
It was amazing because he got right through that guard gate too. You know what I mean? When he was pulling up.
Yeah. We gotta
Casa
work.
de Campo.
Casa de Campo.
Yeah, house of the field. Because they're right next to a field.
It's good for him to get up there and be, and actually, literally, to be able to interact with adults. That's kind of what we need them to. He's pretty good with adults.
He's good. He's good. How's the trade desk today? What's going on there? Is it all about
Everybody ready
Nvidia,
for
or is it
Nvidia? The
anything
big day.
Yeah, I got a lot of guys sitting on that. Like a couple guys I talked to think it's going to have, you know, earnings that are okay, and then they're going to pound it.
Really?
I mean, not pound it, but it won't react in that manner. Like, you know, so this is another one of those where if it's not really good, what's going to happen with that stock?
How are the numbers not going to be good?
That's what I think.
They're going to be astronomical.
But then if you looked at like AMD and MU the last couple days, because MU got a little bit of a, I don't know if you call it a whacking, because the next day, of course, it's up $42. But yeah, that, and obviously we're getting, you know, an enormous amount of inquiry into Celebration June 4th. That's a big call thing.
Yes, PDT.
Yeah,
PDT.
I think it's going
I love
to be amazing for
going to be amazing.
Awesome.
Guys that don't have to deal with that anymore. But yeah, this Nvidia number is going to be really interesting, I think. I don't know. See if it just
Vol come in.
Yeah.
Come in.
Well,
that's what I'm thinking.
Vol's actually rising a little bit. 2016. I didn't think it was going to get under that 2015-ish handle.
You're talking
down
Vol
to
futures.
20.
Yeah.
What's that?
Vol futures. Yeah.
Yeah, Vol futures /VX. Yeah.
Where are the Spoozies now? Are they above?
74.19, 74.20.
I think that's a big number, that 7,400 too.
We've been 50 handles lower, 50 handles higher for the last couple of days, and 74 seems to be the
decision day. You got the big dog, reporting earnings. You got to
go with it. Maybe this is an indication of what's going to happen.
Mm-hmm.
Yeah,
could this be the precursor to a? I mean, I think if that number's good, then it's going to be. Well, I don't know how. Like to your point,
I don't think we go anywhere. I think it's the inside move. I think that's like the best thing that could happen for markets.
It's just stay in that little range.
Stay right there. Vol comes in. The skew comes in.
Yeah.
You don't want this to get goofy to the upside. You don't want it to crash. Obviously, nobody wants. Just chill right here. Take some froth off the table. Take some vol off the table.
Right.
Probably healthy for market.
They had like that day and a half little move where
Yeah.
Where they took profits or whatever it is that they do. I don't know.
At 240. Yeah.
Right, exactly.
That's all a spin.
Exactly.
Let's see what's trading on the Tasty Trade World headquarters here for the first couple of hours. Well, hour or so of trading. Go.
Let's go. We have at 20 now a 71. GLD 19 a 34. Marvel at 18 is a 106. 17 Palantir at a 20. 16 SNDK at a 69. 15 TQQ at a 63. 14 Meta 33. 13 SLV at a 37. 12 SOXL 93. 11 Target 19. 10 Goog L at a 40. Rounding out the top 10, we got Amazon at a 19 at number 9. We have ARM at 83. AMD at 88 at 7. 6 Microsoft 51.
One of the few down stocks right now.
Yeah. Apple at a 43 at number 5. 4 MU at an 82. Intel at 3 at a 92. Nvidia 54 at number 2. And then Tesla are back on top at a 19.
I have them with Tesla 410.
Yeah.
All right.
Which is crazy because I haven't even been following it lately, really, which is bizarre.
I had a nice move back to like 450-ish.
Yeah.
But with 400 has kind of been where it's been kind of stuck.
Yeah.
It's been wrapped around here.
Yeah.
Like 25 to 50 points in Tesla is like the norm.
Yeah.
So, 450 to 350, and it's right in the middle.
Right.
That's kind of been the...
455,000 Nvidia calls have traded, 165,000 puts from my
that's why
sources.
You need to just smoke volatility in there. Just non-move. Stock goes nowhere. Yeah. Smoke volatility. Everybody YOLOing calls. Pain. Everybody buying puts for the crash. Pain.
The eternal optimist.
Nvidia expected move of $12 was 13 earlier this morning. So volatility is coming in a little bit. There.
Yeah.
All right, boys.
All right, good job, Eddie.
Always
my
a
friend, I
pleasure.
gotta let you go. I like your shirt. I wish I had one. We're gonna let my new man in. My new side cheese. That's right. Talking about Glenn. How are you, my friend?
Decent.
Morning, sir.
Everything
Actually,
good?
I'm pretty good.
Good.
I'm excited. Synthetic Thursday for me today.
I have a question for you. So at Comiskey, I did the fast pitch, the speed pitch. Where they clock you.
Now you were at Comiskey the same time, then that's where the Sox play, the White Sox, Chicago
Guaranteed
White Sox.
rate.
Yeah,
US
field, whatever you want to call it.
Nick had a pretty cool hat on.
Yeah, he had to look back at you to find you in your seats, so he wins.
I think it was 8 o'clock. His 8 o'clock, so pretty close to 9, which would
pretty
be
close. Which would
couple
behind.
But yeah, a little.
Still had to go behind. Still had to look behind.
You're
Worst thing
down
you see is Glenn in front of you with better.
Both very good seats.
The very good, great seats. Great seats. It was a great.
Okay.
But the
I'm glad we're all friends here.
The question is, what's your over under on your speed pitch?
How fast you can throw?
Were you a baseball guy?
Not really. I played a couple.
Tell me you played soccer.
What sport did you play? He does actually look like soccer.
Yeah, he was definitely soccer. His mom did.
That's not. I'm not
Play
saying that in a
football.
bad way. He's saying it in a bad way. I'm not.
I know.
I'm not saying that kind
You
of.
know, or tennis.
It's a
You were
sport like
tennis.
any other.
You were tennis.
The sports I still play are tennis and basketball. I did
I
play
knew about
soccer, and that was too much running.
Okay.
So I stopped that in high school. Stopped playing basketball very
Soccer's
competitively.
tough. I haven't played it. I've played with guys who can actually play.
Batistas were
It's a
not built
different-
for speed.
No. And I make
Batistas
fun of it because I can't do it.
Yeah.
I mean, I'm not good at it. I mean, anybody
Yeah.
can run and try to hit a ball with the foot, but it is extremely hard game to play.
What would you put your over under
on my fastball right now?
Yeah, right now.
After a couple of these?
Yeah, a couple warm
No,
ups.
a couple
After a couple
beers,
of these?
cold.
Cold?
Yeah, just getting up there. So you get 3 of them.
I'm in the 70 handle, I think, for sure. You're buying them?
I think so. I think I might buy him at 7.
Buy him at 70?
He's young, dude.
Still has some elasticity.
Yeah.
All right, over or under 75? I'm going to take under 70. I'm going to take 75 as a push. Over 75, you win. Under 75, I win. Done?
Filled.
Hey, there we go.
Give me 75.
I did 67.
Does this scare you a little bit?
That's a lot of flexibility.
Oh, little.
No, that.
Yeah.
that wasn't.
That wasn't inspiring?
No, it wasn't inspiring
That wasn't
at all.
Damn.
Lost it. Had him for a second.
You had me.
I was also, I was holding back a little bit. I wasn't full.
What did you get?
67. That was my fast pitch. That was no crow hop. That was just, normal.
That was with the hat on.
Like a light warm. Yeah, with the hat on. With the light.
He did keep the hat on. He did keep the hat on.
That's some drag.
It was a
long
Most
sleeves.
pitchers do.
Long sleeves?
No.
Oh, you were wearing.
You know what? You can go skins if you want to.
Don't let me do that. Do not let me do
Here's
that.
the thing. It's we're approaching golf season.
Yep.
You can't go into golf season with a bum shoulder.
It's hard. Yeah.
It would be. So I kind of laid off a little bit.
Yeah. Makes sense. You had 80 in you.
I think I had 7.
All right.
I think I had mid 7.
Hey, I'm going to New York this weekend.
Very nice.
You ever been to the Fulton Fish Market?
Yeah.
In the Bronx?
Yeah.
Going to a concert there.
Oh, nice. It's no longer a fish market. It's a concert
I think it
venue
still
now?
is, but
Oh, they
they're
still have it?
doing a little
Okay.
takeover. Second largest fish market in the world, allegedly.
Seattle. The other one? Is that one? No.
See it.
Is it Seattle? Oh, no, not world. Not world.
Probably.
What's the one in
Japan
Seattle?
or something.
Yeah, you're right.
I don't know.
Tokyo.
Tokyo, there you go.
Yeah, that's what I figured.
All right.
Toyosu Market.
Can't get the obvious past me.
Yeah. So
This
cultured.
is saying Mexico City has the second largest.
Oh, wow. New York got.
All right, I
You're
don't
gonna
know
have
if I'll
to-
go anymore.
Yeah,
I was only going because I thought it was the
Oh.
second largest fish market in the world.
Can't go now. It's just not worth it. That's
Well-
fun, though. That's fun.
Yes.
That ruined my day. Thank you.
Well, how's the FX world today? I mean, euro's basically unchanged, pound's basically unchanged. Is there action going on the euro front?
There's action, more so overnight. It's been more kind of action in the pre-market here in the European session. We've seen it die really by 11, 12 a.m. A lot of the action in recent days. But decision day, what this does, I mean, with the U.S. Open, what I'm looking at kind of intraday is we saw kind of a fake out in terms of risk off, and now green candles are back.
Yes.
Up and away. And we saw a similar reaction against this US dollar. And so what I'm doing right now is kind of pulse checking for what would move the most if we get, as silly as it sounds, something from Nvidia that spurs a huge risk off move or new all-time highs. Of course, you could look directly to equities, but if I'm getting small and trading in the after hours, FX markets are, one of the most liquid options that you could go to. And right now it's looking no surprises that...
Well, I say euro's gone nowhere, but it's gone nowhere after going down
the
last 5 or 6 days, right? I mean, the dollar's been strong relative.
A very
Even with
strong
bonds
dollar.
going lower, bonds quite a bit today, but bonds have been going lower. rates. TP was just talking about 10-year rates around 4.6 and change.
Yeah, so that's been very supportive for this U.S. dollar and at a pretty important inflection point, right, near extremes, especially in the bond market. So you're seeing a little bit of reprieve from that, but if these rates hold for a long period of time, you have to imagine that the continuation takes shape in this U.S. dollar market. And along those lines, one market that is particularly interesting to me this week is this pound dollar cable. This one catching a similar bid, now back above 134, but this one got slammed last week off of some UK political instability. And this week we've gotten some numbers from the UK. We've got inflation this morning and unemployment yesterday morning, both a little bit uninspiring, and traders now taking out some speculation for 2 rate hikes from the BOE this month. So far, that hasn't really played into pound weakness, perhaps because it got beat up so bad last week, and this kind of U.S. dollar side of no demand today is playing through intraday. But it's definitely a longer term, kind of medium term outlook for should this pound be supported right now, or all the current data is saying, we were expecting hikes from this Bank of England. Their inflation not as high, their unemployment getting a little bit out of control. Will they be able to hike into that? Probably not. And so you're still looking at this 134 level. And this pound dollar is not by any means the low. As recently as the end of March, we were at 132. So that's a good 200 pips there to trade back to those lows. And similarly, if you're looking for a little bit more diversification, looking at this euro pound, popular non-US dollar pair, still highly liquid, but that one getting down to the bottom of its range. This is on a similar note, last week shot all the way up to the top of its range on euro strength, but a huge move back, almost fully reversed all of its weakness. So the pound looking pretty strong from that perspective. Should it? I think that's an interesting storyline to monitor. Still got a few pips there to get to those true bottom of the range in that non-US dollar pair, but 86 there is the low of the range dating back to July of 2025. So a lot of different charts to look at. We, of course, have a pretty big risk barometer in that Nvidia earning today. But before then, we've got some FOMC minutes.
That's today.
Yeah.
Middle of the day today, right?
Yep.
1 Central?
1, I believe. Shouldn't be a huge event, but there could be something in there. We've got Kevin Warsh starting on Friday, taking over the Fed.
How do you feel about that, generally? Are you, sad?
I'm nervous.
Nervous. It's like a breakup almost.
I know.
You had Daddy Powell for so long.
I know.
I know. Yeah.
God, I'm going to miss him.
Yeah.
But, we're optimistic.
Yeah.
But, he wants to do a lot of new things. So the only thing this FOMC minutes will tell you is kind of a detailed glance at what exactly he's taken over. The last Fed meeting had some of the most dissents in both directions that we've had in recent memory. And so this will just give a lens of what exactly he's inheriting, if speculators have any sort of conviction in what this could mean for his first steps of action. You could see some movement, but looking like we'll be on hold, risk on for the U.S. session until proven otherwise. But of course, like you said, we've got those yields in the back of our mind. Those are in pressure territory. Dollar yen getting back into pressure territory at 159. Any sort of intervention from the BOJ so far not proving as fruitful. Or maybe it is. Maybe we would have been at around 165 by now if they hadn't bought billions of yen. But that's what I'm looking at today. Should be fun. Intra week.
Very
dollar
good, sir.
Strong. A lot of different ways to play.
Looks like the market's catching a little bit of a bid here. Bonds are catching a bid too. They're up 19 ticks to 110.13. That's about as high as they've been.
And I scalped the bond puts that we sold yesterday, the 106.
I did the same thing
still
on
have the
my option
107.
trades today. Just about made 10 ticks at 15.62 a tick. Is a big number.
Yeah.
Good job out of you.
Good job out of you.
Now the bonds are reversing in the equity markets here in the U.S. Do you think that's going to give a little bit of a buoy to the pound and the euro? Would that help?
Yeah, I mean, you're seeing it right now.
Yeah.
A little bit of reprieve there, playing through in some U.S. dollar weakness. So I think this market's been a tale of one-day outliers and not as much conviction.
Same thing with our equity markets. One sector is down, the other sector's higher. Next day, that sector's down, the other sector's higher. Nvidia is going higher. It's up $4 and change. Expected move is wrapped around $11 or so, $12, I'm sorry, for earnings. We're going to take a quick 90-second break. We're going to come back. We got more Tasty Live. Immediately found these messages with Liz and Jenny from the floor.
It's always electric when the ladies are live.
The CBOE. Peace.
Peace.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. Cboe is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the Cboe's SPX pit. Watch Liz and Jenny live from the Cboe, only on Tasty Live.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
In road trips, my family, it was like whoever could get the captain seat was it.
That's great. I'm having a great time.
Me too. But, I mean, stay a while. Take your jacket off.
No, I mean, I'll stay, but the jacket's not
Come
coming
on,
off.
take your jacket off.
Nope.
Come on,
No.
take it out.
I'm sorry. I didn't mean that.
No, I'm sorry.
You hopped on this cowboy's horse, so I guess you got to hear his tale. In '87, I took it off. There was the market crash. In '92, NBC canceled Blossom. A couple of years ago, I lost it for 2 days, and the Lakers won the NBA Finals. Bottom line is when this thing comes off, bad things happen.
You've got to take it off sometimes. I mean,
Never do.
how do you shower?
And the jacket's kind of gotten used to it. In fact, every few days it needs it.
No matter what, you keep it on.
I can take my shirt off if you want, but I'm not taking the jacket off.
I just don't know if that's something that I could deal with.
It'll be like a teal tornado. Just endlessly washing up on your short.
I mean, I
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Everybody, and welcome to the Wednesday edition of the Liz and Jenny Show. My name is Liz Deerking. This beautiful brunette to the left of me is Jenny Andrews, and we are at our happiest place on earth, the SIBO.
It's not Disney World. It is the SIBO. It is the SPX pit, happiest place on earth. We do like coming here, and I will say, we're here Tuesdays and Wednesdays, and our show has a different level of energy.
It can't not have a different level of energy when you've got 300 people standing behind you.
Versus when I'm sitting in my closet.
Correct. A little bit of energy, a little bit, but yes.
It's nice. It's nice, and we've got Spruce up 54, but it's quiet on the floor today. It's weird. Usually there's a buzz. Today, it's very quiet.
And we were talking to some of the traders as they're walking by, and they said the last couple days have been quiet.
Yes.
Quieter, I should say, quieter.
Yesterday, we sat in these seats. Spruce were down 55. Right now, 24 hours later, they're up 55.
Yeah.
So,
what a difference a day makes, right?
We'll see. We'll see what the market's going to do after Nvidia earnings. That's what
we've got earnings on deck. This is the day we've been waiting for. We've got Nvidia and Intuit. Those are the two big ones, I think, aren't they?
Let me take a look at Bob on Fire's list. Bob, thank you for sending this. Today we have Nvidia, Elf, Intuit, Urban Outfitters, Walmart, John Deere, and AAP. Can I quiz you? What is AAP? Any idea?
AppLovin. No, it's APP.
APP. That's you down with APP.
Yeah, you know me.
I don't know what that is, but a handful of earnings. But Nvidia is the big one. Intuit. They also have
Advanced Auto Parts. I just looked it up. I cheated.
Advanced Auto Parts. So Nvidia, it's a $224 product. Expected earnings move is $12. So just like a 5% expected move. That's all they're pricing in.
That is all they are pricing in. But you kind of made. Did you say this? Oh, you were doing it in our pre-intro. I didn't know if you said it during the camera. But sometimes when all eyes are on something, it has tendency not to move, right? So when there's so much commotion around it.
So 52 million shares have traded. Sometimes when there's so many players in the game, I find that the less liquid products tend to move more. Now, there's no research that backs that up. That's just in my mind.
Well, no, there is research that backs that up because the more liquid products, the more efficient the markets are. Right. So you don't get a run up or a run down because there's no skew or there's no like.
If you've got a big order coming in, there are orders on the other end to fill it.
You got research backing you. You got research. I'll give you that.
Now there's a little more motion, but it's not about the markets.
We're not sure?
I don't know what's going on.
This is definitely not trading related.
I have no idea, but I remember...
It's 100% not trading related.
Floor officials are coming up.
Uh-oh. That's okay.
Oh, man.
The natives are restless. It's my favorite time of the day when they get crazy.
When they get nuts.
Okay, I'm going to go back into the platform.
Okay, so it's possible that maybe there won't be too much going on in Nvidia. Maybe it won't move too much. When you've got a 12% expected move, just a 5%. The hard part is our viewers can't hear all the content.
I know. Okay, I'll go back. Okay, but
so you've got a $12 expected move in Nvidia, 5%, and in Intuit you have a $35 expected move, so almost a 10% expected.
And how many shares have traded in Intuit?
1 million versus 50 million.
It's a big difference.
Maybe I'll sell a strangle Nvidia, but I'm not going to touch that into it.
Yeah, so I mean, it's that's definitely a big difference. And we are going to be putting some earnings trades on. Do you want to manage the ones that we did today?
Sure. Okay. Yesterday we traded
Target.
Lowe's. We're gonna let that sit until the end of the week.
We're gonna let that I'm going to use Jenny's favorite word, percolate a little bit. And there's a reason why. It's trading right there.
This makes 0 cents. 0 cents. Earnings came out. It's 2/17. We have a 2/17 calendar. This calendar should be a winner, and it's not. That's so weird.
We looked at this. There's wide markets, and there's still a lot in that near term 217. It's a very wide market.
The 270 at 430. We're just gonna leave this, or we just put in an order
to take $100 out of it.
So we paid $125 for it. I'm gonna put in an order to sell it for $2.
Perfect. That sounds great.
Because it says, I don't know.
Just put it in.
$2. $2 credit.
Because you're getting, with those wide markets, it does have a little bit of a different mark.
Well, and it's only Wednesday. So there's a lot of premium still in that 217 2-day. It's only Wednesday. We've got to wait till Friday. We'll just leave that.
And then our other one was Target, and that was a win.
Target is down $6 or $7. I think we saw it down as much as $9. We did a Jade Lizard, and it's almost full profit, $85.
This is why I like the Jade Lizard. Love it because it's neutral to bullish, right? But when you're doing it in the nearer term, it went the opposite direction. We still take it off for full profit.
Now, we got lucky that we did a Jade Lizard instead of a diagonal. If we would have done a bullish diagonal, that would be a full loss.
Yep.
With Jade Lizard, we were far enough away with our put that it's almost a full winner.
Yep.
So we're going to take $84 out of that Target Jade Lizard. Close that. Okay, 18 cents. And that's giving us $1,700.
It was a lot of capital. But we had said we were wide enough, and worst case scenario, if the target goes down, we didn't mind holding the position.
One other thing I want to do, yesterday during last call, we put on this downside broken wing butterfly. End of the day yesterday, we put it on for today. So we have, I'm going to go to the strikes here. We collected $1.60. Whoa, it's really far from it.
Yeah, it's very far from it.
Very far from it.
What we're going to do right now is we can take almost all the risk off. It's very wide. Now, in this given market, let's just be honest. Yesterday, we were down 50 when we were doing our show. Then we rallied all the way up. And then at the end of the day, we were back down. So if you do something like this, you can butterfly it off, take all the risk off the table.
So we have this broken wing butterfly, $10 wide by $20 wide. And if I just make it a symmetrical butterfly, buy back our short and move it, so we'll just have a $10 wide butterfly. It's only a nickel to do this. We took in $1.60, so we'll lock in $155, and we have this downside butterfly.
Just in case.
I mean, do we think it's coming in?
Nope.
No, but it's worth the nickel.
Correct.
Because we'd be paying a nickel to close the whole thing anyway.
We wouldn't close it. I would butterfly it off. Yeah, you leave it.
Just take all risk off.
Especially in this market. Okay, so we do have earnings on deck today. We're going to take a look at Intuit and Nvidia. We have an XSP trade that we will manage. We have a study from Jacob, which is springboarding off last week's. And there's also a question that we have to answer about the box trade that I have pulled up.
Oh gosh, the box trade. We've gotten lots of questions on that.
I said the emails start rolling in when you mentioned the box. And we got an email.
All you have to do is mention it. And that went out as in our YouTube trade of the day yesterday, and we get a lot of emails on that.
So you get to choose the order of operations. Would you like to go into Jacob's study? Would you like to answer the box question, or would you like to do earnings first?
I think we go into Jacob's study.
Okay.
I think we go into Jacob's study first, and then we can answer the box question. I ended up paying a dime to butterfly that off.
That's beautiful.
I wasn't getting filled at a nickel. So, are you ready?
I'm ready
for Jacob's study?
Whoa, I'm ready. I'm on the edge of my seat here, Jenny.
Okay. Today, we are talking about short-term Jade Lizards. Again, this is, I think, about week 3 talking about short-term Jade Lizards.
Yes. Well, and this isn't going to be the end of it because I think we're going to add to it.
And this is management mechanics. No, it's not the what if you just leave them and never close them.
That's coming.
Which we've asked for that. That's coming. This is different management mechanics that Jacob has come up with.
And he's landed on the 7 day. So let's go into the study so we can kind of break it down for you.
All right.
Over the past few weeks, we found that Jade Lizards have been a natural fit for short-term SPX trading and pinned down some spread whips and strike combinations to give a strong foundation.
The next question is what to do once the trade is on, how much profit to hold out for, whether to cut losses when the market moves against you, or or whether to simply do nothing at all. And that's always everyone's biggest question when we place a trade. What's the management? And people always want, if this happens, do this. If the market moves
the
this
decision
much,
trade.
like how much profit do you want? What are you going to do if something's going wrong? How do you manage this trade?
It is. And he dives a little bit. So profit targets are a familiar tool for increasing win rates, but take profits too early and you leave money on the table.
Stop losses are more contentious question in premium selling. They cost you winners and can result in fills at poor prices.
Is it contentious or contentious?
Contentious. It's about the screen is far from here.
I know it is.
But many traders rely on them to mitigate their worst losers.
True.
And there are a lot of people who believe in stop losses, who like stop losses. We've done many studies on them. Sometimes they make sense, sometimes they don't.
I'm not gonna lie to you. I've never done a stop. I can't even figure out how to do it. So I don't use stop losses for my options trades, not even my stock trades.
And I'm not saying put in a resting stop loss, but having even a mental stop loss.
Yes, true.
Or like a timed, okay, if this didn't work by noon,
True.
There's lots of people who like to have an exit strategy if something's not going right.
True, and everybody can trade. Trading is you could do, this is a choose your own adventure. I've said it before. These are some of the oldest debates in options trading, and today we let the data weigh in on which approach suits the Jade Lizard best.
All right. The study, using over 3 years of data in short-term SPX options.
And then we considered 4 sets of parameters for selling. And keep in mind, it's 7 DTE Jade Lizards. And I'm just you can kind of see those. It's $30, $10, $20, $5, $20, $5 at 1.5 the expected move, which he's springboarding from last week, or $20, $10 at 0.5 the expected
And
move.
you'll
So
see all
narrowing
these
it
in the charts.
Yes.
You'll see all of that. So
Yes.
we examined the results from a variety of profit targets and stop loss thresholds, with trades being checked at the end of each trading day at first, and then every 10 minutes throughout the day on the day of expiration.
Okay, that makes sense. And then examined results both for profitability and time spent in the trade. That's, I think, the key here.
All trades were assumed to exercise at mid-price. All times are Chicago time.
Chicago time. We say Chicago Standard Time, but isn't it Chicago?
It's Central Standard Time.
So Central Standard Time or Central Daylight Time. Because remember we got
because we switched.
We gotta correct it
All
on
times
that.
are
We got
Chicago.
corrected on that the other day. Just say whatever time it is in Chicago.
All right, short-term Jade Lizard. So this is looking at a $30 wide put spread, $10 wide calls at the expected move. This is similar to what we placed last week, but we did a $10 wide call. Maybe we made it narrower.
I put this exact one on this morning. Just
Okay.
because I was on the train, I read Jacob's study. I said, I'm going to go with this one, and you'll see why I went with this one in this exact chart.
Now, what I look at,
this is the best chart we've got going forward.
what I look at in every chart is average P&L. But then you have to take a look at other factors too. So average P&L, the highest is looking for a 75% profit target, but you're going to be in the trade for 7 days waiting for that. Versus Liz, tell us why you chose which trade did you choose, and what's your profit target?
And what I love about Jacob's study is he is wonderful, and he's taking a different take from this. And that, I mean, when you're looking at this, there's lots of different takeaways. My takeaway, and I'm going to tell you before we go any farther, I read all the slides, I did all of Jacob's takeaways, which his are right too. I think you take a 10% target, 10% profit, because I would rather $80 in 3 days than $119 in 7 days.
Because if you put on the trade, take it off in 3 days, and then you put on another one, take it off in 3 days, then you've got $160 in less than 7 days rather than 119. So I agree with you. And I'm going to go to the platform just so people can see the setup of this trade. So this is going out 7 days and at the money.
No, it was at the expected move.
Oh, at the expected move.
So this is at the expected move.
At expected move. Okay.
So you've got a $10 wide call spread at the expected move and a $30 wide put spread at the expected move.
So
I collected around 7 something today.
20-30.
Okay. $10 wide.
$10 wide call spread at the expected move, 20-30. And then at the expected move for the downside, I'm just going to go 7,300, 72.70, $30 wide.
Perfect. What do you get?
750.
Yeah, that's about what I think I got, like 730. And my strikes are different because, markets move. But that's about what I got this morning, 7 something, 7 and change.
So,
and I figured 10% of $77 isn't bad.
Okay, here's my question, because profit target 10%, average P&L $80. That's right now 10% is only $75.
No. You got to keep in mind that this is only if it hits that profit target. Otherwise, it stays and you get more.
Oh, that's what.
Yes.
That's why there's confusion because if I'm
You're like, wait just a minute.
In 750, 10% is $75.
Correct. So when that's what is kind of crazy about the Jade Lizard is your average time in this trade is 3.2 days. But if you don't get to the 10%, you could get more because they check it only.
They only check it at the end of the day.
Yes.
They only check it at the end of the day. So
Correct.
It's not
like if it ever hits there.
They don't have the resting GTC for 10% on.
I do.
No, but I think in Jacob's study, just at the end of the day, did it hit? No. Come and look at it the next end of the day. Did it hit?
No.
Right.
So then you can get a little bit more. So you got to keep that in mind when you're going through with these studies.
You've got to be making more than 10% some of the time.
Yes.
Yeah.
But in my mind, this is what I said. So if I'm getting 10% or I don't get 10% and I have to wait a couple days to get to farther down the line, then I'm okay with it. $70 seems a good 10% target.
But if you're putting this on and putting in GTC for 10%, you're not going to have an average P&L of $80 because you're going to have some losses in there. It's not all going to be winners. And the 10% right now is $750. That's with the VIX at 18 and SPX at near all-time highs. So at lower prices, you're going to get less on this trade.
So you know what I'm going to do? I'm not putting a 10% in. I'm just going to put it in today. And then I'm going to put a day order, and then I'm just going to check it at the end of each day.
At the end of each day.
Yeah. I'm going to put a day order in. Jacob, I'm following you. I'm going to put a day order in, not a GTC, which Frank will be happy about. And I'm just going to leave it. I'm doing it right now.
But if you put in a day order every day, it's just like you have a rest.
I'm not going to put it in every day.
You're not going to put it in.
I'm not. I'm going to check it at the end of each day.
Just take it off. Don't even put it in. Just check it at the end of the day.
Just cancel my order. Cancel my order.
Otherwise, you've got to have opportunity. You've got to have times where you're taking in more than 10%, or your average P&L wouldn't be 80.
Wow. Like I said, I know I've been doing these for a while, and what I really like is leaving them.
Yeah, that's what we want, Jacob. We want to study where you.
I want one where we leave them. I've been doing them, and they've been working. They've been very, very good to me. What is it?
Because who wouldn't want the 700? Right.
So Jacob, my next one is I need you nearer term. I need you in like a 2-day or a 1-day and letting them go.
Now we have $30 white puts, $10 white calls at expected move
with a stop loss.
With a stop loss.
And take a look at this. No management will give you $78 in 7 days. It's less than if you took 75%.
So if you're waiting for 75%, fine. You stop yourself off some of the days, some of the times, but you still end up profitable. Even at the profit target of 25%. So stop loss at 100%. That would be if you sell this Jade Lizard for $750 and it hits $15. You close it for $15, locking in a $750 loss.
Yeah.
So it's not. They're not terrible. They work. The only one that doesn't work is the stop loss at 100%, and that's it. No.
I look at this. I look at this, and I like the first one better. Okay, let's keep. There's a bunch of slides. Let's keep moving forward.
Okay. $20 right puts, $5 right calls, and there's no stop loss here at the expected move. So these all look pretty good too. And honestly, you've got less risk in this. Let me pull one up
for the $20, $5.
Yeah. So I'm just going to switch.
You have about $1,600 in risk.
So in this one, in the $10 right call spread, $30 right put spread, we have almost $2,400 in risk. If I shift this to a $5 right call spread and a $20 wide put spread, we have $1,500 in risk. So $1,500 in risk, we're collecting about between $4.50 and $5.
Yes.
And that's not bad. I don't mind that trade either. And that one has pretty good results. And you have less risk.
There is less risk. It's decent results. Like I said, I'm taking it off. I'm doing 10% today, and then I'm off the rails. So let's keep going forward because there's a couple more slides.
And now we've got the same trade with the stop loss. The only way that stop loss makes sense is almost with no management.
With no management.
Yeah, no management.
No management, then you don't have a stop loss in.
Well, no, I think that means you put the trade on if it hits the stop loss, right? Or just, that's just no management.
No management.
No
Nothing.
Stop loss.
Yeah.
Oh.
And then you go into where it's under the expected move. So go to the next one.
Yeah, so then the stop losses never make sense.
No, and the stop losses, in my opinion, when you get to the end, don't put a stop loss in for a Jade Lizard. And then here you go. This is 1.5 times the expected move. So if we were collecting $7, we're probably only collecting like $5.
You're going further
so
out.
all these numbers are a little bit lower.
You're collecting less. It's a higher probability trade. You're collecting less and risking more. I think you're onto something with the first one.
The first one. And the stop, once again here, the stop losses don't work. You can see the negative sign at 100% stop loss. It's not even worth it at 200% stop loss. The no management seems to be okay, but I would rather 10% in 3 days.
I agree. For the best scenario was the
number one,
the $30 wide put spread and $10 wide calls at the expected move.
Number one.
Loss.
Yep, that's right. Okay, let's see what Jacob has to say because I've read it, but I'm going to pretend like I haven't.
Here we have one more going to like half the expected move.
Which is narrower. Half the expected move would be bringing the strikes in, and even then, I'd still like number one.
But this one will be less risk, but you don't win as often because if you're going half the expected move $116. So I go $55 up. So 23. So just $75.80.
Well, this was $10, $20.
Okay. $75.85.
Okay.
And then $55 down. 75.
20.
Maybe I need 75.
You have 55?
55. Okay. So you're getting almost half the width of that $20 right put spread, and you're covering that $10 right call spread. So this one, you have less risk, only $1,000 in risk, but you probably have more times where it either blows through the put spread or blows through the call spread, and you don't make anything.
You don't make anything. You got to keep in mind that with the Jade Lizard as well.
I don't mind this one either.
You have to keep that in mind with the Jade Lizard as well. If it gaps up, you're not making anything.
Well, that's why I think on this one you need a GTC. You need a profit target.
Yeah.
Yeah. Yeah, there I think I would just do 25%.
Yeah. I mean, like I said, there's so many choices here. Everybody can go through and look at this with their own risk parameters. I liked the first one.
If yours had the most risk, $2,200 in risk. If you want less risk, this trade has only $1,000 in risk.
Yeah.
Depends on your risk tolerance.
It does.
Yeah.
Okay. Let's see his takeaways.
Now this is that trade with stop loss. I wouldn't recommend it.
No, stop losses. I think we've debunked that myth.
All right, takeaways. The success of short-term Jade Lizards has been well established over these past few weeks. Today, we turned to squeezing more out of them. And I wonder if Jacob's answering our question by saying no management. So he's giving all those Jade Lizards and saying no management. So there it is, like never doing anything. You've got it.
Well, I do, but hold on. With how directionally forgiving the structure has been, larger profit targets tend to deliver better P&L for strikes placed near the expected move, meaning they happen. While other placements saw similar but faster results by taking profits at 25 to 50.
Yeah, I kind of think this is Jacob's answer to our question of what if we don't do anything because he's got no management on there.
I like no management, but I want no management nearer term. I want a 2-day Jade Lizard, no management. I need instant gratification.
She wants $500 a day.
That's right.
A day with $5 on a.
Yeah.
But that's a shorter term. That's for another week to come.
That's gonna be a story for another day.
After many parameter experiments, we finally found a way to hurt the Jade Lizard. Stop losses without profit targets. Locking in losers did far more damage than it prevented. Though whether a much tighter stop could thread the needle remains an open question.
Oh, I hope that might be next week. The Jade Lizard continues to prove remarkably resilient across a wide range of approaches. The main lesson being that as long as you're taking some profit, it's hard to go too far wrong.
And you saw those Jade Lizards had they all had good results, except once you threw in the stop loss. So however you want to structure the Jade Lizard, and whether it be 5-day, 7-day, 2-day. We haven't done a study on the 2-day, but
2-day, 1 day. I want that.
Yeah.
I want a 2-day, 1 day, but we'll see. We'll see what we
get.
So
that's it for today's Wednesday's study on the Jade Lizard. Next week we'll see what Jake can come up with.
He's got a long queue, so we'll see what he's going to do. But I do like that he's actually tweaking slightly instead of going, being like, and now we're going to go to something completely different. So hopefully we stay on the same Jade Lizard
path. And if
path.
someone has an idea they want Jacob to study,
my idea's already in. It's me. I want the 2-day, 1 day.
It's done. I think it's in.
Is it? Okay.
Oh,
Good.
you mean the 2-day?
I want the 2-day.
The 2-day. Yeah. Did you send that to Jacob?
2-day, 1 day. Yes.
Okay.
And then nothing. Then we sit on it.
But if you want to get in the queue and you have an idea for a study,
send it to us.
Send it to us.
Yeah. Okay. Next up, is it okay if we address box questions?
Yes.
You're so thrilled about this. Let's jump in. So we're going to go, I want you to pull up a box. Go to the 90, do exactly what we did yesterday. Go to a 90-day box, $30 or $40 wide. However you want to do it.
Again, I'm going to pretend I'm in my in-laws account. This is what I do in their account. So let's say, and I will say this, I don't do them all at once. So if you've got...
let me ask the question, because I think we're going to go off the rails of the crazy train, okay? If you have a $300,000 portfolio margin account, okay? If you have a $300,000 portfolio margin account, they can do 5 of those boxes that we talked about yesterday using all of the money. And there is a max profit of $3,200 and a max loss of 0, which is correct. He said, where is the risk? Any insight would be greatly appreciated.
So these boxes...
So pull one up and then let's talk through
I'm going to pull one up. But if I'm taking $300,000 and I'm putting it into boxes, I'm not going to go all in right away. I scatter them. So like they might have...
I would say don't take $300,000. I wouldn't put all of it in. That's all they have in their account. Do not do them all in boxes.
Maybe they want to. Maybe they don't. Maybe that's all they want.
We're not judging what you're doing. I'm just saying where the risk is in here. If you wind up taking in more risk and capital than you have, you can actually invert because the interest rate is higher, I believe, than what you're getting in the box.
No, if you're
That's the answer.
if you don't want to use more than what you have. So here, okay, I'm going to pull up a box.
Yeah.
I'm going to go 90-day. A $400 box uses $40,000. A $500 box uses $50,000. You're going to get more using $50,000 or more using a $600 box. It's going to use $60,000.
It's interest rate. So if you're giving giving $50,000, you're going to make more. If you're giving $40,000, you're going to make less.
So here, I'm going to go 7,300, 4, 5, 6, 7, 8, because that's 50,000. 7,800.
There you go.
How far do I have to go for this? 7,800. Where is it? 7,800. Buy the call spread, and then you buy the put spread. 7,800, 7,300.
That's using $66,000.
This should use $50,000.
There you
go. So this ties up $50,000. You can see it's costing $494. 50, 45. So you've got $545 in profit that will come out of this in 92 days. This will be worth exactly 500, and you'll make that 520. You see it.
And this is very clear cut. Where it gets not clear cut is the PM account, because the PM account will not be holding up that much buying power, but it does factor that in. You're borrowing that money. And I would honestly recommend calling Tasty Support to have them talk you through this. This is a kind of a complex trade in a PM account.
So that question's about, if you have $300,000, you want to put them all in boxes, fine.
Use the notional value.
But then they're using, so in my in-laws account, they said, okay, we want more than just the 5% return that these boxes are giving. So then I don't use it all in boxes. Let's say they have 150,000. I put 40,000 in a box in the 90-day, 40,000 in a box in the 120. I'll do box, 40,000, 80,000, 120,000, leaving 30,000 set aside for other trades. But I've allocated that 120,000 to the boxes. I'm not using that money in portfolio margin.
Well, that's what I'm saying. It's very easy to do in non-portfolio margining. In portfolio margining, you can just be very careful that you're not using more, because then you're going to be borrowing funds.
Because these boxes are like a risk-free trade. They're in the portfolio margin. They're going to release all the buying power, and then you can use it. But then you're paying interest on that money. If you've got $50,000 tied up in a box, but in portfolio margin, it's not holding up $50,000.
Sometimes it holds up nothing.
Yeah, it's holding up nothing. But then you're using that $50,000 for other trades. Then you're paying interest on that money that you're borrowing. Then there's no point to do a box if you're borrowing money. If you're borrowing money, if your money in the goes into the parentheses and you're borrowing money, then don't have that money in a box.
No, I put a box in my account. I have exclusively boxes in my account with the leftover cash. Yeah. And I still leave a little bit just in case. But it is liquid. I can trade into and out of it, but I do it with the leftover cash.
It's really easy where you see all the money you have. You see your net lick and the money you have, and where it says balance. If you click on balance and you have any money in
the
parentheses, then that's money you're paying interest on. I would never have money in the parentheses where you're borrowing that money and have boxes on because you don't want to have boxes on and paying interest on them. So there's nothing wrong with boxes.
You just have to know the ins and outs of them. And like I said, I would highly encourage everybody out there, if they want to, call Tasty Support, have them talk through what the risks are in your own personal account. But it was just easier to talk through it than it was to write all that.
Yeah. So, but some people like to have.
And we are not advisors, and nothing we do is a trade recommendation. I do like the box. We've both been doing them for a long time.
You know what?
But the box is an old trader trick.
It's funny because I've got it mentally allocated where if I've got 150,000 in this account and 120,000 is used in boxes, I only have 30,000 left to trade with, or you're going to be paying interest on it. You have to you can mentally separate it.
Right.
You can mentally separate it, or you don't need to mentally separate it. Just always look to make sure you're never going into the negative where you're trading on margin and borrowing.
Yes. So like I said, options are a fascinating creature, and it is so much fun once you learn how to use them. But I wanted to be able to talk through that. And like I said, get it. You can take it from somebody else too. We've been trading them, but we're not experts in this.
This is not hard though. Like you're making it sound like it's hard. It's easy.
I think it's easy, and I think our viewers will think it's easy, but there are nuances to it.
Yeah, you just don't want to be. Again, if you're in portfolio margin, you should know what you're doing anyways.
Yes.
So the only reason this would become an issue is if you're in portfolio margin and you're using.
Otherwise, if you're not, they won't let you do that. Like if you tried to press that button right now in this account, they'd say, "Sorry, Jenny Andrews, you can't do that."
Oh, because we don't have the 49.
Yes.
But as someone who's trading, what you're worried about is only in portfolio margin. And if you have portfolio margin, you know what you're doing.
Yeah.
This is easy stuff. This is not hard.
Yeah. Well, it's two combos. So if you break it down to its simplest fact, it's a combo and a combo. Some people like to look at it as call spread, put spread. I go combo.
Yeah, I just think call spread, put spread. I think I'm buying the one call spread, selling or buying the other put spread using the same strikes. You need your max loss to say 0 to know you're putting it on, right? And again, as wide as you make it, if I want to make this is a $500 wide, so I'm using 50,000. And you see I'm getting $515. If I made it $400 wide, so I move these to instead of the where was I 7,400 instead of the 7,300, go the 7,200. Then you'll see my buying power will cut by 10,000, and I'll be making less interest because I'm using less money. So here I'll have 40,000 tied up. Why did this switch to 60,000? Where was I?
You made it wider. I don't know. But she's right. Like the narrower your box, the less. I can't really see what you're doing in either one.
So if you make it $400 wide instead of $500 wide, it'll be $40,000 in buying power.
Yeah.
Or $30 wide, $300 wide is $30,000 buying power. But you're not going to get that much on $30,000.
It's going to get less and less.
Yeah,
you'll get $100, $200, but like here you got $400 because it was $5,000 wide.
But it's not bad, and honestly, it's adding up. When my in-laws, where they said, "Oh, manage this money," and I've got their little boxes going. It's adding up. Their SPX year to date, it just keeps building and building and building. Every time one of these boxes is coming off, their P&L keeps building and building.
Now, if somebody does not want to do it themselves, you can just go to BOXX. And you could put whatever nugget you want in it. It's the same one for one.
And you see this Alpha Architect 1 to 3 month box ETF.
Yeah.
So you buy it. Now, I don't know if they have any fees involved in this.
It's the same as what we have. That's what I've been told.
Okay. So yeah, I don't know if there's any fees attached to this.
I don't either.
Know.
I know the person was there.
I would look into that. Or you can go into something like, TBIL.
Yeah.
And
that is exactly the same concept.
You're gonna make money. Yeah, right. So it's not tricky.
They're interest rate plays.
Yeah.
They're just interest rate plays. So choose your favorite interest rate play. But all I said, it was easier for us to talk through that scenario than it ever was for me to write all that down.
Answer the email. Okay, back in the platform. We put this on 2 days ago. We did a Bob on Fire, and I know the Bob on Fire. We go out to January as a long-term trade,
and Oklo,
and. We get a lot of questions too on why we say, "Oh, you make half the move. You make half the move." You'll hear us say that on this Bob on Fire trade. You could see when we put this trade on, Oklo was trading our long is the Jan 6100, so it should be right around here. This might just be wide markets.
Jan 60, yeah. No, we might have been just underneath it though. So let's try, because here Bob on Fire is up $5. Not Bob on Fire. Oklo is up about $5, and this trade is up today just about half of that, 282.
But you see, if we start with the at the money call, and we have the 60 call, and it's trading 60. But so maybe when we put it on, it was trading 50.
So if you 60. Can you go into the January option cycle?
Sure.
We might have done the just out of the monies, because if you take a look at this, it's just in the money now.
Right, and I think it was trading maybe 57 when we put it on. And
so we can take profits on this.
We'll see if we can. If we put it on for 45-cent credit, and we take it off for 140 credit, $1.40 credit, then we'll make 185.
I wouldn't penny this down or up.
No.
That's part of the problem with Bob on Fires is you've got some wide markets.
And one of the problems with some not so liquid products, when you're going out to Jan, there's not a lot of activity. I mean, look at the volume in Jan. There's barely any volume.
Yeah.
So,
anything else?
Look at this. Look at the 35 put. We're the only one. There's one open interest. That's us. We're the only one.
That's pretty funny. Okay, the other thing that I would like to address, Jenny, I don't want to do anything with it, but we should address it, is our XSP that we put on yesterday, where we have the double diagonals.
So here's the hard part. We said with this trade, you have to look at it the end of the day. If one side or the other, the calls or puts, are in the money, you got to close both sides. So here are calls in the money, the 739, 735. This call diagonal's in the money. We have a call diagonal. That call diagonal's making about $190.
Yes, that call diagonal is, but it is in the money, and we're losing that much on the put diagonal.
Yeah.
Yeah.
And we'll say this all the time with double diagonals or double calendars. What one side makes, the other side loses. But this trade was meant to have both shorts expire out of the money and looking for a move on Nvidia earnings.
I still say we wait till the end of the show to close this thing.
Well, I have this trade on. I'm going to look at it at 255.
Can you close this at 255?
No.
I can't either.
No, not a chance.
No. So we'll take a look at this after the show, or maybe we'll close it on the train. However we want to do that on the way home.
I mean, maybe so basically, if we close this call spread and take the,
you can take the profit
out of the call spread, the put spread's worth $1. If by chance Nvidia's down and the market's down tomorrow on Nvidia earnings, then the put spread comes in.
So here's the deal. We could close the call spread. We can close that short put. We should leave the one. Oh, I guess we should leave the one put. The one's only worth 2 cents. So you can close the 0 days,
and
both
just leave
0
the
days,
734,
and leave the 734.
So
let's do it.
So this diagonal, 735, 739, it's $4 wide. At the end of the day, it'd be worth $4 at least. And what's it worth now? $4.72, because that one day has a lot of premium in it.
Got a lot of juice.
Okay, I'm going to close that.
Close all three. And close that one put too, because it's only 2 cents.
Okay, so I'm going to close the call spread of it, take the win on the call spread. The put spread is a loss. The only thing that will save this little put is down day tomorrow. But we didn't lose much. So basically, that call spread made money, the put diagonal lost, but we have a very small loss, and we've got that long put.
I consider that a complete and total wash.
But you know what I brought up yesterday during the show? Now, we're moving around a lot, but what I thought of in this one day, when we put this on, in the one day, and I know we have this, so pretend this isn't here.
Okay.
Let's say we sold $1 and $1 today for tomorrow. By the end of the day, because I noticed this from my position yesterday, by the end of today, already like $50 or $60 had come out of this. So just, have tomorrow's on for a day. Like you close it before the end of the day.
It's not bad.
No,
they're not bad.
But it's a lot of buying power. $14,000.
It is. That's a lot. I didn't see that, and I didn't expect that.
But you could almost do 2 calendars. The one, well, I don't know.
Okay, but that was XSP. We did that. I do want to make a trade in Nvidia. I do want to do something in Intuit too. So we've got that XSP, but that XSP, we were doing it on the Nvidia earnings, but it could be on the Intuit earnings. They could all go down.
Now, natural gas, we've got 6 days and it's coming down. We need a little bit of more downward movement into natural gas, but it is coming down.
But we have $400 locked in. Ish, 3-something locked in.
Our ZB, which we put on 2 days ago, which was a big loser yesterday, bonds are really having a little bit of a bounce back today. Look at this move. Look at that big bar.
Woo! Big bar, really big bar.
Okay.
But we're back to unchanged, so we're up $20.
American Airlines up 84 cents. We only have one put, but
everything in the market is up right now, which is insane.
Let's go to. I like going to the watch list and taking a look at market indices. And what do we want to go to? Let's just go to the S&P 500. See what the biggest mover is to the upside today.
Just be very descriptive to me.
Okay, the airlines. Number one biggest mover today, United Airlines. Then the third biggest mover, Delta Airlines. We've got the airlines.
Is gas down?
Oil
is that why?
Down 5%.
Okay, there you go.
There you go.
Your oil-sensitive stocks have just rallied because oil's down 5%.
I didn't buy my plane ticket yesterday.
I thought you did.
No, I didn't because I'm running into some issues of my companion pass. I got to change my.
Oh, okay, gotcha.
Anyway, I've got to change my companion pass, which is going to mess up future flights, but it delayed me. It delayed me in buying my ticket yesterday. What else? AMD up 8%, and Carnival Cruise Line, Liz.
Oh, good thing.
Let's take a look at what's going on in Carnival.
We do have to go to live tweets as well. We're taking live tweets, and I do want to put on the the Nvidia and the Intuit earnings.
So the cruise lines, I wouldn't mind getting back into Carnival, especially because guess what the rank is in Carnival?
Okay, I can't see it, so I'm going to guess right now. 62.
132.
Do they have earnings?
I don't know. They have earnings not until June 23rd, after June expiration. The rank in here is 132. What the heck is going on in Carnival Cruise?
I don't know.
I'm gonna load up some puts.
So what can you get, and what is the price point?
To the June 18th, 29-day. Carnival's trading 25.66, and its recent range is.
So you're going to the June 18th put and it's trading 25.66?
Yeah. No. June 18th, that's the date.
Oh, I was like, the 18th put.
But, okay, so if you take a look at the chart, you can see it's near the bottom of its recent range, but we know it's been 16. I remember the 16 days in Carnival, but the 23 put, when it's trading 25.65, is 57 cents using $247 in buying power.
Press that button and let's go to Nvidia.
Maybe this is a good put for JD and Logan.
I'm getting them out of puts. He's a straight up SPX trader. We're closing everything for him.
Yeah. Logan likes puts.
Yeah.
It adds up.
JD wanted the puts removed from his. Remember that?
It adds up. The puts add up. So 23 puts for 58 cents might not seem like a lot if you're only doing one, but to $147, $58. It's not bad. If you think about it, if they're making $58, you got a handful of products, it adds up.
It does add up. Hit it. I don't mind having it in there.
Back into Carnival. Okay, into Twitter.
If you go to Twitter, because I know there's Chris King who came in after you posted our show with an Nvidia idea, with an Nvidia earnings trade, right above it.
Okay, Chris King, welcome, new tweeter. I think
so. Yeah.
Nvidia earnings trade idea: buy the at the money put for today and sell a June out of the money put or put spread for a credit. Okay, so this is. It's
Graph
kind of
looks like a zero risk trade.
But it's a downside play. I would call this a downside
play. It is
play.
a downside play. We have a downside play, but let's look at it for Chris. So he's buying the at the money put for today. So buy the at the money put for today. And then sell a June, buy the at the money.
Okay.
How much is it?
It's $6. You're gonna have to sell a pretty wide put spread to cover the $6.
Or sell a put or a put spread, a June put for $6.
Then you would go down to June and sell the June 214 put for $6.
How wide is that spread?
It's you are buying the 225 put in the 2-day.
Okay.
And selling the 214 in the 29-day.
It's not bad. It's going to hold up some capital because I think it holds up whatever that put is because you're.
Okay, but here's my.
It's a bearish trade.
But I don't know because so you're selling the 214 put. It's only $10 down, and if we go down $10, if we go down $10 to your 214 strike, that 214 is going to blow up so much that you make $10. You're making $10 on the long put you bought, but there's going to be so much volatility blow up in that 214.
So I would say this isn't an overnight trade, right? So this would be, I think it's going down, but then I think it's going back up.
Right. So
that's what you're looking for.
Yeah.
You're looking down on earnings, up after earnings.
So whatever it's down, then you sell out your long put this week, and you've got this short in the money put. You basically have a covered call then that you have to wait for Nvidia to pop back up.
So if that's your assumption, down on earnings, rise like a phoenix from the ashes after you buy back your at the money put. That's what that trade is.
Right. But like if we go down tomorrow, I don't know.
Oh, he says it looks like a zero risk trade to the upside. And it does.
It has no risk to the upside.
It has no risk to the upside. But I don't know that you'd make any money.
I don't think you'd make any money.
So there is no risk to the upside?
Okay, so
is he collecting anything over?
No, because then your long is going to roll off, and you're going to have this short. And if you want to get out of the short, you're going to have to pay to get out of the short. So that'll be a loss.
Yeah. I get it.
Want to close it,
and you have to look on the graph. When you're looking at this on the graphs, they don't know how to say the risk in there when you're crossing streams, meaning like you're crossing over two different calendars. What do we want to do in Nvidia? Are you going to sell the strangle? No, it's too much capital. Right?
Do you want to just do a crab because it's cheaper than a diagonal? Thinking it might go up, but not up too much.
Sure.
I don't know.
I like that.
Let's see. So,
well, we can't afford the strangle because didn't you say it was $14,000 or something?
Yeah, and I'm not going to sell the strangle. I'm not going to. Earnings are never going to take me out. I was kidding.
Wait, what'd you say?
I said I'm not going to sell the strangle. Earnings are never going to take me out.
You sold it already, didn't you?
I said I was kidding. I mean, it might. If it's going to be a non-event, I'd sell an iron condor, but I'm never going to get taken out with naked options on earnings again.
I agree.
Okay. Ever since DocuSign, that was my last, the last time that's going to happen to me. All right. So if I do this ratio spread here.
The hard part is every time we look at a crab, I'm just going to say this. I don't know the pricing yet. Every time we look at a crab, I say, why not we just do the diagonal? I'd rather pay a little bit more.
Let's just look.
Okay.
Because this would mean not too big of a move, just to the expected move.
Okay. So how wide is your spread?
237, 245. That's 750 wide.
Okay.
The ratio spread. Here, pull it up. Follow along.
It's hard for me to follow along. I'll have to look over this way. Go ahead.
Okay, so 237, 245.
So you're $7.50 wide.
On that ratio
and you're collecting.
spread.
Wait, I want to see what you're actually getting for it.
367.
So all I'm looking at is that one that you're buying. You're $1.35. Okay, got it.
Then here's where it gets tricky.
You got to make it cheap. You got to go real close.
So then just the 6-day, this is cheap. So if I buy the 225, $3. So I've got from profit potential from 225 to 237, $12, right? 225, 237, $12 in room, but I'm paying $330. So like $900 in profit potential there. Up to 227. I don't mind this.
Are you okay? So yes, but I just put in the diagonal as you were talking, and it's 390.
How wide?
Same ones. 225, 237.
And it's only 390. How can that be?
Check it out. 392.
For the 225, 237.
Because you're only in. Hold on, let me flip it. I think I have it in backwards. No, I think I put it in backwards. Hold on. No, it's
450.
It's 450.
It's 450.
But once again,
I just got the alert. There he goes.
Oh.
Leaving. My son leaving school the last time on his way home.
That's so crazy.
I know.
Did it give you the chills?
I feel bad for him.
I know. Well, that's what I thought. I was like, it's leaving college. Going to college is exciting. Leaving college, you're working for the rest of your life.
I know. But
yeah.
He'll be
great. He's got a great job. He's a great kid.
Okay,
Can't wait to have cocktails with him.
It's 450 versus 330.
Let's go 330.
Now,
I like your crab idea.
Again, they're selling 237.5s in the 2-day, buying 245. That's 750 wide.
750 wide.
We have one long 225 in the 6-day. This is 330. So if we have a long 225 and we're paying through 330, our break even's 228. 228. Above that, we've got to 237, so that can make $950. And then this spread's 750 wide. So even if it blows through them all, we're guaranteed to make something.
I like it. It's funny though. I'm listening to you talk through it, and I like you talking through it because that's how I would have preferred to set it up. If it blew through it, I would rather the diagonal. If it blew through it and we made nothing, I would rather the diagonal.
I mean, of course, the diagonal has more profit potential,
but it also has more risk.
It has more risk
and more loss to the downside. This will be a loss if Nvidia goes down.
If Nvidia goes down, we'll be out 330. And for this account, I'd rather be out 330 than 450. Again, there's a lot more profit potential, but if we just go to the expected move, then it's perfect.
I like it. Let's ship it. We haven't done a crab in a while.
And this is a Nikki Batista, Mikey Butler trade. They came up with the crab.
Yeah,
and I do like it.
What does the crab stand for? It's a ratio.
Calendar
butterfly.
Something like that.
I don't even know, Carl. It's what every client does.
So I like it.
Okay. 335.
And we're filled. Good job.
And that's what I think I'll do. 335 in risk, slight upside play. Although I did. I
thought you did something already.
I did my trade already. I bought a call spread and sold a put spread to pay for it.
Okay.
But with Nvidia up today, when I put it on, Nvidia wasn't up. I might take that off
and put this
on the crab.
Yeah, because I was like, I thought you did the strangle, but it wasn't the strangle.
I did that. I bought a call spread and sold a put spread to pay for it.
Got it.
But that had a lot more risk. Because my put spread was pretty wide to pay for my call spread.
Yeah, it did have a lot more risk.
So I'll take that off and put on the crab.
Okay, can you go back and go top down? We're gonna get to you, Mikey, because this is for you. But top down, Brian.
All right, top down. Heisman's brain. Hi, Liz and Jenny. Any idea?
I got an idea.
Oh, an idea. Sorry, I can't. Can't read today.
Because Bobby Lee, that's what I'm saying. It's somebody. It was an idea he got from Bobby Lee around earnings to buy an iron condor and put the shorts at half the market maker expected move. So can we look at that? It's from Bobby Lee. We loved Bobby Lee.
Yeah, we loved Bobby Lee.
So let's. So he's saying buy an iron condor and put the shorts half the expected move.
Buy an iron condor.
So let's go into something with earnings.
I'm just going to go. Let's go into it. Okay.
I don't care. Yeah.
So we've got an expected move of $33. So if our shorts are going to be half the expected move, $15 down. So 385, 370. That's my short.
Yep.
And $15 up, 385, 395, 400 is my short. So if we're buying the iron condor, here we're buying $5 wide, put spread $5 wide, call spread, paying $370 for it. If it has a move beyond that, we make $130.
It's not bad because when you think about it from that perspective, if it moves even a little bit in one direction or the other, that might be profitable.
Well, it's got to go through it. A $5 wide if it goes
because you're doing both sides.
Yeah. You're doing both sides, but if it goes to its expected move, you'll make $150.
Yeah, that's not bad.
Yeah.
It's not bad.
It's Bobby Lee.
You're paying $370 for it though too. So if it doesn't move at all,
you're probably going to get out of these tomorrow for something.
I know. That's why I said I had to go to that one. I love Bobby Lee.
I know. Thanks, Heisman's brain, for sending that to us. Mikey, happy biggest earnings call of our lifetime day. Of course, we'll play Nvidia, but in XSP, this is what I have at the moment.
Ooh.
So we need some pullback so I can get that second butterfly in place.
Oh, that's what I said. I did it for you earlier, but there you go. There's your genie blank. You're going to get that second butterfly. I know it, Mikey.
So he's got this one and then this other big profit range down to the bottom. So good luck, Mikey. Hey, Mikey, we want some pullback too, actually. Well, if Nvidia goes up, great, our crab will make some money. If Nvidia goes down, great, our XSP put will come back in.
There you go. We're locked and loaded no matter what.
We've got both sides. The crazy thing in XSP mine this morning, when we were on the train, my short call for today in XSP was a dime, 11 cents. And I thought, should I buy that back? And I thought, oh, no, wait, we're not getting back up there.
I know. Don't you hate when that happens?
Because it was the, and I know it was the 743, mine, and today's, the 743. And it was 11 cents this morning. But there's still a chance it's going to be out.
Yeah, there's still a chance. It's still just out of the monies. Okay, let's take a look at Intuit. We've got about 90 seconds left.
Oh yeah, we're almost done. Intuit, $385. I think it's a tough trade for me.
I'm going to avoid Intuit just because 1.7 million versus 5 million shares that have traded in Nvidia. All eyes are going to be on that. What else was there? John Deere.
Here's what I don't mind doing, because they're pricing in a 10% expected move. I don't mind going to the expected move and doing a 250 wide, 250 wide, 250 wide, getting $1.45, risking $1.
That's not bad for a 250 wide.
Yeah.
Okay, ship it.
Right? You're risking $105 to take in a 145.
That's not bad at all.
And that's because they're pricing in. They're pricing in a double the expected move. Yeah, we do. We asked for that. I think I don't know if they're ready.
I don't think they're ready to give it to us.
Since they're pricing double expected moving into it than Nvidia, let's just sell that Iron Condor.
Yeah. Okay, what else? I know there was, I'll go back to it too, so you don't have to do it, but I think it was John Deere.
Oh, in earnings?
Yeah.
Yeah.
So we had Elf, I don't care about, Intuit, Walmart, and John Deere. Is there any? Walmart, WMT.
That's on the list for today?
It's on the list for today. WMT is Walmart. I know that because my fit for a long time.
Walmart was up on target earnings yesterday. Yeah, Walmart was up yesterday.
Walmart and John Deere. Now, granted, these are your two all-American companies. I don't know that. I still think all eyes are going to be on
Diagonal is going to be cheap in Walmart.
If you can get it in the next 7 seconds.
Yeah, okay, I'm going to do this. $2.94, $7 wide.
Oh, ship it. So we're going to do a very quick earnings diagonal, sell the near term, buy the at the money and the farther out one.
Yeah.
Profit potential.
Don't let me forget to put all these in my account. Sometimes I get so mad the next day. I'm like, geez, we did all these on the show, and by the time I'm in my own account at home, I forget about some of them.
We will take a look at these on the train. All right, Jenny, we did it. We're out of time for the day.
We are out of time. Everybody have a wonderful day. Who knows what?
Oh, no kidding. All eyes will be on Nvidia. And remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you tomorrow.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade. Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
What sparked my interest in trading was the probabilistic nature of it. I used to play poker a lot, still do, and if you understand the math for poker, you realize that it's a probability game, it's a number of occurrences game, and you want to put yourself in good spots the majority of the time and have good risk management. All of these things apply to options trading and trading in general, so that was my initial pull into the trading world. My trading style really revolves around implied volatility analysis. I like to look at specific markets, look at the differences in implied volatility between the weekly cycles and the monthly cycles, see if there's certain strategies that might play into that more than others. My favorite strategy of all time is a short put, simply because it allows you to acquire 100 shares of stock at a lower cost basis. And it's a position you can manage or push forward in time forever if your trade size is small enough.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
What sparked my interest in trading was the probabilistic nature of it. I used to play poker a lot, still do, and if you understand the math for poker, you realize that it's a probability game, it's a number of occurrences game, and you want to put yourself in good spots the majority of the time and have good risk management. All of these things apply to options trading and trading in general, so that was my initial pull into the trading world. My trading style really revolves around implied volatility analysis.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
What's up, Tasty Nation? Welcome back to the show. This is Options Trading Concepts Live. My name is Mike. I'm here with the one and only Ryan Grace. How you doing, Ryan?
I can't complain, Mike. It's Wednesday.
Correct.
I'm off for a couple of days.
Oh.
This week, next week.
Love it.
Have some vacation to burn that I can't carry into the next fiscal year. Maybe you're in a similar spot. I think a lot of us are. Jamal's out today, so he is missed. But yeah, man, can't complain. Been some opportunities in the markets. We're going to talk through all of that here today. How you doing?
Doing good. Doing good. Yeah. Monday off, Memorial Day, holiday. And a lot of people are taking some time off, which is good. Got to do it. Are you sticking around here or are you heading somewhere else?
Yeah, I've got nothing exciting to do. I am moving at the end of the month,
Nice.
so I'm packing.
That's always fun.
I'll get out, enjoy some nice weather if we're blessed with some sunshine here.
Love it. Love it. Love it. Yeah. I'm in the same boat. Going to Lake Geneva for Memorial Day weekend, so that'll be fun. It'll be fun.
Play some golf?
Yeah, oh yeah. Some of my friends are playing Saturday, Sunday, and Monday. I'm like, you guys might as well just get your PGA Tour cards if you're doing this. And some of them have newborns, which is like...
That's impressive.
Yeah. Impressive that the wives are letting them just go out whenever they want. But it's early morning tee time, so that always helps.
Yeah.
But yeah, markets are ripping intraday here. Kind of a nothing open, but then all of a sudden, E-minis up 65, NASDAQ up 400, Dow and the Russell up 1% and 2.25% respectively. Bitcoin catching a small bit here, up 720 points, and ETH up 1.25% as well. big sell-off in crude oil, down $5. That is interesting. Same thing with natty gas, down 3%. So everything up except for energy, even gold and silver are moving higher here. But bonds and notes have been the big movers the last couple of days. Bonds catching a bit, up 1%. Notes up 0.5%. It's kind of wild. Is there any macro picture you're focusing on here, or is it just up and to the right in the equity space?
I mean, you've had some weakness. I think, you look at momentum as a factor in the market, certainly underperforming over the last couple of days. And, to some extent, I think the underperformance was relatively extreme over the last couple of days versus what we've seen in some time. That said, I don't think anything has changed from the macro perspective. I think you're seeing that with what's happening in commodities. Sure, oil's pulling back here today on the same headlines that I think, the market is trading higher off of, which is that, again, we are close to a grand deal with Iran, peace at last. You are seeing on the oil front some reports of some tankers making it through the Strait of Hormuz. But that said, I mean, a lot of this is just being driven on, that same headline that we've seen time and time again. We'll see whether or not it's real this time. But I think due for, a little bit of a bounce, given the kind of short-term correction that we've had. But just, again, looking at the macro picture, I mean, I think it's pretty constructive. Growth up, inflation up. You don't want inflation to get too hot, of course. You do have to look at the other side of this and see that, Fed funds are no longer pricing in any cuts, looking to be pricing in a hike as well. But no real change there. I think you stick with what's been working. I'm still a little skeptical of, momentum at this stage. I think maybe there's a little bit more to go, but you had an opportunity to buy the dip over the last couple of days.
Yeah, definitely. And the market was selling off, but volatility wasn't moving. Like vol futures were actually, yesterday when we were down like 60 points, vol futures were basically flat. Vol futures also have a pretty steep contango. And I think that's where, I kind of hang my hat. If I see a market sell-off and a vol pop, then it's like, okay, maybe something's shifting here. But any market sell-off not paired with a vol pop is kind of the buy the dip situation, at least from my perspective, and that's what we're seeing today. But this is definitely on the back of that announcement of potential peace at last. And I think that is carried through the crude oil markets. I want to say this is the most flat backwardation we've seen in a long time. Only 4 points between these contracts. We got as steep as 15 points in the craziness of the war. So we'll see. And these back months here kind of settling around that mid 70 level. So maybe you see some more price premium come out of these markets, but I think we'll probably stay backwardated for the time being. But it is interesting to see that when you look at the percentage change between the N, the Q, the U, like you're getting a ton of premium out of this N.
Yeah, I agree with you. I think you see this backwardation stick around. Even if the Strait of Hormuz were to open today, it takes time for those ships to transit the strait, to unload their cargo, to come back. You have to also wonder with some of the supply shut-ins, production being turned off, can that be restarted immediately? Probably not. So I think structurally, as we've talked about before, it doesn't mean that you can't go lower, but I think you have, some support in terms of higher prices, your kind of sticky prices. Maybe it's between 80 and 100 or 90 or whatever. But I don't think that we're immediately going to go back to where we were pre-Iran war.
Yeah, for sure. Nvidia earnings.
Yes.
After the close today, the elephant in the room. We will definitely look at a bunch of trade ideas and questions for Nvidia earnings. So if you want to join us on the YouTube channel, we're streaming live on Tasty Live. You can throw in your trade ideas in the chat and we'll get to them shortly. I also pinned the News and Insights tab in the YouTube chat, which has a bunch of written content. Looks like there's 3 different pieces on Nvidia, maybe 4 different pieces on Nvidia. I've got a direct earnings preview, and then we have some other indirect pieces from Ilya and Vecchio. So check those out before the announcement today after the close. Still pretty light in terms of implied volatility. Stocks at 225, only an $11.80 implied move, which is about 5%. That's on the lower end for tech stocks. But at the same time, 11 points for the 2-day cycle, only 22 points for the 30-day cycle. So still seeing heightened implied volatility for the announcement itself. And I would not be surprised at all if you see a move greater than 11 points for Nvidia. But the last 8 quarters or so, it's actually been inside the expected move for the most part. So could be priced in. I mean, it's already had a big rally up here into this upper 200 level. So we'll see. We'll see. Should we pop over to some slides? I know you got some slides for us.
We do have some slides. Let's take a look at our crypto market update here for May 20th. Spelled everything correctly.
Hell yeah.
We'll jump to the first slide here. We got a performance dashboard. A couple things to flag. You know, we've been in this range here between 70 to 80 for what seems like forever now, last 3 months. Got up to 82, 83. We've pulled back, so we've got a little bit of weakness week over week. Trend looking a little bit better in there on a 3-month basis for Bitcoin, for ETH, though ETH has underperformed. What I do want to flag, though, is recently, after taking a look at 80,000 in Bitcoin, we've seen everything reverse. Now, maybe if there is some positive news between the U.S. and Iran, we see the stock market here accelerate. We'll take a look at the correlations in a moment. But if we do see that through the end of the week, then you could get back into bullish territory on a daily basis. But I want to flag that price momentum has reversed. It was bullish pretty much for everything here, and now bearish for the majority of the tokens or coins that we track. Neutral for Bitcoin across the board, whether that's the daily, weekly, or monthly time frame. But not looking so good for ETH or Solana, given that we have bearish price momentum across all of those timeframes that we track. What worries me, and we've been in this environment for a while now, is that you're bearish on a weekly and a monthly time frame. So you went from bullish to very quickly neutral to bearish within that bearish trend. Not typically a positive sign. I think there could be more weakness before it's all over, but we will let the prices maybe dictate what we do. That said, I think you stick with Bitcoin over everything for now. We'll look at relative performance in just a second. Bitcoin is down about 12% year to date. Everything else that we track against that, with the exception of some areas of the market, one being hyperliquid, not something that's tradable through tastytrade, but certainly something that I think you should have on your radar. That's outperforming. But the majority of alts versus Bitcoin are underperforming, and underperforming by quite a bit. So not a ton of good news when you see price momentum flip like this. That said, it could just be short term. We'll see where we get to by the end of this week.
Yeah, I'm looking at the crypto watch list on Tasty right now, and I don't think I've ever seen this, but almost every one of these coins is up on the day. Uniswap, Sui leading the charge up 4.5%, and then you just have one that's down 0.09. That's Arbitrum, but kind of interesting. Every single one of these is up on the day.
Yeah, well, we went up for the majority of April and the first half of May here. And when we were looking at the correlations, which if we want to jump ahead to that really quickly, I think it's slide 4 maybe or so in the deck here. But we'll look at our cross-asset correlations. We've noted that both on a 15-day and 30-day period, very, very strong positive correlation between crypto. We use Bitcoin as a proxy for most of crypto here, and equities. And so when you saw the correction and the momentum taken out of some of these names and some of this trade in equities, you saw that as well spill over into Bitcoin, and you saw a little bit more of that volatility over the weekend. We had some weakness. So not surprised that as you have a kind of rally on maybe a headline here, you are getting a pop, but that's taking us back to, it's called 77.5 right now in Bitcoin, nowhere near where we would need to be for me to start to think differently and really think that we're out of this bear market. I think the range in there is still 80 to 60, but we shall see, I guess. But yeah, if we could throw those correlations up on the screen here, we can take a look at those.
Should be slide 4, I believe. Yeah.
Yeah. So here's what I'm talking about. It's weakened a little bit, but still a strong positive correlation, especially on a 30-day basis. Now, we were at 96, 97. So we're at spot 86, spot 88 versus the Russell. But what this is indicating is that, at least looking back for the last 30 days, this has all kind of been the same trade, moving in the same direction. So equities up, crypto up, risk assets up, risk on, risk off. If that changes, well, we'll let you know. On a long-term basis, the relationship between equities and crypto is about 0.4 in terms of that positive correlation or slight positive correlation. Not extremely strong, but as you would imagine, typically positively correlated historically. Elsewhere, not much to talk about here. Slight inverse correlation with the dollar. When you look around the rest of the market too, maybe that is the catalyst for some of the selling pressure here. You had a very strong reversal in the dollar, and you saw that obviously show up in a bunch of different cross currencies or currency crosses. And then you saw, just that rip higher in rates. So a lot of that in terms of inflation expectations based off the move that we've seen in commodities, which is as a result of supply constraints here versus the demand, of course. But that's what's driving this market. If we go back to crypto, take a look at our expected moves on slide 2. So these haven't changed much. Range short term here, we'll call it 70 to 80. For Bitcoin, ETH, looking for about a $150 move, puts you back just below 2,000 here on the downside in that 1 week, 1 standard deviation move. Solana not doing much. Doge, it was looking a little bit better over the last couple of weeks, but has also pulled back here. XRP has just been quiet, to put it lightly. Vol is near yearly lows for both implied and realized, so keep that in mind here. That said, you do have a pretty wide premium between implied and realized volatility, so you continue to get paid in volatility terms when you're selling options out of the money for ETH or IBIT. That's worked, and I think when you have these sorts of spreads in here, you want to probably take advantage of that. If you do have a position, you can go out and sell some of those out of the money calls as you wait for this to maybe move higher. But yeah, low vol environment, just leaking lower here, Mike. Not too much to talk about there, though it could change given we have some positive news on the regulatory front. Clarity Act has made it through the Senate Banking Committee's markup, should go to the Senate floor for a vote. Hopefully it passes, makes its way to President Trump's desk. And then also, I don't know if this is true, if it's real, but seemingly, based on some headlines, getting closer to an announcement around a Bitcoin strategic reserve, U.S. crypto reserve. We'll see. Yesterday I saw that headline, and the price didn't respond in the way that you think it might when you see that. So always something that can change the volatility picture. But right now, just be aware we're at extremely low levels of volatility.
Yeah, XRP is actually wild. It's like a straight sideways horizontal line from February till now, just chopping around between that 137 and 16. Kind of wild to see. Yeah, I have at times been looking to buy 135 in there and then just quickly sell out at 140 and using the XRP futures or the micro XRP futures to get a little bit of leverage because to your point, not moving very much. So when we're talking about a 5-cent range, you might want to use a little bit of leverage and the futures offer that. So that's been a level that I've had an eye on. I've been buying a little bit of Solana, low 80s here on the pullback. Had bought a little bit of Bitcoin, mid 70s, and we'll buy that a little bit lower. The bigger range in there is 60 to 80. So keep an eye on 60,000. That would take us back to that February low and right around what is that 200-week moving average, which historically throughout cycles has been your significant or kind of, I guess, support level. So those are some of the areas that I'm looking at. Would definitely add to that. I mean, look, I'm bullish, but you have to trade the market that you're in, and we've been in a bear market since February, but we topped out in October at 126. So those are the expected moves. Let's jump to the next slide here. Quick look at relative performance. I've already hit on this. Bitcoin market cap dominance at 61%. So basically 2/3 or close to 2/3 of the market, and that has been strengthening over the last couple of months. If we track momentum for Bitcoin market cap dominance, it's bullish, very bullish. And then on the other side of that, ETH is not performing very well versus Bitcoin. Solana, the same thing. So Solana recently, as ETH has been a lot weaker, Solana has outperformed. It's held up versus that pullback in ETH. But point being,
everything that we're looking at versus Bitcoin is underperforming. I think, again, in this market at this stage, you still want to be buying dips in Bitcoin versus other alts. Sure, you might time something and you get that pop, and we've seen that, just recently with Doge. But I think from a trend perspective, looking at this over 1 to 3 months, nothing has changed to make me think that you really want to be putting a lot of new money into anything else versus Bitcoin here. So that's how I think about it from a relative performance perspective, a relative value perspective. If we jump to the next slide, we have our correlations, which we've already hit on. And then we jump to the next slide. Let's take a look at a similar approach here. How do we measure momentum and kind of an update on the broader market? And then we'll switch gears from crypto. Bullish, my friend, very bullish here. Given the recent correction, you did see a short-term price momentum in the Russell move from bullish to neutral. But we're back up at, over, I think, 2,800 right now. The high in there is probably about 2,880 or 2,900 is where I would look to. So that's certainly changed. We could be, by the end of this week, back to bullish price momentum for the Russell. Gold and silver with rates moving higher, just the speed at which rates have moved higher. I am not looking to step in and buy a dip here. I think there could be some more weakness there. Gold short term has moved from bullish to bearish. And then there's that move in rates that I'm talking about. 13 basis points in the 2-year in the last week. 40 bips in the 2-year and the 10-year in the last month. Momentum for rates is higher. We took out 4.5 on the 10-year. It's very, very bullish there in terms of momentum for yields. And so, I think that's just going to make it harder for gold to outperform here, and to some extent silver. So I would stay away from precious metals, at least here short term, until that changes. Volatility has been sticky around 18, 19, a little bit lower, though we are starting to see momentum breakdown in there. Vol has come in quite a bit. That was about 120. It's 81 right now. So in that volatility column, that is realized volatility. So yes, the VIX is 17, 18. S&P realized over the last 30 days is about 13%. VIX vol 81%. And then you can see that just shift in the dollar index here. 1% in the last month, pretty quick move there. 2% is not a huge move, but for a currency, for the dollar, decent. And, you're seeing price momentum shift back to bullish there as well. So that's where we're at. I think, again, it's a market environment in which when you look at, the economic signals, you're seeing acceleration in the rate of change year over year. Of course, inflation is on people's minds. You've got a plus 5% 30-year yield right now, but it hasn't really bothered the stock market yet. If that continues to accelerate, I think as we've talked about many, many times on the show, focus on the move index, bond market volatility, the move and the inverse correlation with Bitcoin is starting to strengthen. So if that continues and we do see more bond market volatility, we do see higher yields just across the curve, I would expect some more weakness in crypto and possibly in equities.
Yeah, I think it's very interesting when you look at the equity space, just because this rally that we've seen has been insane. And I was looking at this yesterday, but just like comparing the probability of a pullback in the S&Ps relative to the NASDAQ, I was expecting to see more of a probability in the NASDAQ just because of the concentration and the fact that the S&P has energy in it, which inflated energy prices kind of helps it stay afloat, even if the tech space sells off, especially with that inverse correlation. But we just hit like the 6,300 level was war lows. So like you would really need a catalyst, some kind of catalyst to send this thing down like 1,000 points again. And we are, like we've been saying, we're out of this backwardation and volatility futures. This is a pretty steep contango. 2 points between each contract, I think, is, as steep as it's going to go. And up and to the right is generally the result of that. But the bonds and notes are interesting for sure. And just the fact that inflation is coming in, but at the same time, like inflation affects asset prices too. So
yeah, that's a great point. This is not something where you hear inflation accelerating and it should be this really nasty, horrible thing. Quite often, as you mentioned, we see asset price inflation. Now, we don't want to see runaway inflation where it's going to force the Fed's hand and you have to, work through an environment where you have much tighter monetary policy or financial conditions. But generally speaking, when you have both economic growth and inflation accelerating in terms of that rate of change, that's a pretty positive setup. Crypto does well, equities do well in those environments. And I don't think that you want to be long bonds. I think you would look for, higher yields as a result. And commodities tend to do well. And we're seeing a lot of that. Now, we aren't getting a significant move higher in crypto, but you have equities just off of all-time highs. And I think the real trade has been in commodities, has been in commodity equities, areas where I want to be long, things like copper, for example, had a pullback a couple of days ago where you could have entered into it. And I think, you will see that push higher. Maybe the same thing you're seeing here in energy. We'll see, that's going to be driven by some headline risk short term. You're going to get a little bit more volatility. But I think you want to be long commodities where there's increasing demand, and some of that's related to the AI trade and that build out there. But there's supply constraints, and you also have this larger theme of reshoring. And I think that just generally speaking is somewhat inflationary.
Yeah. And I think inflation being bad and setting the market lower, I don't think that's really happening here. But yeah, we'll see how the market reacts. And to your point, if you look at the Fed probability, the CME FedWatch tool, there is a strong probability that we get a 25 basis point hike. Cuts are basically off the table, but it's not an emergency hike per se. You're not getting an emergency 50 basis point hike to try and offset some of these things. So I think that's a good sign to your point of things are fine. Maybe it comes in a little hot, but the market is telling us that at least right now, it's not something that we're too worried about. With the market ripping higher, contango in the futures market, we could see this go on for quite some time.
Yeah. I think you could easily be in this environment for another month, another couple of months. We'll see. I mean, of course, anything can change and you want to monitor the data and we'll keep an eye on prices each day. But as of right now, still an environment where when you do get corrections, you maybe need to be patient. You need to model out what those trading ranges look like. And a lot of times we'll just use a one standard deviation move given the volatility. But I think you want to be buying dips at the lower end of the range, and you're still in an environment where there's I think a higher probability that you go higher.
Yeah, for sure. And I think that's especially true when you get a dip and you look at vol and it doesn't move. Literally, this is what vol looked like yesterday on a 60-point sell-off. Vol was up maybe 10 cents, 20 cents flat. But contango is here. So if there is a macro event that changes the landscape of the markets, you will see volatility react and you will see this contango come out of the vol futures. And that's when you can really play for continued downside or kind of a washout of liquidity here. But until that happens, I'm just going to be leaning into buying dips and still doing it small and defined risk for the most part. All right, let us pop over to the YouTube chat, see what the people have for us today. Ryan looks like Johnny Knoxville. I think it's a spicy shirt for sure.
Oh yeah, it's I don't know what you'd call this, like a Southwestern print.
Yeah. I like it.
Yeah, thank you. Yeah, I like it from a distance. It might look like cheetah print.
Yeah.
But, it's more of like Southwestern. I don't know. Yeah, thanks. I think Johnny Knoxville's a good-looking guy. All my hair's falling out. I think he's got his hair still. But yeah, appreciate the comment.
I think he's the new host of Fear Factor.
Okay. Yeah.
Oh. Classic. Let's see. HPE. Who bought HPE?
Is that Hewlett Packard?
Yeah.
Okay.
Up 3%. It's so funny when you look at Intel, IBM, Hewlett Packard, all these things are just mooning. But that's the environment we're in. It's crazy.
Yeah, this is not one that's been on my radar. Mm-mm. But if it's been on your radar since those lows in March, man, another ripper here.
I actually I got into this trade, this iron trade.
Okay.
This was from a YouTube chat, but it was a call crab trade, buying August, the 60 call, selling two of the 80s in June, and then buying one of the 100s. And then into the sell-off, I got almost all the value out of this short, two shorts, an 80 and the 100. So I moved it into just a calendar spread for $1.20. But still looking okay here into this rally. But there's just so much premium here. You can do literally whatever you want. But yeah, I'm using it as like anchoring some bullish delta in August and then selling some premium against it in the near term.
I like that. Yeah, I've been in and out of a lot of these. I don't know if you want to call them Bitcoin miners, but the AI cloud compute Bitcoin miner transition stocks. You know, we've talked about Riot, we've talked about TeraWolf, Iron. I think, you know, when you look at a lot of these, there's still a pretty strong positive correlation to Bitcoin, and you saw that over the last week or so. But let's keep an eye on the revenue mix, and as it starts to shift more towards those AI or cloud compute services, then that might be the signal where you could see significantly higher prices for Iron if you do see that.
Yeah,
I guess you've been all the way up to what's that, about 75 or so.
Yeah, but yeah, this is what you get when you have 100% IV across the board. Anything can happen, but that gives you that realized volatility. It gives you the implied that you can reduce cost basis with. So it's a nice trading vehicle for sure. Nvidia, trade idea, double diagonal. All right, getting a little spicy here.
I like it.
Let's see. Sell the 205, 245 in May 22nd. 205, 245. And then buy the 205, 245 in June. So you're doing, this is a double calendar. Let's see what this looks like. Okay. So you were filled at 485 June by the 205, 245. Yeah, this looks right. I think if you bought this already for 485 and you're up $200, like I might even consider just taking this off if that is the case, because you're up $200 already. But the way to look at this is like this. So if we do this analysis, we got to kick this to 522 so we get all the premium or the implied premium out of the 205, 245. But then you got to crush this implied volatility. And I think all of these are at like 47, 48%. I think June and all these kind of go down to the low 40s. So if you just bring this down like 5, 6%, this is what you could be looking like. So in the middle, you kind of have a scratch if you get a non-move and a 6% crush. Although I think if you get a non-move with Nvidia, this IV probably goes down more, maybe 10%, down to the high 30s, something like that. So there is still risk here. You really need implied volatility to stay bid, and you need a move to one of these strikes. So I personally like doing these sorts of double calendar spreads when there's way more premium in the short options. So like if I'm paying $4.50, I want to collect $2 on the short call. And if I'm paying $3.70, I want to collect $1.50 on the short put, because it gets a lot harder to be profitable on this type of trade when you know that if Nvidia moves, one of these spreads is going to be a loser and you have to offset that loss with gains on the other side.
I would be surprised if vol stays bid in there. Nvidia has a track record over earnings, whether you look at the last year or the last 8 quarters, of not really moving all that much, especially recently over the last year. Even the one outside move it had was just barely outside. And we've seen it trade lower on average over the last 4 quarters by about, I got it up here, 1.5% and lower by 1.4% over the last 8 announcements. But not often does it really blast off. I think, people are playing for that, and maybe that's where there's an opportunity. I say all that, this is going to be up, $20 or so. But what are we looking for? $11, $12 move in there?
Yeah.
Yeah. You've seen relatively small inside moves on Nvidia announcements, even though accelerating revenue quarter over quarter, earnings per share have been up, looking for $1.77, I think, somewhere around there this time around, versus what might have been closer to $1.50 last time. So, clearly the expectation of growth is there, but I think you probably stay inside the move unless you get some comment here or there. There's some big surprise, but I don't think you're going to see it. That's just my opinion.
Yeah, I think you nailed it. And I think given the track record and just the fact that like the expectations for Nvidia are so astronomical, like the numbers that they're going to post are going to be insane, but it's a $5.5 trillion market cap company. So like they should be posting those numbers. And just because they post good numbers doesn't mean the market digests it well. And that's what we've been seeing. Like the market expects these crazy things and then they're kind of just on par and the stock sells off, even though the numbers are unlike anything you've seen before. So I think it all plays into that sort of situation, which makes me lean into maybe something like this, where you're buying a July 225 call. And I like to go to July instead of June, just because, yes, I'm paying $400 more to buy that same call, but I get twice the amount of time. And if you look at this vol, I'm buying 45% IV instead of 48% IV. So I have an implied lack of a 3% vol collapse, which hurts my long option. So another way to say it, you're not going to lose as much. If Nvidia doesn't move, you won't lose as much from a percentage basis on the July option relative to June. And playing into the inside up move, let's just say like maybe it doesn't go up 20 points, maybe it goes up 5-10 points on a good announcement. I think a crab trade makes a lot of sense where you're reducing basis aggressively. So you got like a 225, 235, 245 crab trade. You could make this wider too if you wanted to just give yourself a little more room. But 225, 240, 255 would be a 15-point wide crab trade, but still reducing basis pretty aggressively. And you could always roll into June if you needed to. So I feel like maybe something like this makes sense, where you've got your curve analysis here, kicked it to the 22nd, and then if we crush implied volatility in the same way, 8-9%, you're still making $500-600 on an inside up move. Do have upside risk though if there's a big blowout. But yeah, I think this feels right in terms of like playing for an inside up move. I think the crab trade makes sense, but again, if there's a big blowout to the upside, you do have risk. I'm going to leave this loaded, see if we got any other trade ideas here.
Yeah, I mean, the larger range that you've got in there, if you go back over the last couple of months, is probably closer to about 200 to call it, 240, kind of topped out around 235 or so. In terms of what I think is realistic, I maybe would look at selling a straddle, and then if you have to, there's obviously more capital intensive, but you're selling a straddle for $12, $13. $13 against the buying power requirement of 6,500, 6,700 or so. Again, if you have the capital, then you can manage the deltas if you need to. But I think per strike vol, at the money vol there, 94% at that 225 strike in this expiration here for May 22nd.
Yeah, you can see an inside move. And really, if it does sell off, I would be way more comfortable if it does sell off with the straddle, because then you can just roll the put forward from the 2-day to June. You can convert it from a straddle to a strangle where you've got a further out of the money option. Like if you buy this back and you roll out to the same strike and then you move the call up to like 235 or 240, you'll still be able to sell that for a couple dollars. And then just lean long if you wanted to after a sell-off. So lots of flexibility there for sure.
Yeah, I'm looking at an average true range over the last 2 weeks, Mike, on a daily basis of about $7.50 for context. I kind of wonder too, you look at the retained implied volatility, the elevated vol going into earnings, and you of course have a potential trade here. But is earnings as significant for Nvidia as some of these just random announcements are that you get, which maybe catch the market slightly off guard, but XYZ company is partnering with them, they've got this agreement, et cetera. I wonder if earnings matters as much for Nvidia versus some of these potential partnerships and what they might just announce.
Yeah, I think for this announcement, I mean, everyone's expecting them to just kill these numbers, and they should. Like they have these deals booked through 2026 into 2027. It's just nuts. But they're releasing this new Rubin product that's supposed to be much more efficient. I keep forgetting the phrase, but something with the token loss. I forget the exact phrase, but it's like 10 times more efficient than Blackwell.
Okay.
So if they have news about that, or like we're producing this will be live at a certain point and we already have orders for it, like I think that could be the catalyst for a big move. But yeah, to your point, nothing is going to surprise me if they announce these crazy numbers for earnings, because they should be printing cash for earnings. But yeah, Inside move, I think, is what we'll play for. I like the upside move just because there's market strength today, and Nvidia's up 1.7%. I don't know. If the market was down 100 points, I would be more inclined to avoid an upside move in Nvidia. But right now, we're kind of all clear, it seems, from an equity standpoint. We'll see. Reddit dropped 6% today on nothing. I expect more weakness. June 18th, expiry, buy a 135 put, sell 2 of the 130s, buy a 120. So it looks like a downside crab trade. Or butterfly. June, 135, 130, 120. Okay, so broken wing butterfly. 60-cent credit. Yeah, I think this is a fine trade. Collecting a credit is what gives you that high pop because you've got no risk to the upside, and then you've got this little kicker to the downside. I think if you're doing something like this, you have to be aware that in the near term, like if this thing continues down, you're seeing theoretical losses because you need extrinsic value to go to zero to get all this value. But as you kick this like closer to June, without any changes in IV, now you get a little profitability if you get that sell-off. But this is June 16th, so about a month from now. This kind of move is what would be required. But I like the setup of this because if you place this now, and then let's say you get a 10-point rally and Reddit tomorrow, you could easily move this 120 put up to the 125 and do that for 20, 30 cents most likely, and then keep this credit, leg into a free butterfly. And now you have this downside kicker without any buying power.
Yeah, I like it. Reddit back at 125.
Yeah.
Next couple of weeks.
Yeah. Some people saying they got some IBIT, some ETH, some Bitcoin, Ethereum, Solana, XRP.
They're in the club.
Yeah. Spraying it all. Love it. Nike. I haven't looked at this. Oh,
it was going to bounce eventually.
Yeah, I know, yeah. I literally bought a 2-year leap in here at the 60 strike for the same sentiment. I'm like, this thing's at 10-year lows, and you just needed to get to 60 to make $1,000 on a $4 debit. So we'll take it.
And you know what looks even worse than Nike is Lululemon.
Oh, yeah. I feel like they're in the same category of just like...
Yeah, I think that Lululemon just hired somebody from Nike that was responsible for Nike's, arguably responsible for Nike's share price decline.
Perfect.
Maybe run the same strategy for Lululemon.
Yeah, I mean, both of these companies just got decimated from the tariff stuff.
Yeah, and I also think it's like how many pairs of the yoga pants... Or for the guys, your kind of like tech pants, how many pairs can you buy? We all have enough.
Yeah. And there's just so many other spinoffs now. Like you've got Viore. I like Viore more than Lulu, but that's just me. Yeah, it's going to be tough. At least Nike has the brand. I feel like Lulu doesn't necessarily have that same staying power.
Yeah, earnings on, looks like May 28th next week for Lulu.
Nice. Yeah, going to be wild. Huge implied volatility for both of these, as you might imagine. But we're here for it. We'll see. Managed a bad trade of BE to a 240 straddle in June. Bloom Energy. Okay. 240 straddle. $2,800 in premium. Does it make sense to roll to July 253.20 strangle? So the nice thing, like this sucks that you have this losing trade, but the nice thing is you've got so much IV, you can do a lot in here. So if you're buying back the 240 straddle for $7,800, if you go to July and move it to a 253.20 strangle, I really don't like paying debits for these adjustments. Like you've been in this trade for so long, paying a $1,300 debit it cuts your credit received in half. So now you'd be at a $1,500 premium, but these options themselves are trading for $6,000. You'd be legging into a scenario or putting yourself in a scenario where you have to hold this all the way to expiration and you need Bloom Energy to be in a perfect spot. I would rather, if you want to get rid of the intrinsic value here, like you can do that. You can roll to a 270-300 for credit of $3 or go to a 290 straddle for $1,800. Like, I think the name of the game in this is to just pick up as much premium as you can, be delta agnostic. At least in this case, you're neutralizing your delta. But like, I think your easiest out here is to really crank up that premium, go from 2,800 to 5,000 to 7,500, and then just like all you need is Bloom to just like chop for a little bit. But going from $2,800 in premium and reducing it by 50% is not something I would be doing, because you don't want to have undefined risk in a 100% IV product for very little premium collected. Like, you want to pile on the credit if you're going to take undefined risk here. What do you think?
Yeah, I agree with you. I mean, this is a stock that moves 10% every single day.
Yeah.
Get paid to stick with this or just manage it and get out.
Yeah.
Cut your losses and get out, sort of thing.
Yeah. And it can, like, this stuff adds up over time. IBIT, I had one contract on an IBIT last year, and I made a bunch of adjustments, just stayed like neutral to bullish the whole time. And this was a $50 stock, and I ended up with $3,100 in premium. So like in Bloom, you could, if you keep doing this, you can end up with 10 grand plus in premium easily, as long as you're piling on credits and not paying debits. So I think, again, 100% IV product, you got to just be getting as much credit as you can to offset your intrinsic value losses. So yeah. Let's see, what else? An upside call chicken on Nvidia. What is a chicken? Is this a new strategy? Chicken iron condor?
I like it. Yeah.
Yeah, we got to keep these names coming. Iron condor. Did you see that video? It was so funny. They were filming me and they're like, what would you name your kid? And I'm like, probably Jade, Jade, lizard, middle name. I'm like, you can't name your kid Iron. And then it cuts to you. Iron condor, yeah.
My favorite was Micro Glenn.
Oh my God.
Shout out to Glenn.
Yeah.
He's on the show.
That's so good. What else we got? I like the 240 call calendar for Nvidia. 240 call calendar. Yeah, so 240 to the upside. Yeah, this is fine. $400. You're gonna get all this value in the short option. I think we still have the analysis here. No, we do not. So yeah, let's do the 522. Bring this down to 40%. I think that's fair. Yeah, a couple $100 on a $4 debit if you get that up move. I like it. You could also do something that we've done before with some of these higher priced products. Like, you could buy the 6-day, sell the 2-day, and do this like for real cheap. Especially if you go to like 230 or 235. Let's just look at the value of this. Yeah, so like the 230, 235, like you could do both of these for less than $100 total. And you've got a similar scenario where you're really just playing for an inside up move, but again, you got to crank this down to like 40%, crush this long option IV down 20%. But yeah, still could be a nice reward to risk profile if you get that inside up move and hold it to Friday and get all this value out of the shorts. What else we got? Any interest in CBRS? Cerberus Systems. I have not traded this. Have you traded this?
I have not. Pulling up the chart.
Oh, this is the IPO. They just recently IPO'd.
Oh, it's got that nice IPO pattern.
Yeah. Open up, crash.
Bounce once, on its way to 90.
Yeah. Yeah, I mean, I don't really work with these IPO. Like, I would rather wait until these markets cool off a little bit And there's just so much like price discovery here in the first week or two of an IPO. I am interested in SpaceX. I think that'll be a great trading vehicle going forward. But yeah, I mean, these options are a couple $1,000s. You've got $3-4 of bid-ask spreads here in some of these expirations. So I'm going to avoid trading this one for the time being.
Stay in that Rocket Lab trade from a little while ago when we were talking SpaceX at first. I think you put on a Rocket Lab trade. I don't remember what you had on in there. I guess in hindsight, just buy the stock.
Yeah.
Like doubled in the last month.
I do have 2 nice trades in here.
Beautiful.
So yeah, this is actually from the end of last year. Maybe there's something we were looking at that I didn't get filled on, but
bummer.
But yeah, usually like this kind of product, 100% IV, I'm just going to be defined risk and just go like call crab trade to the upside or diagonal spread. But yeah, I mean, look at this thing, literally rocketing to the upside. It was 80 a couple weeks ago. Now it's at 130. Love to see it. That's what I'm most excited about is like the space companies where you just buy some calls or like get into some really bullish, crazy stuff, and then they just make an announcement like we're going to Mars.
That's right. Yeah. Boom. Yeah. Literally.
Yeah. Oh man.
I mean, you look at like UFO, the Procure Space ETF as a proxy for this whole thing. You know, I mean, of course, everybody's waiting for SpaceX, and it will probably be a great trading vehicle. Who knows where it's priced at? But you just look at how else can you get exposure to that theme, and that's been an area that has worked well. I think will continue to work well. I'm not saying that you chase new all-time highs or near there in UFO, but you can look for opportunities by just breaking down the holdings, look at where they're overweight. I'm sure Rocket Lab is in there, and that'll present opportunities. Now, it's not going to work in all environments, of course. If we are in the opposite of where we are today, where inflation and growth are collapsing, the outer space stocks are probably not running higher, especially those that are pre-revenue. But for now, you know, this is a place where I would look to buy dips as well.
Yeah. We've got Rocket Labs in there, 5%.
Okay.
Global Star, 5%. Viasat, 6%. Planet Labs, 6%. And Sirius XM.
Okay. Satellites.
Interesting. Yeah. But yeah, that makes up what? 25% of the holdings. So yeah, and you get much lower implied volatility than if you're going to Rocket Lab directly. If you're trying to like actually inventory some leap deltas here, like this isn't that crazy for a $60 product. What about a small 5-point iron condor in Nvidia at the end of May or June 18th? Yeah, I think if you're doing an iron condor, I like the idea of going to end of May or June, just because if you get a big blowout on either side, you want to have a little bit of time for it to reverse and come back to your range. If you do a 2-day and you get a fully in the money option spread, you're kind of just done. You can't do anything with it. So I like going to June, but yeah, end of May I think works too. You have way less time though. June I think makes a lot of sense, especially if you're playing for an inside move to the upside or downside. If you did like a 10-point wide, 200, 245, pick up $3, it's kind of your cookie cutter classic setup here. And now if you get, and this actually covers 20 points to the upside, 25 points to the downside. So that's well outside of the expected move here of 11 points. And again, if you get a move that's only like 2 points, you're going to get a big vol crush in June, and that will help this position for sure. I might actually do this. I actually like this a lot. This is what I'm going to do. I'm going to do the $3 premium for this iron condor. Do I really have to hit the bid? No. I'm just going to leave it at $3, see if I get filled. But I'm also going to do the spice factor to the upside.
Ooh, a little spice.
Yeah. I'm going to do the 230, 235, 240. I'm going to have to route this in multiple tickets, but the 235, 230 short-term calendar spreads to the upside. So I'm going to buy the 230, 235, and the 240 if I can route this and get this all filled. Just an absolute spice factor. And then, yeah, this one, like, this is crazy. You buy the 240 6-day, you sell the 240 2-day, and you're reducing basis by like 90% on the long option. So there you go. Iron Condor filled.
Nice.
You just need, I can't wait for this to fill, and then we can look at this analysis. Let's do 83 cents. There you go. Okay, we are locked and loaded here. Hell yeah. All right, so we've got 522. So we assume we get all the premium on Friday. We got to crush this IV down to 40%. And then let's crush this IV down to 40%. Yeah, so after earnings, all these expirations will look similar in terms of IV. 40% I think is fair. And yeah, we'd be looking at a, what are we doing here? Here we go. All right, so any kind of inside up move, P&L Theo is like $500, all the way up to 245. So 20 points out of the money, still a scratch from a theoretical standpoint and a scratch at expiration. But yeah, just a nice window here. And this Iron Condor out in June helps reduce the cost of all of it. Real spicy. Love it. Yeah, $1.80 credit for the whole thing. So giving up a little bit of the premium on the Iron Condor to pay for these short-term calendars to the upside.
Beautiful.
Yeah. It could be beautiful, maybe not. But either way, if it sells off, I kind of like having that downside put spread, because if Nvidia sells off 20 points, the public is going to go buy it, I would assume. We'll see.
Yeah, again, I think we're still in that environment where if you get a correction, and those corrections can be sizable at times, it's still an environment in which you want to buy dips. Like, I don't think it's the first move lower, it's over, you know?
Yeah.
And we're seeing, I think we're seeing that already here.
Yeah. Well, that is it. We're out of time. Thanks for tuning in, everyone. If you've got any questions, you can reach us on Twitter. I'm at Trader Mikey B. Ryan is at Ryan Fred Grace. Give Tasty Crypto a follow as well. And I'll put the Substack for Tasty Crypto in the YouTube chat as well. So get involved there. And yeah, we'll see what happens with Nvidia earnings. It's right after the close, I believe. But if not, it's probably 5-10 minutes afterwards. But the market will be watching. You could probably just look at the NASDAQ futures and see what's going on there, because that will be pushing and pulling as Nvidia moves. But yeah, inside up for Nvidia earnings, 3 different calendar spreads: short term, long as 6-day, short the 2-day at 230, 235, and 240, and then a June Iron Condor to just capture that whole range. We'll see what happens. But plenty more content coming your way on the YouTube channel as well as tastylive.com. So stay tuned, and we'll see you same time, same place, 11 a.m. Central tomorrow. Peace.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
I've got some huge news for traders everywhere. On June 4th, the pattern day trader rule will be replaced by new intraday margin rules. Tasty Trade has been advocating for an updated PDT rule for years, and we're ready to go on day one. You'll have more flexibility to manage risk when and how you want. Join Tasty Trade today.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Yeah, I know. Fun on the block all day, all night. Isn't it? No stress, no fight. Fun on the block all day, all night. We just living it up, yo, that's real life. Wake up, sun grinning through my window. Text my crew like, what's the plan? Let's go. Shirts, wrinkled jokes, twisted, nothing too official. The outside flexing on my bike, got the bell with the whistle. Corner store, pick up chips, 2 shoulders. My board in the slides, trying to dunk on the stroller. Kids running loose, auntie sipping lemonade. Every front porch got a beat, yeah, it's homemade. No drama, just heat waves of laughter. If we got problems, could we solve them after? Grilling on the curb, grill marks on the shirt. Somebody brought the tools, man, let that Luke word. Fun on the block all day, all night. After with my people, yeah, we feeling alright. Fun on the block all day, all night. Good vibes only, yeah, that's real life. Fun on the block all day, all night. Hands in the air, no stress, no fight. Fun on the block all day, all night. We just living it up, yo, that's real life. Bays at the table, crowd tilted sideways. Grandpa talking trash, man, he wild for his age. Kids on the hydrant, street gets wavy. Auntie hit the double dutch, yo, she still crazy. Ice cream truck roll out, yeah, we all chasing. Pockets on lead, but the vibe still blazing. Cops roll slow just to see what's good. They know the drill, it's a party in the hood. We laugh, we boast, we live, we boast. It's all fam out here, raise a glass, make a toast. Sidewalk royalty, king of my block. Every place got a story, every joke hits the spot. Fun on the block all day, all night. After with my people, yeah, we feeling alright. Fun on the block all day, all night. Good vibes only, yeah, that's real life. Fun on the block all day, all night. Hands in the air, no stress, no fight. Fun on the block all day, all night. We just living it up, yo, that's real life. Yo, we just living it up, yo, that's real life. Yeah, we just living it up, yo, that's real life.
What's going on, everybody? Welcome back to Risk and Reward. We are back into the what's become the standard for the market as of late, climbing a little bit higher. Seems like it might have just been a dip, and we could work towards higher highs. I'm joined as always by my wonderful co-host Errol Coleman. Errol, how are you feeling? What's happening?
Pretty good. As you kind of mentioned, climbing back towards the highs right now. I know we have FOMC, if I'm not mistaken, later today, and then the big one. I mean, Nvidia earnings after the bell, which might set the tone for what we might see next in the market. So, I mean, I'm pretty excited about that. What's been new on your end?
Yeah, Nvidia earnings, obviously the star of the show today. Yeah, not a whole lot new on my end since we got off air yesterday. Those trades that I threw on air, posted in the follow feed as well, were my only activity for the day. So yeah, I mean, just sitting back and relaxing. You got long some Rivian, right?
Just a little bit. I know we've rebounded a little bit, but I'm not seeing much of an effect in the portfolio and in the position itself right now, but got a little bit of a rally, a little bit of a bump.
Yeah, Rivian at the top of my portfolio today, jumping out at me here, up about 5%. We can jump in the Tasty platform here and take a look at a few things. But yeah, Rivian.
It does it again though, right? Within those ranges that we were touching on yesterday.
It's always the ranges. It'll come down and test 12, and this time now that the bottom's in, and trust me, one single candle on Rivian typically means the bottom is in. We will probably be working back up towards 17 or something like that. So if anyone wants the Rivian channel play, perhaps a good time to go at it. Obviously, broader market continuing to climb just a little bit here. Up about 1% on the day-to-day, back over 7,400. I really shouldn't say just a little bit. I say it all the time, but we've become so desensitized to giant, uncharacteristic moves in the market, and by that I mean like 1 to 2%. That when we get a 0.8%, I'm like, oh, whatever.
Yeah.
We're moving up a little bit, I guess.
Yeah, just a little bit.
In reality, for the broader market, this is considerable increase. NASDAQ climbing even more. Nvidia earnings generating some hype, obviously after the close today. So. Pushing NASDAQ up a little bit there. Google, I believe, is lagging behind right now. Yeah, Google down a little bit today, lagging behind the NASDAQ, lagging behind the tech sector, not catching any sentiment moves per Nvidia or surrounding Nvidia earnings. Meanwhile, Nvidia climbing about 2% headed into that earnings report. We have GC. Gold, metals moving up a little bit. Gold up 0.5%. Silver, I believe, is a little ahead of it. Yeah, up 1.5% as of right now today. Oil is taking a considerable hit today. We just talked yesterday about how oil kind of quietly had just climbed right back to those highs. But yeah, back getting crushed again today, down 6% at where we stand right now. You been making any moves in oil?
Not too much in oil. I know it's trading around its highs right now, but it has a range for whenever the downside wants to be put in. Again, with us trading at all-time highs on the U.S. stock market, we got oil at all-time highs, and understanding that oil is inflationary, I again think it just puts Trump in such a difficult position. So whether we get the volatility first in oil or the U.S. stock market, I'm looking forward to either one, but no position in any of the indices right now or oil. But, I do think they'll probably make some type of substantial move to the downside whenever it's ready, at least. And again, maybe Nvidia will be the headline that can actually, shift the momentum in the market, at least for a brief pullback, right? Because again, NASDAQ has rallied almost 5,000 points in 45 days. So even if we get a 1,000 point pullback in the indices, a 2,000 point pullback in the indices, everybody's probably going to feel like it's really aggressive and it might be some type of market crash. But considering how much we've gone up in the last 2 months, a small little pullback will merely be a shred in the market from what we've seen. So no, yeah, oil creeping up towards its highs. But hands off right now, sitting on the sidelines.
Yeah, definitely just a little drop in the bucket is what it ultimately feels like.
Yeah.
I haven't been making any moves in oil either. Still short my USO shorts, but that's pain. Oklo shares, or Oklo position, I should say, that I put on yesterday, panning out pretty nicely here. Bonds, we both caught bonds.
We did
right at the bottom here, so I'm very pleased with that.
Nice rally today.
Yeah. We couldn't have really bottom ticked that any better on bonds. As we alluded to yesterday, not often we get into bonds on the Gen Z show here, but it's sometimes when the bonds drop too much, it's time. Bonds. A channel-bound product if there ever has been one. So anytime you start to get towards the bottom of those channels, some opportunities present themselves.
It's so funny, too, because on bonds, it was one of those positions where it wasn't even necessarily looking or paying attention to the bonds, but it's one of those products where you pull up the chart and you're like, oh, wow, this thing has gone so far down. Now it's kind of attractive. You know what I mean? So it's kind of nice to catch those ones off of a whim a little bit. I mean, when do we see bonds at these levels?
Yeah, definitely not something that's on my daily checklist by any stretch of the imagination. What's going on, everybody in chat? Grumpy Mike, just get more coffee now. You don't got to wait. Go for it. Agent Per, Branch, Nice Boy, Stan, Sergio, Jared. Happy to see all of you. Did I say Jared twice? I don't know. Play the Rivian range until it goes all Intel on us. LOL. Well, yeah, I in my particular case, I'm hoping Rivian will go all Intel on us. That's been my thesis this entire time. I was able to get out. Initially, this position was a stack of 12, 15, 25, 30, or 12, 20, 25, 30, something like that. I have taken off one Rivian position in between this 12 and this 25 on one of these run-ups here, because we did get this really big one. And yeah, towards the top of this range, I did take it off around.
It's pulled an Intel before.
Yeah.
A little bit.
It has.
It's pulled a Rivian.
It has. Yeah. Rivian, it's
hopefully Rivian does Rivian one more time.
Yeah, sort of in a league of its own, but when good news breaks, it definitely can do the Intel thing. So The top side of the range is definitely less well defined than the bottom side of the range that we're looking at here. I would personally say that anytime Rivian gets below 13, it's a buy. But as far as when to exit specifically, maybe give yourself a little bit of room to scale, because the upside is less well defined. Sometimes it's 16, sometimes it's 20, sometimes it's 23. So it's a tough one to trade on the upside. But if you're buying those bottoms correctly, you shouldn't find yourself getting burned too often. But that's just what makes this whole range strategy so tricky, and why I don't attack it more aggressively with more consistency, because when it falls really hard too. That's the other side of this equation. If you can catch the down moves, it's awesome, but it will fall pretty aggressively. So you have to be cautious with scaling out, managing your risk, and not trying to perfectly time the top, because if you are a little late to the top, it's probably not going back.
Yeah, I'm not going to lie, with something like Rivian, I'm pretty surprised to see this level of volatility in such a short time span on a product like this, especially with Rivian becoming a little bit more of an established company.
Yeah. Bonds, James Bonds. I'm going to do it every time.
Oklo short put spread starting to come around at the 55 strike. I know you were just touching on Oklo.
I was, yes. Thank you for the kind words, Sergio. By the way, wanted to throw that in there. Oklo climbing a little bit. 10% is not a little bit, but
move is a move.
When you look at the year-long chart, this zoomed out, it does just feel like a little drop, and this one, this is another one where it's like that sentiment I was just outlining about the broader market, where we get a 1% up day, and I'm like, oh, this is just whatever.
Yeah.
Oklo is like that, but that threshold moves out to like 8 or 9%. Like when Oklo moves 8 or 9%, I'm just like, oh, whatever. It's Oklo doing Oklo stuff. But yeah, we are continuing to climb. This position, starting to pan out a little bit for me. Just needed to get back to the 65 level, and this is certainly a hot start. I'll take $5 in a single day. I'm all for it. Nike also mentioned, moving right alongside it. Joby and Nike pumping. Yeah, Nike having a good little day here. Really the best day in recent memory for Nike.
It's seen better days in the past from what we're looking at. But good day today.
Yeah, but since the big sell off, this big gap, the best day that Nike's seen, up about 3.5% right here. I am long Joby and Nike, which is why.
Is Nike falling off?
Like in society, you mean?
Yeah, just in general.
I think so.
Is it a little bit?
I don't. It's There's.
It's fallen off. In the stock market clearly, but
it's a double-edged sword with Nike. Which I'm not long Nike anymore because I ran out of time. Because I was too tight with my time horizon. But in any case, I think Nike is. I think it's obviously here to stay. I think that they're too big to fail. But as we've talked about before, it's just like there's just constantly more competitors entering the athletic wear and sneaker market.
Yeah,
and I think that is, Nike is losing market share to those people. I think they'll continue to be a dominant player, but I think that in terms of pure market share, I think their best days are behind them. However, it's also a growing market, it's growing more every day. Fitness is, a big thing right now, bigger than it's maybe ever been in the past. And so the market for athletic wear is also expanding, the total addressable market, if you will.
A little more competition.
Yes. Maybe. So as that grows, there is more room for Nike to grow as well. I think that they could achieve new all-time highs sometime, but in a pure market share context, yes, I think they're sliding, and that's only going.
Yeah, just from some anecdotal evidence. Even when I just go out, I don't see Nike as frequently as I did in the past. Even when I was visiting Terrell's college the other day, going to college campuses is one of the best ways to recognize what's trending right now. And all I see is Adidas. And it's kind of funny how Adidas made its way into kind of the streetwear type brand. And I think Gen Z and younger audiences really gravitate towards that streetwear kind of brand. And I know when I was growing up in middle school, high school, Nike was the thing, so that athletic wear, maybe a little more competition heading into the space, but from a culturally relevant standpoint, it almost seems like Adidas is really taking a larger slice of the cake than it has over the last 10 years, which is kind of interesting.
Yeah. I'm doing all this talking while I'm wearing a Nike product right now.
Yeah, there we go.
It's the wrong shoulder. Everything's mirrored on the camera.
I feel like those shirts like that with the quarter zip, I almost always prefer Nike though, I will admit.
Yeah, they do. And they definitely still make a lot of good stuff.
Yeah, 100%. Amazing.
There's just so much other stuff now.
Yeah.
I got Adidas socks and New Balance shoes on right now, so
Is Nike for the millennials now? Who said that? No, I'm just kidding.
Are boomers too old for this channel or show? Absolutely not, Rhett. We love the boomers. You are more than welcome. I don't know if you're one of them or if you're just asking in general, but the boomers are more than welcome. What's going on, Ranch? I'm long Rivian shares. Good. I'm sure you're having a good day today, although it has been painful for some time as it continues to run in this channel. Nike broke its relationships with retailers to sell more direct, which backfired. Yeah, I have definitely seen things about that. I don't know the specific retailers that they've broken ties with, but I will use Foot Locker as an example. Like Foot Locker is they're starting to scale out of Foot Locker Finish Line type stores and try to go more direct to consumer, and that has it's been a pain point for them for sure. That's an astute observation. Under Armour was the cool thing when I was in high school. Honestly, yeah, definitely. Under Armour had a run there for sure.
Yeah,
I was like middle school for me. I feel like was Under Armour was popping, but Under Armour had when Neon was in, it was like a lot of Under Armour stuff.
That's a really good point. I remember Under Armour was really popular with the basic Under Armour type clothing wear, and especially if you're any type of athlete, like that was probably like the main thing that you used underneath your clothes. But for like their shoes, things like that, yeah, I think it was around the middle school freshman, around that kind of era for me too. But I totally forgot about Under Armour. I got Under Armour ranked third for me, though. Not gonna lie. I think I got Adidas, maybe Nike,
I would have
Under Armour, maybe Reebok.
For me.
New Balance has slid up a little bit for myself as well.
New Balance does good
They've been
stuff,
on the come up.
for sure.
Yeah.
Fun trivia question about Nike here is Nike once laughed Steph Curry out of the room when he was looking for a signature shoe and asked for a lot of money. And the man who laughed Steph Curry out of the room after asking for that much money was Nico Harrison, who was the Mavericks GM who made the horrible Luka trade.
Oh, wow. So he has a history. He has a history for bad decisions.
He has failed upward a lot.
That's funny. Look, you got to know your value. You know what I'm saying? You got to know your value. Don't take any less. And shout out to Steph, because that boy really panned out to surpass expectations.
Yeah, as
no
we
doubt.
discussed, Under Armour, who's obviously who he wound up with. They were willing to take the chance on him.
But dang, I feel if Steph Curry would have gotten that Nike deal, I think his brand would be a lot bigger.
Oh yeah.
Oh my gosh.
For sure. Y'all remember And One?
Oh,
I do.
Of course.
I do.
That's elementary school days. You're talking about the Walmart, the And One shoes, And One shirt. Come on.
The shorts, yeah.
The Shaq.
Yeah.
Hanging off the rim. Yeah. Good days.
Absolutely remember it.
I miss times. I
have a running inside joke with my dad to this day where he, for a little while, thought that the And One logo, he thought it said Andy, and he was always confused. And so now Andy is like something that we'll say if we accidentally bump into each other while we're walking next to each other, we'll do a layout.
Oh, that's funny.
Andy,
I like that.
That's a thing for us.
Dang, me and my friends, we would do the And One. Yeah. But we never did the Andy. Yeah. That one's creative.
Andy,
I like it.
It stemmed from a misinterpretation.
Yo, we didn't have one unique experience. I mean, even messing around with your friends, bumping them, just like, And One.
Yeah.
No unique experiences over here. Yeah,
James
call
Harden
the foul.
Consequences.
Oh, don't get me started with James Harden right now. I know you guys see that flopping. Oh my gosh.
I loved him when he was on Houston.
Yeah.
Anyways. But yeah, Nike logging a good day is the end of the story there. And then Joby was the other one that I just saw mentioned. Yes, Joby, it's hilarious how well this position has been working out for me when my thesis wasn't that this would happen quickly at all.
What is it doing right now?
But I'm up doing well on this Joby position. Oh, this is Meta. I was like, what am I looking at here? Joby is not a $600 stock. Up about 3% today. I literally bought on May 5th, right before this big green candle, which I knew nothing. I know my whole idea is just that Joby twice a year does 100% run, and I just wanted to catch one of those, and I was leaving myself open for that. But then they immediately catch a really nice bid the following day, so got a head start on that position. But yeah, Joby logging a good day today as well, and I would imagine if they are up, Archer is up alongside them. No, Joby stealing the market share from Archer.
Is it?
Archer down just slightly today, 0.25%.
Okay, Joby. Up and away, I guess. No pun intended.
Yeah, no kidding.
Yeah.
that is astute. But that's pretty much all the action for me. Just monitoring some stuff, and pleased with how quickly bonds are recovering for us here. What's going on your side?
Yeah, no, we can jump to the Tasty platform over here. Really not too much going on. We got on a few positions. I know.
Like and subscribe so Errol and Gus can get a new clothing deal with And One. Hey, we would take it.
Be down to bring the And One back too.
If And One comes calling, if And One wants to make me a tasty shirt, I'll wear it.
Yeah. Hey, look, if we want to bring back And One, I'm all for it. Goodwill is good for crock pots too. I've probably bought at least 6 before.
6.
So why do you need 6 crock pots?
I was going to say, is it a good place for crock pots if you've had to replace the crock pot 5 times?
You know what's so funny? Have you ever had boiled peanuts?
Maybe.
So I guess it's a little bit more popular down south, right? I was born and raised in Colorado.
I'm definitely familiar with it. It's like a fair food.
I wasn't at all. So I lived in Florida for the past 4 years, met my girlfriend down there. That's like one of her favorite snacks. And I remember one time she's like, I'm really craving some boiled peanuts. We're driving in Florida. And she's like, just go, there's that gas station right there. Like, let's just go check in there if they have boiled peanuts. I'm like, why would a random gas station just have boiled peanuts? And then I walk in there And I hesitantly asked him, like, hey, do you guys have boiled peanuts here? And the dude's just like, and I look and I see like 3 crock pots straight out of somebody's home kitchen. And I guess it's like a delicacy, maybe more popular in the South, but shout out to the boiled peanuts. You know, chewing those boiled peanuts with the shell on them, all soaked up, hasn't really grown on me just yet. But shout out to your crock pots over there, Grumpy Mike.
I believe they have good boiled peanuts at Buc-ee's. I think that's
is that okay?
Buc-ee's has that.
Buc-ee's is a Texas
table. Yeah, started in Texas.
Okay,
becoming national at this.
Yeah, they're putting one in Colorado now.
Yeah,
I noticed.
The closest one to us right now is St. Louis, but they're creeping up. They're in Nashville.
Those are the massive gas stations, right? Or gas stops. Cool.
Yes, I've been to the world's longest car wash at a Buc-ee's.
Have you really?
There's one for you.
Wow.
Yes. Yeah, it was very long.
Fun fact: that could be on your that one game. Never have I ever.
Oh yeah, Two Truths and a Lie.
Two Truths and a Lie.
that would be a good
no, but we can go ahead and jump to the Tasty platform on this end over here. Any 0DTE trading strategies that E or G like? I haven't really been doing anything with 0DTE right now.
I like SPX Iron Condor. I'll do an occasional 0DTE SPX Iron Condor. Expensive, so I only do it. I haven't done many recently because in times like these when it's really headline driven and things could just come through and bust you out of that, it scares me a little bit more. But yeah, the 0DTE Iron Condor 25% profit target has been a fairly reliable strategy for me historically.
Nice. Yeah, no, I mean I haven't really been doing anything with the 0DTEs. I know come June 4th, I'm going to be utilizing them a little bit more. So sometimes the futures positions that we take will utilize some of the 0DTE options at the same time because it'll be nice to get a little bit lower risk, cheaper buying power. But whenever I am using that, I'm just using the at the monies for the most part. So nothing very fancy.
What do boiled peanuts taste like? Asked Chris Little. Jason says they taste like regret.
That's what it looks. See, I knew the boiled peanut fans were lying. I was like, there's no way you guys actually like this. No. But no, we got a few things in the portfolio over here. We sold an out of the money put spread on Meta. We're down about $17, so we're kind of ish break even on this position. We'll manage it by next week. We just want a little bit of a pop. And honestly, if we come down to 21 days and we're still sitting around break even, we might just decide to take this position off, reallocate the capital just because we don't even have too much conviction in this trade either. So we could redeploy capital elsewhere. And then Rivian, we put on that Zebra, the zero extrinsic back ratio yesterday. And we're up $3 right now, 17 on the day. So when we put it on yesterday, we slid a little bit lower, but we're getting a little bit of a pop in Rivian like Gus was talking about just a moment ago. So we'll be patient in there. Again, no theta decay, no extrinsic value. So this is a pure directional trade. We have on about 100 deltas. So once again, for every dollar move, we'll reap about $100 worth of profit. And with us being up only $3, as you can see, we haven't really gone anywhere. But hopefully this is a start of the uptrend that Rivian could experience. Then we got TLT. We got some long bonds. You know what I mean? I might as well be an older millennial. I might as well be a boomer. I'll claim the title. No, but maybe the third person in our generation alongside Gus to get long some bonds down here. Using a zero extrinsic back ratio, another Zebra. So we're not going to be worried too much about that theta decay. No extrinsic value. It's a really tight trade, very directional. Got about 101 deltas, positive deltas on this one, I believe. So nice pop in TLT. We're going to hold it a little bit longer. Maybe these bonds could recover a little bit higher. Maybe we fill the gap. I haven't seen any statistics being drawn on the likelihood of the gaps being filled on bonds, but that would be kind of an interesting, unique perspective. So that's what we're going to go with. Hopefully we can continue to rally. That's not backed up by any statistics at all, but it'll be nice to see if we can at least attack the low from where we kind of sold off from. So we'll hold on to it a little bit longer. Especially trading at 83, 84 right now. It's a nice pop. But now we have a little bit more room to feel comfortable with holding on to this. And I mean, if we want to, maybe we could even move it to break even, but we'll be patient.
Yeah, I'm in the same boat. I gave myself 58 days, 59 days when I put it on yesterday to get this back above 85. We've gotten a quick move in that direction to where, now that feels, I feel a lot better about it.
Right,
Yeah,
it's nice
$8 notional per contract here. I did put on 5 of these, so scaling out is possible. But I'm also going to just continue waiting here. I feel like we see another little recovery at least into the end of the week.
Some of the best trades is whenever you put the trade on and then you're able to have a level of cushion like right off the bat. It just becomes so much more comfortable to manage.
Free play.
Oh yeah.
That's what I call it. There's crazy conversations happening in the chat right now.
What do we got? What do we got going?
To answer the question for real, boiled peanuts, it depends on what you boil them in. You can do like a spicy boil, you can do Cajun.
Cajun is very popular. Girlfriend loves a Cajun boil.
Yeah. It
injects
the flavors into the peanuts. As people have pointed out, you are not supposed to eat the shell. I didn't clock that when you said that.
Some people do though.
I mean, I'm sure some people do, but
and they tried to bait me with it too. I'm telling you, man, it's rough out here.
Sending you to the auto store for some blinker fluid. And then, yes, I saw somebody mention salted peanuts and Dr. Pepper. That is unironically something a lot of people like.
Oh, very popular, right? The farmers, it grown popularity from back in the day with the farmers getting their hands dirty, not wanting to, put their drink down, have the peanuts. So it's a nice, very convenient.
There was people on my high school baseball team that would always do that, like in the bus on the way to game.
It's such a baseball thing. I feel like
have a Dr. Pepper.
It just fits the brand of baseball.
Just like make a bag of peanuts into a funnel and put them in the bottle.
You tried it before?
I have. Not my cup of tea. Really? I see the appeal.
It looked good.
Yeah,
I haven't had it though.
It's like a sweet, salty. Like I see where it's coming from. Not for me, but I do advocate that you try it. It's a French fry and the McFlurry situation, or the Frosty. Perhaps is a better analogy. It's kind of that type of matchup. More of a pecan guy myself. Yes, pecans are the top nut.
Man, I don't. Ooh. It's up top 3 for me. It's top 3.
I love
not my favorite, but top.
I love that they're a little softer. I'm a big.
That's completely valid. Cashews is probably my least favorite. Anyways, slinging
almonds.
So, almonds maybe number 2 for me actually.
Oh really?
Yeah, I had some wasabi soy sauce almonds. They're the best nuts They're the best almonds I've ever had. Slinging.
Gotta check yourself in the middle of that one.
You thought you got me. No, sir, I'm not gonna catch slipping. Slinging the zebras now like it. Yeah. Again, it felt a little bit more comfortable doing that just because the volatility doesn't seem to be that aggressive on something like the bonds, although we've been experiencing a little bit more volatility. So we'll try and take advantage of that. And then again, Rivian, because it's such a cheaper underlying, even if we were to sell off, 2 points on Rivian all the way down here to $11, I mean, what's the likelihood of that happening? And then even if it does happen, it's probably going to be a very slow, painful process to get down to 11. So it seems to be an underlying that's pretty easy to manage, even having on such an aggressive position like a zebra.
Yeah, the Rivian and TLT zebras are like perfectly the 2 reasons that you would want to take a zebra. It's one's a low IV, slower moving product, and the other one is just a cheaper product where it's worth it to get that leverage, even though it moves a little quicker on a percentage basis.
Yeah, and forget that theta decay, man. Forget that theta decay for the next week. No. How about pistachio nuts, especially Costco's? Is that what you're...
Yeah. I like pistachios.
Yeah.
I can't speak to Costco pistachios specifically, but I'll eat some pistachios if they're around.
I dabble.
Yeah.
I dabble. If I'm hungry enough.
Annoying to crack.
Yes.
But especially if they're already shelled, I'll do a handful of pistachios.
Yeah. But no, other than that, before we start to wrap for the day, just again, keeping in mind that Nvidia earnings after the bell, that'll be really fun. VIX has done absolutely nothing. That's a little bit concerning. We got oil at all-time highs. We got the indices at all-time highs. Yeah. What don't we have at all-time highs? And the volatility has been pretty much dead over the last almost 30 days now. So
yeah, it's interesting.
Quiet before the storm, maybe.
We started to catch some of that upside volatility as we were moving towards
that one threw me for a loop.
Market, which that was strange, but I could almost respect it just because we were getting to like an overextended sort of point where it's like it almost starts to feel uncertain and like are we too high?
Oh yeah.
But it's interesting to me now that when we came down the last 2 days, vol collapsed right along with that down move, and then today we moved back up, which is what pushed us up in the first place, and now volatility continues to collapse. So I don't know. Market's comfortable. Market says these are the levels, I guess.
I think seeing and feeling that divergence between volatility and the price of the overall market, because we're so used to that inverse correlation. So it's like, it makes sense why price is being priced, or fear and risk is being priced into the upside. But it's like, I mean, how often do we see a divergence like that? So maybe another interesting statistical route to go down. But I rest my case. That'll be it on my end. Shout out to all the boiled peanuts fans. I think you guys are still lying to me. There's no way. So whenever she makes her boiled peanuts, she'll chop up some onion, put some jalapenos in there. So she really makes it fancy.
Yeah.
But I still am not buying it just yet. But I rest my case.
I can't endorse the boiled peanuts either. But I definitely.
I mean, soggy. I don't know. I don't know.
All right. Well, yeah. I suppose that'll do it for us today. I have no closing remarks here. Good market and nut conversation. Yeah. This was a fun one. Yeah. Thanks so much everybody for keeping us entertained in the chat. Yeah. This was a fun one and taking the time out of your day to watch. We dearly appreciate it. We never take it for granted. Errol and I'll be back here same time, same place tomorrow. Right? Yes. Yeah. Yep. Yes. 12 o'clock noon Central Standard Time. I believe that might be a bridge. We have some scheduling things happening, but Errol and I'll be back here tomorrow sometime. Very soon. And stay tuned for Futures Power Hour coming up next. See you guys next time.
Peace.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in-the-money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options.
Okay, cowboy, here's an earnings event. Keep an eye out for them when you open your trade. They're fast, they're loose, and they can take you for a wild ride. But that's no reason to steer clear, because you can be your own personal earnings event if you take the bull by the horns. What makes earnings events so special? Before the event, people will start guessing how the stock will move once the earnings report is released. That, in turn, makes the option's IV rank higher. Like way, way higher. The nearer the event, the more the speculation, the higher the IV rank. Then right after the event, IVR goes the way of the buffalo. If you sell high premium options right before the event, when IVR is really high, you can take advantage of inflated prices and lock your profits when volatility disappears. Only if, and this is a big if, the stock doesn't move against you. If it does, well, sometimes you eat the bear and sometimes the bear eats you. Earnings events can hit you hard. They can also pay off big and fast if you play your cards right. Pretty simple.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. Only at tastytrade.
Pay for backtesting? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out tastytrade today.
We just living it up, yo, that's real life.
But they kinda like it when I'm feeling myself. Just to look at me, I don't gotta level up. But they kinda like it when I'm feeling myself. I'm feeling myself. I'm feeling myself. I'm feeling myself. Just to look at me, I don't gotta level up. But they kinda like it when I'm feeling myself. I'm feeling myself. I'm feeling myself. But they kinda like it when I'm feeling myself. Just to look at me, I don't gotta level up. But they kinda like it when I'm feeling myself. I'm feeling myself. But they kinda.
We're back. It's still Wednesday, May 20th, 2026. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's your co-host, Ilya Spivak. Ilya, Nvidia earnings day has finally arrived.
It's a big, big day. We got the FOMC minutes today. We got the Nvidia announcement. There's a lot to chew on, but this is certainly the point at which the markets have to decide. I mean, they've been circling around this idea that it's time for stocks to get off the earnings week ideas and get back to what all the other markets have been thinking since Friday. Now we find out if they can actually do that.
The news that we're paying attention to is this headline that the U.S. and Iran are close to a breakthrough on negotiations.
How many times has this happened now? Is anybody keeping count?
7% drop in oil, markets taking it seriously. So knock-on effects across the board here. But the story, as we just saw in the slides, it's kind of like a buy the rumor, sell the news maybe. Today, the stock market, Ilya, and the technical charts that we're about to share here, they do offer a potential bearish point of view, depending upon your interpretation. But oil coming off may be the most important factor here today. Why? Because oil and hike odds have had a pretty tight relationship over the past several weeks, rhythmically ebbing and flowing around the same times. Blue line here on the chart are oil futures. Those are inverted. The yellow line would be the SR3 Z26 contract here.
Yeah.
Ilya, oil prices have fallen. Cut odds have gone up, right? We've seen oil prices
nominally
move lower.
Yes.
Cut odds have, so the relationship's intact. Hike odds are moving with oil. Higher oil prices, more likely that we're going to see hikes.
Today, well, an interesting thing that's happened too is it's not so much that the hike odds have fallen; it's that they've moved from 2026 to 2027. So we were looking at maybe 60% odds of a hike last, let's call it session or two in this year. Now it's more like 50-50, but also now next year is 50-50 on a hike, which was not the case.
I think that's the meaningful thing here to track, right? A lot of what happens with the hikes and the market's interpretation of what's going to happen with these hikes is largely predicated on oil prices staying up at these levels. If oil stays above 100 for a longer period of time, then the Fed may need to induce some sort of demand destruction in order to prevent inflation from running away, because it transitions from a temporary energy shock into something that spreads throughout the broader economy. But if oil comes crashing back into 95, 90, 80, 85, whatever it is, then you're still going to get inflation. But do you want to induce demand shock in order to fight it, or do you just let it wash through the system? And so you don't get the hike this year, and that has different implications to the cost of money, Ilya, which has been what really pushed us over the edge in 2022. We finally get our hike starting in March. We've rallied after the war started.
That pushes you over the edge. The markets, just historically, whenever they get into some sort of trouble, it's usually because speculation has run ahead, and then the cost of money ratchets up, and that speculation stops making sense.
So maybe we've just put a break in that little impulse here that was making its way through the markets. That doesn't mean that the long end of the curve or long end of the treasury curve is going to be saved, especially if inflation builds and then growth doesn't get derailed. But at the short end of the curve, it may mean that 2-year yields stop ratcheting higher, which in turn would be a relief valve for a lot of the market. So we find ourselves with that backdrop of oil prices in over 6% still, 6.5%. We've had a little bit of an opportunity here for a recalibration in stocks to bounce up and move higher, both in the NASDAQ and in the S&P 500 here, Ilya. But, there's just something about these charts that's making me feel a little bit funny, considering today is Nvidia earnings day, which I'm still a bull. I'm still leaning long. I didn't pull off my long exposure when we had the pullback. I just didn't think we needed to add any more with the break of the 1-week moving average. So I'm being patient here. But if you take a look at what's going on in both ES and NQ, you could make an argument that if Nvidia doesn't yield a move to the upside here and we start to break through the lows that we've seen this week, you do have what could be a bit of a classic topping pattern here. Now, you don't trade this as a head and shoulders until you get a neckline break. And so this could just be continuation, as we've seen dozens of other times in this rally over the course of how many years now. But Nvidia has arrived today. And so I think, given the fact that it's the most important thing in the market, if it is a buy the rumor, sell the news type of session, bulls really should just perhaps be a touch more patient before
Well,
adding.
and this is an important thing. First of all, you're absolutely right. We haven't even seen the FOMC minutes yet. We'll see them in 20 minutes here. Actually, we'll talk about them as they come out. But you're right. We haven't seen the FOMC minutes. And before you get too excited about oil coming off and taking seriously whatever this nth, we're almost there. We're almost there. Boy who cried wolf negotiations. Let's consider we've just had the rollover in the front month CL contract. Yesterday was the last day for the June contract to trade. Now we've gone to CLN 2026. This is the first day of that as the front month contract. And yeah, that's down. Take a look at CLZ6, end of the year. It's down only about half what you're seeing in the front month. That's backwardation going the wrong way to be getting any kind of happy about an inflation risk that's going away.
Because then you get that scenario where you still have all the supply problems, but we never get to the tipping point where we get demand destruction. And so then you're stuck.
Well, this is why you get
higher oil
absolutely
prices
right.
later. That's the floor argument in our oil short put spread trade. Like
and it's why you get the rate hikes moving a year forward. They're not going away. The market isn't saying the problem is going away. The market is not saying oil is unclenching. The market is not saying you're not going to need to hike rates to fight inflation. It's not saying any of those things. It's just saying, okay, maybe a little later.
7442.75. It's a 65-point bounce here in ES. Volatility really not changed all that much over the past week, down 1.1% in terms of raw volatility terms. Small things here to consider right now. If this market is going to see breakouts gather pace, and one of the bona fides of the futures market is the fact that you can trade after hours. So if we do get Nvidia earnings out and it's just astronomically good, it's a bull's bull kind of report where you just can't ignore it and go, who cares if the Fed has to hike, right? So much money's being whatever. We're going to want to see a little bit higher from here cleared out. We tested it earlier today. That swing high that we had back here, 74.54. If we were to actually draw this back a little bit more, you can see that it was resistance here. May 11th, 74.54.75. May 18th, 74.54.25. So I'm just going to argue that if this rally does continue today, you clear that hurdle first. It's what's another 12 points between friends. And then you start to build. And if you can get through there around Nvidia earnings and we start to hold up through there, the all-time highs become clearly in focus with maybe a one last gasp, Ilya.
Yeah.
But if you don't, then right now you're stuck in a range. So you have 74.54. You're down to we'll call it 73.54. It's basically 100 points. That's what you're working with right now. So if you lose the bottom side of the range, then you get your head and shoulders, and we have a very different conversation in front of us.
Yeah. Yeah. I mean, I think you sort of look at this in the context of what happened when this thing tipped over last week, Friday. And I think the cadence starts to be something like stocks diverge from the war trade late March, early April. Everything likes the ceasefire at that point. The bonds bounce, gold bounces, dollar pulls back. All of it likes it. Stocks are the only ones that run away. And it's, I would argue, because of the earnings season, because you're waiting to hear from these four hyperscalers tell you just how much money they're going to pour in the AI build-out machine, because that's what kept you going in the first quarter. Okay, we've heard that now. Last week, there was a kind of marker in that story with the Cerberus IPO. Like, okay, here's a chip company. Here's an astronomically good IPO where they priced the thing at something like $185. They walk out the door at $300 plus. Everybody makes money. Woo-ha. The next day, everything turns and the stock market goes right. So that was the crescendo. Let's get back to the war trade dynamics. Earnings season's now over. That kind of part of the story is done. And now you have the last kind of bit of what could maybe possibly revive it. But I think the important thing here is it's been very event risk driven, in the sense that the markets haven't held up because XYZ thing was better than expected or not as bad as feared or somehow more AI maximalist than was already there. It's because we've had the steady flow of news that nobody's wanted to front run because the numbers were going to be big. And so, okay, now you get Nvidia, the poster child for really big numbers. And the expectations are big numbers. I mean, we're looking for a big jump in revenue, big jump in EPS from quarter into quarter. So the bar is set really high. And you've had all this optimism already. So you look at the sort of cadence with which Nvidia has reported before, and you go, is this likely to be a Cerberus IPO type thing? Cerberus, that's the one. Where it's more a sentiment check. Nothing goes wrong. All the numbers are good. It's like, okay, well, yeah. Cool. We know. Got it. And then everything washes out again, just because the incremental news flow to give people an AI reminder has run its course. And so that's really, I think, how I'm thinking about it. When you look at the past 4 quarters for Nvidia, they've surprised higher 4 out of 4 times last year. Mm-hmm. And the sell-off got worse progressively as you moved. About a 10% beat on EPS in the first quarter, 3% rally, 4% beat, about a 1% sell-off, 3% beat, about a 3% sell-off, 5% beat in the fourth quarter, 5% sell-off.
I'm going to say the stupid thing that I've said every earnings report for Nvidia for I feel like 2 or 3 years now, which has not really let me down thus far. With the newest quarter, we're going to be adding in an estimated $1.75 worth of earnings, and we're lobbing off the last quarter for the trailing 12 months, and that's going to be 81 cents of earnings. So if Nvidia simply meets expectations and price doesn't move, you're going to get a ratcheting down in the PE ratio. PE ratio for the trailing 12 months right now is 45. Yep. People liked it at 45 today. They're going to probably like it at 37 tomorrow. So why wouldn't they jump back in?
Well, that's why I think this is a sentiment check. More than it is about the numbers. I mean, who doesn't know that these numbers are going to be amazing?
I mean, fantastic. They look.
Which part of this is not already in the price? That Nvidia is the golden child of this entire thing and has been one for a few years now.
It's got to be in the price at this point in time.
That's exactly it. It's a sentiment check.
The revenue
much more than the substance of the numbers.
The revenue is expected $78.4 billion, which is almost double from the prior quarter. Right. So I mean, we all know this is coming, but
amazing expectations. I mean, EPS well north of $1 expected. We're looking for them to blow the stops out again, and they probably will. Again, the question is, do you get an upside surprise that's big enough, which you haven't seen recently for about a year plus now, that actually gets anybody excited?
Yeah, I mean, today's hurdle is whether the results and guidance can continue exceeding what's already an aggressive environment that's priced in here.
The rubber band is stretched really far now.
You know, one thing, and we've talked about the Korean semiconductors, and I don't know if you saw this today, a South Korean funeral home that's publicly traded announced that it lost $34 million betting on a 2 times levered Ethereum ETF. And so it had to report that to its shareholders. There's
what an interesting world we live in.
There's a different interpretation, though. And one thing I like about head and shoulders patterns that never materialize is that you can make an argument that they're just continuation efforts that are gathering pace. You never want to sell a head and shoulders pattern if you're a technical trader when you're carving out a right shoulder. It's not enough information yet. It's a little jumpy. Because if you are jumpy and it's not a right shoulder and it's the market just having carved out what's basically an equidistant low where the left shoulder would have been finding a bounce into the head, you could be looking at a triangle or a pennant or a flag or some wedge of sorts, which here in the NASDAQ area, I could draw that up here too and say, look, this is bottom left to top right on my screen. Here we have a little bit of a bullish falling wedge. That was the consolidated price action over the past week and a half. We're finally breaking out. Give me a little bit of confirmation here through that bearish engulfing bar swing high that we had on May 18th intraday, 29,419.75. Get through there. We've cleared out that most recent lower high. Boom. Let's take another stab at a move up into the highs again. That's what the technical pattern would suggest. So it's why I'm watching the head and shoulders. I'm not trading it. I don't think you are either here, knowing how you're disciplined around those type of things.
No.
There are two different interpretations.
But I'm the world's most pedantic person when it comes to the technical patterns definitions. So no, I'm not going to assume that this is building. To your point, I think you're absolutely right. You just don't know here. What you need to see is the neckline give way. It's one thing, but to have some exposure against the top here, as I do, Friday's top, and basically say, okay, that's now some sort of a line in the sand. If you get above that, you've invalidated something. But at this point, you're kind of in the middle of that move. So to fight it here now ahead of major event risk first in 10 minutes with these FOMC minutes and then with Nvidia, asking for trouble.
And, not for nothing, some of the technical momentum is starting to be regained over here on these lower term timeframes. We've started to see MACD, for example. It's poking its head back up through its signal line. Stochastics are racing towards overbought, which during the decline, they went from overbought into oversold. And on the recent rebound, they never got back to overbought. They just went into oversold again with a little bit of divergence down there, waning momentum. So, Ilya, the market may do a buy the rumor, sell the news thing here today. Maybe it's teeing itself up to take another burst and a stab at 75. And we know we're still in this weird seasonal window for the month of May, where through late Memorial Day, the market tends to give a little bit of a pullback. So maybe we can't reach 75.50 again here. But I'm far more concerned with, because I'm worried about my risk, not necessarily the potential gains here. There's no reason to, open up the Douglas Elliman catalog and start looking at homes in the Hampton right after you buy your lotto ticket. I've never done something like that. I'm thinking about what happens if the market has the buy the rumor, sell the news reaction. And if tomorrow we get our, it's after hours and Jensen speaks and everyone's happy, and then Asia responds and Europe responds, and we have another Iran catalyst where, we don't get the war ending despite oil pulling back 6% today. And then it's a 73.50 market. And it's a 73.40 market. And what does that start to look like, knowing that a lot of this upside chasing has been done already? And folks, the way that they've been trading this market hasn't been necessarily, they've been hedging. They haven't been selling their stocks. They've been part of the reason why the VIX has been staying up in the high teens, even during the pullback and the continuation higher, is that traders aren't selling out of their stocks. They're buying downside put exposure. So we've gone through VIXpiration, we've gone through OPEX, all the dealer gamma hedging that was helping keep the market impinned and up and volatility suppressed. That's been washed away a little bit now. So it's a more tenuous situation. You get to 73.50. If you're a bull, you really need to have a gut check. How long are we operating here? If it's within 30 days, it may be good to pull back and reassess.
Yeah. There is every opportunity for this market to have some sort of a sentiment revisit here, especially since all of the other markets that aren't stocks have really been a chorus in one direction. They've all kind of been saying the same thing. Gold, bonds, dollar.
What about vol?
Oil
vol
itself.
Vol futures are at their lows for the year right now.
Yeah.
Summer melt up, baby.
That may be what this says. I wonder if this is more a reflection of just a lack of conviction and the idea that this melt up that we've seen since early April was occurring on diminishing volume. This is based on S&P options, and S&P is the one where you can very clearly see participation was fading the entire way up. And so you look at this and you go, okay, yeah, vol's down, but is that because nobody wants to bet on it? Never mind that they want to bet that it's going to stay low. They just don't want to bet. And so you get this kind of fizzle. Could be.
Volumes today going into Nvidia a little bit higher than I would have presumed. I thought that people might be taking a bit of a breather here, keeping their powder dry. But 1.2, nearly 1.2 million contracts traded here today. A lot more Tesla options. Frank flagged this earlier. A lot more Tesla options have traded today than what we've seen in Nvidia so far. Perhaps, again, people they've already placed their bets. There's no reason to jam it in a little bit more. Sector rotation today, Ilya, before we hop over to bonds prior to those FOMC minutes coming out. Oil is underperforming, broadly speaking here. XOP, XLE, IYE, OIH, 4 of the 6 sector ETFs that are down. But my goodness, is this, I think this is just a beautiful rotation today here, Ilya. The other 2 sector ETFs that are underwater are consumer staples and healthcare, XLP and XLV. At the top of your list, home construction, ITB, home builders, XHB, semiconductors, SMH, consumer discretionary, XLY, KRE, XRT, XLK, XLI, XLF. That's a lot of growth. That's a lot of just good stuff you want to see at the top. I don't like those rallies when it's XLE and GDX are your top performers, even if I have some commodities exposure. That's not what a bull needs to get a sustainable move to the upside. You need that breadth across growth sectors, period.
Yeah. Yeah. I think you look at something like an RSP, you look at something like QQEW just to get you a sense, and you see the sort of the one-sided nature here. We essentially set in RSP, let's say, we set the high for the year mid-February. Then we had the war sell-off from early March until late March, early April. We've since seesawed back to those highs from mid-February and stopped. We have gone now absolutely nowhere for the better part of a month in the equal weighted S&P. And that just tells you how much conviction there is. You put that together with falling volumes, not just in the futures, because you could make all kinds of arguments there about the specificity of the contract and blah, blah, blah. Volumes are falling in things like SPY. And so you look at this and you go, right, nobody has any kind of confidence in the broader story here. Not this way or that way. And what they want to really see is for the shoe to drop somehow on this inflation war, what the Fed will do kind of narrative. And until then, I don't think anybody is trying to make a big bet. I think rightly, as you've pointed out, the concern is all of the AI hype that there was to bet on might be there now in the price, at least for the immediate term. And if Friday was any indication, then the stock market is coming back to worrying about war and worrying about inflation and worrying about rates. And we can see with that dip from February into the March lows that the broader market does care about.
I will point out that we do have a bounce here today. RSP and QQEW are beating their market cap weighted indexes today. RSP here right off that 1 month average, like we did here at the end of May, or rather end of April. We're getting a hold here again, and today's candlestick below yesterday's low, above yesterday's high. That makes today a bullish engulfing bar against the 1 month moving average, which I think that's a decent sign that maybe the market wants to turn up. QQEW today, to its credit,
that's the one that's impressive. Yes, it really is trying to break out here.
The breadth is starting to turn the corner again and improve. Yes. So QQEW would close at an all-time high here, the equal weighted NASDAQ. So much as this being a Mag 7 AI-driven rally, and it still very much is, past 3 sessions, while QQEW is shooting up, Mag 7 coming in. So the breadth here, I don't want to ignore it, but Ilya, that Mag 7 ETF, that kind of looks a little head and shoulders up here.
It does. And it does. And the Mag 7s have underperformed also. I mean, Mags have been underperforming the index this year. They're only up about 4% since the start of the year. The index is up almost 15. The headline index, QQQ, let's say, as your kind of ETF equivalent, just to keep the pricing structure between assets the same and sort of comparing it that way, so as not to get fuzzy with here's a future versus an ETF, cost of carry, etc. Mags have been underperforming. The equal weighted is only up about 2.5%. But software has been improving a little bit from, let's say, early April when it was down as much as 30% for the year. It's cut that in about half to about 14. But it's really just the semi that are still up close to 55%.
They got their touch of the 1 month moving average yesterday, Ilya, 526.27.
Yeah.
And they've immediately bounced. They're up 5% since then. So the market.
It would be weird, wouldn't it, if they sold off ahead of Nvidia?
It would, and we just got an announcement that OpenAI is filing for its IPO maybe as early as Friday. We have a new bell to ring.
Won the case, so they've got that window now. Maybe.
Does the market melt down before OpenAI's IPO? Do we have a new thing to chase off in the distance? Who knows? Let's talk about these bonds.
It's a lot. There'll be a lot of money here.
We're going to jump over to bonds real quick because we're going to go into a conversation about these FOMC meeting minutes as they are just being released here. So waiting for them to cross my screen. Ilya, today, and actually, no, we're not. We're going to do this normally. Oil here, because that's what the FOMC meeting minutes are all about, the push higher in energy prices right now. So oil is an appropriate place. So one thing about oil today, there's a competing headline that's out right now. Trump and Netanyahu apparently had a very tense phone call. A letter of intent has been shared by the U.S. to end the war in Iran. Netanyahu apparently thinks that the best course of action is to continue the bombing, which may sound surprising to some folks who've been following the Iran war and Netanyahu's relationship with Iran over the decades. I digress.
And not to others.
Yeah, to no one else. What we do see here, though, is that oil being driven lower by the U.S. now kind of forcing, we're going to try to end the war, Israel, this is what we're up to, deal with it. Oil gets its 5.7% pullback. Fed minutes here out right now. Quote, a majority of participants highlighted that some policy firming would become likely appropriate if inflation were to continue to run persistently above 2%. Many indicated a preference for ditching the easing bias moving forward. So, Ilya, if oil is still up at 100, 105, I think those FOMC minutes land a lot differently than if they're coming on a day when you have oil down 5.5%, 6% right now. Because there's at least something in the market that's telling you maybe the pressures that are pushing us up here aren't going to stick around persistently. You can get that hope that we're not going to get the hikes. But you and I have a different perspective on that reality, where inflation's been running above 2% persistently for years now, right? You can't cut in this environment no matter what. So if you're an equity market bull, you're hoping that the Fed is going to withstand the pressures of hiking, it does not automatically presume then the next move is going to be a cut. If it is, that could be next year, 2 years from now.
It could be a long way off.
So that's more of the reason why we talk about is the Nvidia earnings. Are they enough to convince people? Who cares about oil and rate cuts? This story is still going. It's getting stronger. It's making even more money. I don't need to worry about the cost of capital going up or down by 25 or 50 basis points for a 2 or 3 year window. That'd be foolish for me to miss out on the thousands of basis points of growth opportunity elsewhere. So it's a really interesting mix. The FOMC minutes, oils move, Nvidia earnings today, all kind of colliding. I don't see anything in the minutes that's provoking a significant reaction. Do you find it to be the case because who cares what Powell's led FOMC has to say when Porsche gets sworn in on Friday?
No, I think, in fact, people that think about it in those terms have it wrong. We do not have a dictatorship at the Fed. Having a chair be this or that doesn't actually establish any kind of scope for this policy outcome or that policy outcome necessarily. The FOMC is a committee. It votes as a committee. The chair does have the bully pulpit, as it were, and there is a sort of inherent sort of gentleman's agreement to support the chair and help the chair build consensus around decisions. But all these niceties are out the door ages ago. Fed Chair Powell had to make a proof of life video about these subpoenas. He even wore a strangely colored suit for it. We have a situation where people who are at the institution, if anything, are going to be more minded toward making sure every I is dotted and every T is crossed. And by the way, I would suspect Kevin Warsh is among them. He's been auditioning for this Fed job for decades. It's not because he doesn't believe in the Fed. He very clearly does. He's very clearly passionate about it and its independence and what it should be doing versus what he thinks is a breach of its original mission. If anybody here is going to be a loud defender of Fed independence, I would not suspect that Kevin Warsh is going to slack in that department. And so with that in mind, he can't outvote the entire committee, even if he wanted to.
Even if he wanted to. Right. And I think that's Stephen Mirren's point as well. He recently spoke about this, how when you look at other government agencies, he was first in the White House in the executive branch. And when you look at how that operates, the agencies that exist have someone who is an executive at the top who makes the decisions. And if you don't get along with that executive, the executive just removes you, right? They want people who are supporting their mission, supporting their work, pushing forward in the same direction, all rowing together, as it were. But at the Fed is not like that. When he says like, oh, this guy's the chair because he's basically our spokesperson and, our press secretary. Otherwise, everyone has an equal weighted voice. And that kind of surprised him. Take him at his word. Warsh is not going to be able to push the Fed around here. So he's looking at the FOMC minutes today. We're uncomfortable looking at inflation the way it is. It's nothing that we haven't heard before that they've been saying publicly. It does further
interesting set of minutes.
Can't cut right away if that's what he wanted to do. And also, just poetically, Ilya, if Warsh has to hike rates at any point in the near future, that would be funny.
I mean, he's gonna become enemy number one. I mean, let's not forget the president put Powell in his job. But just a couple of headlines from these minutes here. Many policymakers would have preferred to remove the easing bias from the policy statement. A majority of participants said some policy firming, that is rate hikes, would likely become appropriate if inflation were to continue above 2%, right? They generally judge that continued elevated inflation and uncertainty over the Middle East could necessitate keeping the policy rate stance for longer than anticipated. Goodbye rate cuts. Almost all participants supported maintaining the Fed funds at the target range as last time. So sorry, Stephen Mirren. Participants generally observed the Middle East conflict could have significant implications for the balance of risks. We know that. For me, this is the key part. Some participants were concerned about a scenario in which elevated energy prices and tariffs could result in inflation pressures becoming embedded more broadly. What did we just see in the CPI and PPI data? They are becoming embedded more broadly. They're showing up in services inflation.
He could fix this so easily just by he could basically undercut the entirety of the oil rise by getting rid of the tariffs. It would be legitimately good policy to do. Like, you want to bring down price pressures, get rid of the tariffs.
Just don't reinstate them. A lot of them have already gone away. All you'd have to do is come out and go, you know what? Those tariffs that are gone?
They worked. We don't need them anymore.
They worked. We made all this money, baby. Now we're going to hand them all out back to the companies because we always said we were all going to get rich. Go home.
Oil here, Ilya. The question for me to you is, you've been someone who's long. You and I have had different approaches to operating long. I've been doing the whole, this thing is not going to fall too far, so I like short puts better than long calls because it's been stair steps up and then elevator down. Today is, very plainly here, elevator down, stair step up, elevator down, stair step up, another elevator down. So how are you approaching this now? Because if we do have a deal in place, right, and let's just say we get an announcement that the Strait of Hormuz is going to be reopened and the oil starts flowing. We know that the lost barrels are not going to be replaced. We know that demand is going to be there to refill the SPRs. But what's the case for seeing 105, 110, 115 oil moving forward?
I think the biggest catalyst here becomes the amount of uncertainty premium that you have to add into the price, essentially in perpetuity. Because whatever you're going to do here next, there's a deal, there's not a deal, whatever happens, it's not going to be the status quo before the war. Red lines have been crossed. So now we're talking about, okay, Iran is going to perpetually demand some sort of gatekeeping fee on the strait, or they're going to periodically menace ships there. Certainly the shippers and the insurers are going to worry that that could become the case. They're going to ratchet up costs on their edges because it's more dangerous. I mean, let's say you have a deal. Let's say you have a deal yesterday and tankers start to come out of the Gulf. Who's going to send them back in? Who is going to say, I'm going to take an empty VLCC and put it back into the strait because I think it's going to come out?
We have seen crazier headlines in recent days. We did the math here on air a few weeks back about, could you replace all the oil with trucks across the desert? No.
Nope.
But they're trying. There's 3,500 trucks working in two-man shifts driving round the clock right now across Oman and Saudi Arabia, which is a pretty remarkable thing to do.
No, they're trying to do what they can, and they've opened up a couple crossings into Turkey where they can try to get things in, and then maybe get them on ships. They've opened up a few others to try to get things on ships that way and sort of get around this. But you can't replace with land-based transportation what you can do by water. And the scale is just not even remotely close. I mean, you don't even have the kind of road networks to do it, to try. But they're trying to do the best they can, and Godspeed. But it's not going to alter the bottom line here. So I'm still long. I'm long nat gas now. I think this
nat gas has an oil problem today. Nat gas has an oil problem today.
It does.
Nat gas is the yellow line, oil futures are the blue line here.
Yeah.
Basically since yesterday afternoon when stocks started stabilizing and oil prices started coming off, natural gas just has a knock-on effect of expectations of less tight supply in the very short term. That is proving to be a drag here. In the NGM6 contract, note that as we broke out here, Ilya, we are getting a bit of a reversal bar here today, above yesterday's high, below yesterday's low, below the 1 week, and volatility is coming back in. So NGM6, which is, I have some short-term exposure here, maybe cashing out yesterday near 3.2 would have been the right bet because that's where we're looking for this to go. M6 is now, or rather N6 here, is now where most people are going to be operating because it's still sitting at the 36 DTE. You could go to 69. This one looks like it's in a little bit more trouble right now. So I'm keeping an eye on this because otherwise we're back below the 50. We're back below that January neckline here, or January support. And all of a sudden, this is an inverse head and shoulders pattern that failed to break out. Usually that means you take the equimeasure distance from the high to low here, and we add it back to the shoulder point that failed. So that would be here. And so looking at 2 or 20 cents and change, then natural gas has like a 275, 270 price target immediately. And that's not something that you want to have long calls in, even if they're lotto tickets in a single digit IVR environment, which is really the whole ethos of the trade.
Yeah. I mean, I think at this point, I'm just operating on the general kind of basis. Well, first of all, that the head and shoulders in NAD gas has worked, that it has completed. We'll see if it works as far as follow through, but that it has been completed, that the pattern is there. And so now we see if it actually is going to work as a bottoming signal. And by the way, you don't have to believe in a head and shoulders pattern or any funny named pattern. All you really have to do is just look and say, okay, there was a rounded bottom. It had a top. We've broken that top.
Look further out into the future, it looks not so hot. NGZ6 here, that does not look like something I want to buy. So the
also doesn't
tides are
look like
changing.
something you want to sell.
I
mean, it's sitting directly on support, at least since the beginning of the year. I mean, take a look at those lows back in January, and you're right there.
Yeah, natural gas is a tricky one here. So, I mean, I'm going to hold the short-term stuff because it was, risking 1 to make 10. I'm happy to take those bets. Oil, on the other hand, here, Ilya, I don't see a reason to change the approach before we bump over into bonds. If it rallies, you sell call spreads. If it falls, you sell put spreads across different durations. So if this is a market where we're going to get another chance for a big pullback here, I'm looking out to the X6, the Z6 expiries. If you want to give me a decent put spread to sell around like 72, 74, 76, something around there. Geez, like 72, 74, still better than 2-1 at 78% probability of profit. I mean, it's difficult to look away.
I think
I can't have all my capital tied up in oil premium.
Well, I mean, I think this is.
Are we allowed to do that?
This is the perfect place, I think, to go to bonds, because this is really just that story. And if you look at what's going on in oil, and you're any kind of reader of reflexivity thinkers like Soros, sure. I don't know if Scott Besson has written a book. Has he? I don't think so. I'm not sure. But certainly there's been a lot of reading and writing by the likes of his mentor and my trading spirit animals, Stan Druckenmiller. But when you look at sort of any of that and you go, is it oil that's driving rates? Or are you now getting to a place where it's both? Oil is driving rates are driving oil, and the markets are getting into this thing where they sometimes forget that correlation is not causation, that relationships might flow one way and not another, because
so just to take a step back here, what you're suggesting is, in layman's terms, there are folks out there who know, we all understand that higher oil prices usually brings about higher yields. And so people are seeing higher oil prices going up, and therefore they're pushing yields higher. And there are folks who know that this relationship exists. They go, oh, yields are continuing to go up. I don't own enough commodities. So they end up buying more oil, and that pushes up the energy complex. And then so the rates traders go, oh gosh, commodity prices are going up. Yields need to be higher. And so they start doing a dance with each other. Kind of ignoring what the music is actually playing on in the background.
That's right. And so I think if you look in this environment on a day like today at something like ZT, and I want to go there because this is immediate rate expectations. Just go ahead and put a horizontal line at the previous low. Is that a market that you buy? Or is that the back test of support as resistance before downside continuation?
Bonds are back to resistance today. They're back to their 1 week average. If you're looking at the short end of the
this
curve.
looks to me like a market that goes, you wanted a mulligan to sell some bonds. This is probably the last one you're going to get for a minute.
Yeah, I mean, you got like half a point here between 109.5 up to like 110 in ZN, and then in ZB it's a little bit of a wider range, but you're going from like 110.5 up to 112.
Yeah.
If if you're a bond bear, this is it. And then realistically, oil, you're calling a top in oil. Like that's the trade right now. Bonds are bouncing
exactly
because oil's down.
Exactly.
And so if I want to be an oil bear,
if you want to buy the bonds here, and I get it, bullish engulfing, yada yada yada. If you want to buy the bonds here, you're saying there's a top in oil. You're saying inflation is solved. Is it? Or, by the way, the other thing you might be saying is that all these things are so not solved.
Right there, Ilya.
Yeah.
Is inflation solved even if oil goes back to 75? No.
For very bad reasons.
And the bond market won't reflect that. This is the disconnect here. If I'm trading bonds because I'm worried about inflation, oil is in the driver's seat. Just trade oil. Because of this bullwhip effect going through the rest of the supply chain, the bond market is not going to go, oh, well, it's all gone. Oil's down 20%, so ZB can go right back to 115.
Right.
That's not how that's going to work. I mean, if
because
it works out that way,
you can't unclench all that.
You can't unclench the inflation expectations just yet. We're going to have to get evidence that it's slowly moving the way through the
system.
It'll
take months.
If I want to call a bottom on bonds, I might as well just short oil because that's going to have way more convexity in the short term.
And it's going to react immediately. Whereas the long end of the curve is sitting here going, yeah, okay, you could reopen 5 straits of Hormuz. You've lost the barrels. Nobody's going back into the strait for a while. Just look at what happened with the coast of Yemen and the Houthis. That traffic is still not back. And there's been a peace deal with them last year. It's trickling, but nothing like what was there. Because insurers and shippers are afraid. And they're afraid because of all this policy uncertainty, because the steward of the seas heretofore, the United States, is apparently high on its own supply.
If I wanted to call a bottom here in bonds just at the full integer point below the recent swing low, that gets you to 108 as the short strike, 107 as the long strike, 79% probability of profit, risking 3 to make 1, which is, that's decent. Risking 3 to make 1 at near 80%. You can't hate that ever, Ilya.
No,
if we went out to
that's good risk reward.
Right. If we went up to 57 days to the 1 standard deviation move in oil markets, heck, we can go back to the 120, 122 short call spread here. 80% probability of profit is not going to give you the same risk to reward. So I'd have to short oil. This wouldn't be a premium collection trade. I'd want to have some downside exposure in oil. There's different ways to crack it. Bonds are interesting though, down here. This is kind of like a wedding crasher's mindset. Not that if I'm a bond bull, it's less of this thing's going to rally and it's more of this thing may just stop falling. So if you had to tell me how would I express a bullish bond view right now, it would have to be short puts rather than long calls. That feels like the more reasonable situation given the backdrop. And one of the reasons I think that, Ilya, is because of what's happening with metals. If this was such a hunky-dory, beautiful, everyone is happy kind of day, how come gold is up only 0.6%? How come it's not back through its 1 week average? How come silver prices are only up 1.7%, still below the 50-day, the 1 month? How come copper? Well, copper's its own story here, but copper's still not above its 1 week moving average yet. So this big, oil's off and everything is fixed. Yields are sticking around. And if yields stay elevated, it has that consequence for so many other asset classes here. Maybe the Fed doesn't hike, and so that keeps the equity punch bowl full for now. But in terms of recoveries in other products or other asset classes, I just observe the lack of enthusiasm on a day like today, even if it means we're this close to the war ending.
Well, and note what's going on here. Just in the past maybe hour or so, oil has stopped falling and has started to nudge up a little. Dollar has bottomed and is starting to nudge up a little. Stocks have been basically stalling for, just about 3 hours. So has gold. So have bonds. This is not a move of conviction. This is not something that continues to run. This looks more like nobody wants to be one-sided before an event risk like Nvidia. And we're going to have Nick on with us on Overtime when we talk about it. So definitely come join us for that. That should be a big tell. about what all of this is going to look like when we fast forward even just 24 hours.
You know, I can't think of a more bearish omen, but I don't know if you saw yesterday, a vehicle exploded right outside near the charging bowl down in Broadway. So, yeah, I don't know.
Not what you want to see.
Not usually what I want to see. Thank goodness we're not superstitious around here.
Yeah, really.
Copper prices are bouncing where we'd want them to bounce, though. You know that I've been riding this little bull trade here. I love that 620 level in the N6 contract. We had our 1 month moving average there yesterday. Copper today is holding where it needs to hold. Ilya, that's exactly why we got out of the shorter duration, short put spread, and use this opportunity to see if we could get into a long call spread, 6.7, 6.8, effectively just calling for a return back to the highs. You break out, you return to the breakout point, buttressed by your month average. You can get a little bit of a bounce here. Oil prices being lower today and copper going up, noteworthy. We don't get demand destruction in the global economy, Ilya, but we still face same supply constraints, and the sulfuric acid still not getting out of China. What does that do for copper? Probably squeezes it in the short term. And we have Peru mines shut down and Chile mines shut down, and there's issues in Panama right now. And those are all probably going to go away by early 2027 if the local reporting I'm reading is accurate. Okay. And I try to focus on the research reports from like the folks in the financial community in Chile and Peru. Copper is not going to be something that sticks around at a high level for a very long time. Maybe it gets to 7, maybe it gets to 8, but then I couldn't possibly chase it higher from there, especially in the fourth quarter, seeing what's around the corner. But right now,
you start to see those demand destruction conversations start to happen in copper.
Well, right now they can't do mining right now. They can't do mining right now in parts of Latin America because they just don't have enough fuel.
Right.
Because of the Iran war. And so like those are the kind of things that are leading to this short-term constraint that eventually over time will be ironed out.
Well, and Latin America is a big incremental oil producer. They've been exporting a lot. Argentina, Guyana, they've been Brazil. They're trying to cover demand that otherwise would be covered out of the Gulf. But that will even out eventually.
Ilya, the dollar's having a meaningful down day. The Australian dollar's up 0.7%, but I'm looking at the pound, I'm looking at the euro, and they still haven't like breached the thresholds to get back to a perspective or a point.
Again,
it's like bearish.
These look like mulligans.
But also the dollar here had a chance at breaking out. And so it feels a little tepid, as it were. It feels like we have
go so far as to say that it had it. I would say it's still in the throes of it. It's testing the top of that range that it's carved out. It hasn't gone much of anywhere at that level. It's testing. This will be the moment of truth.
The yen not falling today with oil coming off and yields moving lower is probably a tell of sorts. Ilya, if we get an announcement from President Trump and Iranian delegation leaders that we do have a deal in place, it's like a release valve for the yen. I wouldn't be surprised if the BOJ tries to give the yen another little nudge on the other side of that. If they get like some wind in their sails instead of fighting the market on an intervention, they get a favorable condition now where folks out there are naturally taking down their dollar yen spot exposure as is. And so they can give it a little gentle nudge, a little push.
That's their sweet spot, really. When it is for intervention is they've learned now that you don't fight markets, you help them get where they're already going.
The intervention bought them a bit of time. We are trading today effectively at the open levels, just north of the open levels the day prior to the April. Yeah,
you've essentially erased it.
Right? So they've essentially erased it. They've lit all that money on fire to just buy time. So if they get another chance, what does that look like on the charts? You could do 65, 66, risk.
It's actually a really nice adherence to fib levels. If you drop just your garden variety retracement from the intervention high on April 30th down to the intervention low on May 6th, you can really see like this thing is holding those levels.
Here to here, and we add some levels in here. You probably want the 382 or the 618 rather is 0.618, 0.6. New hands apparently. This is very embarrassing. Okay, yeah, you're trying to hold.
Trying to hold.
My thing with the yen right now is like, as long as the oil prices stay high and yields stay up, you really can't justify being long. But
Right.
Ilya, the trade
Because
itself,
the carry stays alive.
yeah, the trade itself though, 64.5, just to get back to where we're 65, 66, risking 1 to make 9 on a potential yen intervention. I mean, you know what? I'm going to put that on here. Just, it's something to have, a little flyer. I missed the last one. We were talking about it last time in April about approaching 160 in dollar yen, and maybe we're there again today. So calendar for tomorrow, S&P PMI day. I know that's your favorite day of the week this week.
Yes.
We do have the FOMC minutes today, but the market thinking more about Porsche perhaps on Friday. Nvidia
Could be.
earnings matter more than anything else. And then how the market digests them tomorrow too. So it's not just the after hours here. Today, I'll be back with Nick for last call. I'll be back with you and Nick for overtime. So we're taking an hour break here. We're going to be getting ready for the most important event of the month, Nvidia earnings. So be sure to tune in. Last call, 3:30 Eastern, 2:30 Central, and overtime, 4 Eastern, 3 Central. Good luck trading. We'll see you in 1 hour.
Buckle up, everybody.
So welcome to the Greeks Crash Course. My name is Jim Schultz. I'm going to be leading you through this series, through this 10-episode series, where what we want to do is we want to look at the Greeks that we as Tasty Traders use most of the time, that we as Tasty Traders use to put our positions and our portfolios in the best possible spot. Now, of course, this is going to include the first order Greeks that we're all pretty familiar with, but we're also going to dabble into some of the second or third order Greeks that we find to be very, very important. Now, in each episode, we're going to follow the same sequence. We're going to cover 4 different things. First, what is the Greek? Second, how do we primarily use that Greek? And then third, how do we improve our returns with that Greek? And then fourth, how do we decrease our risk with that Greek? So without further ado, let's dive into episode number 1, Delta. Okay, so starting off, what is Delta? Well, what we're going to do is we're going to attack this thing from 2 different angles. We're going to talk about the mathematical angle, the mathematical side of things, and we're also going to talk about the intuitive side of things. So let's start with the mathematical explanation. Well, Delta is very simply how an option price will move given a $1 move in the underlying stock price. Now, as options rarely move 1 for 1 with a stock, what a delta does is it allows us to approximate how the option price will change given the stock price change. So, for example, if an option has a delta of 30, that means that the option price is expected to move by 30 cents for every $1 move in the stock. If a delta is 50, then the option price is going to move, 50 cents for every $1 move in the stock. So mathematically, it really is that simple. If you want to reach a bit further down the learning curve and take a look at some deeper level mathematics related to delta, you can look at the Black-Scholes option pricing model, because delta is the first derivative of the Black-Scholes option pricing model with respect to price change. So it quite literally shows how is an option price going to change when the underlying stock price changes. Okay, but what about the intuitive side of things? Well, given these quantitative foundations, the intuitive side of things is actually quite easy. It just gives us some sense of how are my options, how are my positions in my options portfolio going to move around as stock prices move around. We usually keep it that simple and that clear and that fundamental at Tasty. Here's where things get pretty interesting. This is actually not how we primarily use delta. We actually use delta in a couple of other ways. Which brings me to my next point. So how do we primarily use delta? Well, in addition to that textbook definition, there are 2 other interpretations of delta. Number 1, delta can be used as an approximate probability gauge. And number 2, delta can also be used as a share equivalent to measure your directional bias or your directional exposure. Now, interestingly, at Tasty Trade, we actually probably use delta's textbook definition, kind of the standard, default setting of delta. We probably use that guy the least. Instead, we use delta as a probability gauge and delta as a directional bias measurement at different points in time. On trade entry, when we're putting on a brand new position, that's when we lean on the probability aspect of delta. When we make adjustments to that position, that's when we might use both the probability gauge and the directional bias that delta provides us. But at the portfolio level, like when we look bird's eye view, 10,000 foot gaze, that's usually when we lean on delta's ability to give us a measurement of directional bias exclusively. So for example, let's say that I was considering a short put strategy. Hey, quick shout out to my second crash course where we talked about strategy management and we went over short put. So make sure you guys give that a look. But let's say I'm considering a short put strategy that has a delta of 30. I know that the approximate probability from that delta is 30% that that option will expire in the money. Now, I'm a premium seller. I don't want the option to expire in the money. I want the option to expire out of the money, so I have the inverse of that, or a 70% approximately probability of success. This is very, very useful for me at trade entry. Now, let's say I have a position on and the delta is 40. Well, understanding the directional bias, understanding the share equivalent helps me process the fact that this position is going to feel like owning 40 shares of stock, even though the contract is for 100 shares. Conversely, let's say that the delta was 80. Now I know this is going to feel like 80 shares of stock on a 100 share contract. So it's going to feel a whole lot more like the full contract size and the full contract weight. I can gather all of this from the delta alone. Now lastly, let's look at this from an overall portfolio standpoint. Let's say that my portfolio deltas were 200 and those deltas were beta weighted to the SPY. That's going to tell me, that's going to communicate to me that I effectively have what's going to feel like 200 shares of SPY in my overall portfolio. So that gives me kind of a broad market view of the directional exposure that I have with all of my positions in the aggregate. Understanding delta in these different ways, man, this can really help me make the right decision at the right time. Okay, so let's take a look at the return side of things. In the world of options, somebody once said, for every gimme, there's a gotcha. And delta's relationship with returns, man, this might represent the most classic gimme gotcha exchange that exists in the marketplace. Now, of course, what we're going to cover for the next 30 seconds, 60 seconds, this is not the only way to generate returns as a premium seller. This is not the only way to generate returns from using options. But when we look at delta's relationship with returns and credits and premiums, this is going to get us off to a good start. Ceteris paribus, all other things being equal, if you want to generate more returns from delta, one way that you could do that would be to sell bigger delta options. So you would choose 45 over 35. You would choose 40 over 30. The reason why this will generate higher returns is those 45 delta options, they're going to have higher premiums than the 35 delta options. Those 40 delta options, they're going to have higher premiums than the 30 delta options. Now, this relationship holds true regardless of whether you're on the call side or the put side. And to push this idea even a little bit further, the reason why this is the case, the reason why we see this relationship is, don't forget, deltas represent probabilities. Deltas represent the probability of expiring in the money. So if I sell a 45 delta option, then I only have a pop of 55%. Whereas if I sell a 35 delta option, I'm going to have a pop of 65%. So if I sell that bigger delta, yes, I'm going to bring in higher credits, more profit potential, the gimme. But I'm also going to have to absorb a lower probability of profit, the gotcha. Okay, so lastly, let's take a look at the risk side of things. Let's start by stating the obvious. The stock market is random. The stock market is unpredictable. Nobody knows where prices are going. Nobody knows which way the market wants to move in a given day or week or month or quarter or year. Understanding this, as option traders, as option sellers, it yields a number of advantages to us, two of which don't have anything to do with delta, two of which don't have anything to do with direction. They are theta and they are Vega, and we'll take a look at those in those episodes. But getting back to the delta side of things, getting back to delta's focus on reducing our risk, here is the most important thing that you need to pull away. Control your size. Whether it's at the individual position level, whether it's the overall portfolio level, the best thing that you can do to control your risk as it relates to delta is to make sure that you are small enough, make sure that your delta is manageable, and make sure that you understand what directional exposure you are exposed to, which, having gone through, the last 5 or 7 or 9 minutes, you are starting to become equipped to do just that. Yes, of course, we all want to have a bias. We all want to play a hunch. We all want to be long or we want to be short, the overall market or a given stock for a certain time period. That's perfectly fine. But you need to understand the market is random. The market is unpredictable. It might not do what you want it to do. So how do you control your risk in a world like that? You do it by staying small. How do you stay small? You stay small by understanding delta and all the reasons that we've talked about today. So thank you guys very much for tuning in today. I am so humbled and I am so appreciative of your time and your attention. If you want to share this with one of your trader buddies, that would be absolutely amazing. Also, please consider saving this episode for future reference when you're trying to, better understand directional bias, probabilities, etc., etc. And when you guys are ready, I will see you in the next episode inside of this Greeks Crash Course, Theta. We'll see you guys there.
Boom.
Hey, Jim Schultz back with you guys for another episode inside of the Greeks Crash Course. This is episode number 2, and this guy is going to be all about theta. Now, next to delta, what we covered in episode number 1, this is probably the Greek that we use the most often at the position level and the portfolio level. So this guy is critically important to your success as a premium selling option trader. Now, we're going to follow the same structure that we did in episode 1. We're going to cover 4 things: what the Greek is, how we can use this Greek to improve our returns, and how we can use this Greek to decrease our risk. So without further ado, let's dive right into episode number 2, theta. Okay, so what is theta? Well, let's break this thing down in the same way that we did in episode number 1 with delta. Let's talk about the mathematical side of things, and then let's talk about the intuitive side of things. Mathematically, theta is actually pretty simple. It simply measures how an option price will change with each passing day. So what you're effectively doing is you are putting a value on the calendar. See, options are very different from stock in a lot of different ways, but one of which is this: options have a fixed endpoint. Options have an expiration date, and as you get closer and closer and closer to that expiration date, the extrinsic value of the option, ceteris paribus, has to go lower and lower and lower. That's what theta is measuring. That's what theta is capturing. This process, this whole idea of extrinsic value going lower as you get closer and closer to expiration, that is more commonly referred to as time decay. Now, for those of you that might want to dig even deeper into the mathematics, it might be helpful to know a couple of things. Number 1, theta is a first derivative of the Black-Scholes model with respect to time. And number 2, theta is not a linear function. It is dynamic. It changes from one day to the next based on a myriad of factors, 2 of which are these. Number 1, how much time you have left in the cycle is very important to determining the actual value, the actual, the increments of theta and how they change from one day to the next. But then number 2, the moneyness of the option, out of the money options, in the money options, at the money options. All of these guys decay differently and they possess different amounts of theta. All right, so now that we have the mathematical foundation in place, let's turn to the intuitive side of things. And the intuitive explanation of theta is actually pretty straightforward. Here's a couple of things that you want to understand. Number 1, theta is represented in actual dollars. So for example, if you had a theta of 0.03, that would mean that that option is going to decay by 3 cents per share with each passing day. Now remember, every contract is 100 shares. So you could talk about this on a per share basis, 3 cents, or you could talk about this on a per contract basis of $3. Typically, when we communicate with one another as traders, we opt for the latter, referring to a theta of 0.03 as actually 3, or using kind of the whole per contract value of theta in our communication with one another. But then number 2, and this might be one of the most important things to understand when it comes to theta, the theta for short options is positive and the theta for long options is negative. Put very simply, this means that the passage of time helps short options. The passage of time hurts long options. All right, so how do we use theta? Well, the biggest benefit of theta, guys, is in its being a non-directional metric in the marketplace, right? As we talked about back in episode number 1, when we laid down, kind of the basic foundation of Delta, this is an unpredictable market. Right? Things happen pretty randomly, so it can be pretty difficult to predict direction. It can be pretty difficult, i.e. impossible, to predict where a stock might be going next. But we can all be pretty sure that tomorrow is Tuesday, or next week is the last week of the month, or whatever the case may be. So this gives us a ton more control in an otherwise unpredictable marketplace. And also, our research has shown through the various management techniques that we apply to all of our positions, that we apply to our entire portfolio, that is way beyond the scope of this episode or even this entire crash course, that we can expect to keep approximately 25% of our daily theta. So now, with that number in my back pocket, I've got something I can work with, right? I've got something that I can use to build out return projections, to build out, risk tolerance, go back to the first crash course. Hey, quick shout out to that little ditty that we dropped last September where we talked about portfolio thetas of 0.1%, portfolio thetas of 0.3%, or whatever the case may be. I can use all this to now begin to build a portfolio that's going to make sense to me and my return projections, my return expectations, my risk tolerance, and all of those things. All right, so now what everybody really wants to know, how do I improve my returns with little old theta? Well, what we're going to see here, this is very similar to what we saw in episode 1 with Delta. In fact, you could even make the case this is even simpler than what we saw in episode 1 with Delta. If you want to improve your returns with theta, once you understand that theta effectively represents the value of each passing day, all you have to do is increase the value of each passing day. All you have to do is increase your overall portfolio theta as a premium seller, so now the passage of time becomes more and more valuable to you. That sounds pretty good. But you might be asking, Jim, are there any risks associated with this? Well, I'm really glad you brought that up. All right, so now how do we decrease our risk with theta? Well, here, the old adage, it rings true again. There is no gimme without a corresponding gotcha. And when it comes to theta, things can actually get a little bit slippery. And that's because before we talk about decreasing risk with theta, let's begin by talking about increasing risk with theta. And to do so, I want to start with this important disclaimer. More theta means more risk. Maybe not directly, but indirectly for sure. And here's how. The primary way that you are going to build up theta in your portfolio is through undefined risk strategies, like strangles, like short puts, like ratio spreads, like straddles, etc. Vertical spreads, iron condors, butterflies. These are terrific strategies, but they're not going to build up appreciable amounts of theta. Undefined risk positions are going to do that. Okay. If you have more undefined risk positions on, then you are exposed to bigger and bigger swings in P&L. Now, naturally, you can mitigate this by being delta neutral, by keeping your directional bias in check, etc., etc. But it's important to understand that by having more undefined risk positions on, you are exposed to wilder swings. If you are exposed to wilder swings, then you are exposed to more risk. If you are exposed to more risk with theta, there's your gotcha. So naturally then, if you want to decrease your risk with theta, what you need to do is target lower theta amounts at the overall portfolio level, like we talked about in that first crash course. Rather than going for 0.3% or 0.4%, you might want to target 0.1% of total net lake or 0.2% of total net lake. There is no right or wrong answer. This isn't about being right or wrong. This isn't about being better or worse. It truly is about gimmies and gotchas. It truly is about figuring out what makes the most sense for you and understanding that if you want more return, you have to be willing to accept more risk. And if you want to take your risk down with theta, you have to be willing to accept lower return targets. All right, guys, so we made it. We have reached the end of episode 2 on Theta inside of the Greeks Crash Course. If you wanted to share this episode with one of your trader friends, that would be amazing. Be sure and save this episode for a future reference. And when you are ready, I will see you inside of episode number 3 of the Greeks Crash Course, where we are going to cover Vega. We'll see you there. Boom. Hey guys, Jim Schultz back with you guys for the Greeks Crash Course, and we are now into episode number 4 on Gamma. And to be real with you guys, this is where things start to get a little slippery. Like, we've moved beyond the first order Greeks, your deltas, your thetas, your Vegas. We're now going to crack into those second and third order Greeks, kicking things off here with Gamma. All right, so what is Gamma? Well, let's break down the what it is segment into the same 2 parts that we've been using all throughout the crash course to this point. Let's talk about the mathematical side of things, and let's talk about the intuitive side of things. So mathematically, Gamma is fairly straightforward. It is a second derivative of the Black-Scholes option pricing model. It is the second derivative of the Black-Scholes option pricing model, first with respect to price, and then second with respect to price again. So effectively what it tries to measure is the change of a change, just in a general sense. In a more specific sense, it measures how delta changes, because remember guys, delta is the first derivative of the Black-Scholes option pricing model with respect to price. So gamma is the change of delta. Okay, so now that we have a mathematical basis, what about the intuitive side of gamma? Well, this one is going to kind of be a lot to digest, so try to stay with me here for the next couple of minutes. But in just a general sense, if we were to think of like a car that's already moving, that movement of the car is basically measured by 2 different things: the speed of the car and the acceleration of the car. Well, if we take that idea and we translate it back into an options context, to a Greeks context, the delta would be the speed of the car, the gamma would be the acceleration of the car. So it's measuring how the speed changes. It's measuring how the delta changes. All right, so now that we have at least a loose grasp on the intuitive understanding of gamma, here's the next very important element that you want to add to your foundation. The magnitude of gamma is not nearly as important as simply understanding the sign of gamma and all that that entails. Now, I'm going to unpack a lot more behind why this is the case in the next few minutes, but let's begin by building our foundation by understanding the sign of gamma is what really matters. Now, similar to Vega, long options have positive gamma and short options have negative gamma. A pretty simple concept to understand, and it sounds easy enough. But the positive and negative gammas and what they actually mean, what they actually represent, are anything but easy. If you have a long option with positive gamma, what that means, or what that begins to mean, is that your delta is going to change in the same direction as the stock price movement. If you have a short option or negative gamma, that means that your delta is going to change in the opposite direction of the stock price movement. Okay, now that probably doesn't make a ton of sense yet, so let's work through a couple of examples. First off, let's say you had a long call, very simple bullish strategy. This is going to be positive gamma. Here is what that means. If the stock were to rally, what you want to have happen, your deltas will actually increase. If the stock were to go down, what you don't want to have happen, your deltas will actually decrease. In other words, if the strategy works, right, bullish strategy, the stock goes higher, your deltas will strengthen. But if the strategy doesn't work, right, bullish strategy, stock goes lower, your deltas will actually weaken. Now, conversely, let's say you had a short call on. This is going to be a negative gamma position. Here is what that means. If you have a short call on, this is a bearish strategy. Well, what happens if the stock rallies? If the stock rallies, your deltas are actually going to go down. But since this is a bearish strategy with a short call, those deltas are negative. So they're going to become more negative, which is going to make you even more bearish. But what if the stock actually goes down on your short call? This is what you want to have happen, where your deltas are actually going to increase. Or in this case, since it's a negative number, they're going to become less negative, which means you are less bearish. Okay, now those two simple examples, believe it or not, a long call and a short call, they can be extrapolated out to any long option strategy and any short option strategy. So that's the good news, right? The principles that we learned with long calls and short calls in relation to positive gamma and negative gamma are going to be the same for any long option strategy and any short option strategy. Whenever you buy premium, you're going to be positive gamma. Whenever you sell premium, you're going to be negative gamma. Now, as Tasty who focus primarily on selling premium, we are almost always going to be negative gamma. So that means that our directional biases can strengthen, they can weaken, they can flip over from one side to the other where we were bullish, but now maybe we're bearish in a strategy like a strangle because of negative gamma. Now, the last piece to this is remember all the protocols, all the mechanics, all the adjustments, all the defending losers and managing winners that we put in place in the strategy management crash course that we released a couple of months ago. That all starts, that all centers around this idea, this awareness of negative gamma and the consequences and implications of what that means. All right, so what about increasing returns? Well, gamma is a very interesting Greek because there are many traders in the marketplace that actually do try to use gamma to increase their returns through a process that is oftentimes referred to as gamma scalping. Now, the idea behind gamma scalping usually relates to long options, so positive gamma, and it's a situation where a trader tries to capitalize on the times when they are right directionally and they let that positive gamma continue to build up and work in their favor. At Tasty, however, we actually believe wholeheartedly in a market that is random, in a market that is unpredictable. So that's not typically a strategy that we like to employ. We actually prefer to take the other side of that trade in a process that some might call reverse gamma scalping. So rather than try to be right directionally, rather than try to pile on, in those times when we happen to nail a directional move, we actually prefer to lessen the impact of direction and place a greater emphasis on Vega and theta, these non-directional metrics, these non-directional elements. This is what reverse gamma scalping actually looks like without getting into all the details because that is way beyond the scope of what we're trying to do here. But the most important thing about this section inside of this episode is this. We don't really focus on gamma too much in regards to improving our returns. We focus on gamma in regards to controlling our risk, which brings us to our next point. Okay, so what about decreasing risk with gamma? Well, this is where our approach to gamma, our approach to this Greek, and our proprietary management techniques, this is where these guys really begin to shine. First off, let's make sure that we all understand that undefined risk strategies are the best way forward to consistency. Consistency with results, consistency with profitability, consistency in a number of different ways. It's that pure, unfiltered exposure to the Greeks that's going to allow you to achieve those consistent results. So that would be a gimme, as some might say. Well, you might naturally be wondering, all right, Jim, where's the gotcha? Well, it's right here. When you have undefined risk strategies on, you are naturally exposed to unlimited potential losses. Unlimited potential losses in way of directional moves, unlimited potential losses in way of implied volatility changes. So a pretty sizable gotcha. Now, to mitigate this, we want to start by understanding and recognizing Gamma's natural drift. Gamma moves higher the closer to expiration you get. It doesn't matter what the stock is. It doesn't matter what the strategy is. It doesn't even matter what the specific moneyness of the option is. You know, at the money, out of the money, in the money. This is how Gamma just naturally wants to move. So we combat this, we mitigate this risk by managing all of our undefined risk positions at 21 days to go. Doing this, it puts a natural cap. It puts a natural ceiling on just how high Gamma can really go. And so what this does for us is it allows us to better control our directional risk without having to monitor the exact magnitude of Gamma as we referenced earlier. Not to mention, our research has actually shown a very interesting finding. Most of the big outlier moves, most of the big outlier losses that have occurred in the marketplace in the last 15 years, most of these guys have occurred in the second half of the expiration cycle. That means inside of 21 days to go. Now, you might see that, and at first glance, you might think, oh, that's just a coincidence. But if you stop and think about it a little bit, it makes mathematical sense, because at the end of an option's life, as you get closer and closer to expiration, this is when everything gets heightened. This is when all the Greeks begin to grow in magnitude, including Gamma. So seeing a situation where most of the big losses occur in the second half of the cycle, it actually makes mathematical sense. And we can avoid some of those at least by simply managing at 21 days to go. Wow, guys, believe it or not, but we are now at the end of episode 4. Gamma, this guy is over, this guy is done with, this guy's in the rear view mirror. So if you want to do us a favor and share this video with one of your trader friends, that would really help us out. And make sure that you save this episode for future reference. And then when you guys are ready, I will see you in episode number 5, where we are going to talk about the Greek that gets no love, Rho. We'll see you there.
Boom.
Hey, Jim Schultz back with you guys for another episode of the Greeks Crash Course. And we are now knee deep into this guy, man. This is episode number 3, where we are going to cover Vega. Now, we got to be open. We got to be honest. We got to be transparent here at the outset. When it comes to the Delta, Theta, Vega discussion, Vega is definitely the third wheel of those guys, but it's still an important metric, so it's worthwhile for us to invest a few minutes to better understand how to utilize this guy. And what we're going to do is we're going to follow the same framework that we have followed for the first 2 episodes, and that we're going to follow for all the episodes inside of this Greeks Crash Course. So without further ado, let's dive headfirst into episode number 3, Vega. All right, so what is Vega? Well, what I want to do here is I want to break down Vega the same way that we broke down Delta and we broke down Theta. Let's explain this guy from a mathematical angle and then an intuitive angle. So mathematically, Vega is a first derivative of the Black-Scholes option pricing model. It is the first derivative with respect to volatility. In other words, it's going to show us exactly how a change in volatility will impact the resulting option price. That's it. Pretty simple and pretty straightforward. And from a mathematical standpoint, regarding the math, that's pretty much all we need to know to move right into the intuition. Okay, so intuitively, the conversation regarding Vega is actually going to be very similar to the one that we had regarding Theta. But before we get into the specifics, let's first understand that volatility has a special relationship with option prices that we have to be aware of. When volatility rises, ceteris paribus, option prices will also rise. When volatility falls, option prices will also fall. So now, let's take that idea and let's translate that into long options versus short options. If I'm long an option, I'm going to be positive Vega. What that means intuitively is I want volatility to rise. I want volatility to expand. I want this to happen because that expansion will lift the option price of the option that I bought. This is a positive outcome for me. Conversely, if I'm short options, I'm going to be negative Vega. So I'm actually going to want volatility to fall. I'm actually going to want volatility to contract. I want volatility to contract because that will send the option price lower of the option that I have sold, and I eventually have to buy back. Intuitively, this is basically the extent of how we use Vega and its relationship to individual options. But it's also important to recognize two additional things that are noteworthy. Number one, Vega is higher for at-the-money options relative to in-the-money options or out-of-the-money options, and Vega is also higher for longer-term options relative to shorter-term options. All right, so how do we use Vega? Well, to begin this discussion, it's really helpful to remember that how we process things at the portfolio level is different from how we process things at the position level. And we kind of saw this take shape in episode 1 with Delta and episode 2 with Theta. What's different about the discussion here with Vega is Delta and Theta, we used both of those Greeks on both of the different levels. We used Delta and Theta at the portfolio level and at the position level. When it comes to Vega, we really only look at Vega at the portfolio level, if we look at it at all. And here's what I mean by that. In the early days of Tasty, we paid a lot more attention to portfolio Vega. We tried to optimize our Vega. We tried to keep it within certain ratios and certain limits relative to other Greeks like Delta or Theta. But as we've grown and we've learned and we've adapted based on our own experiences, based on our own understanding of the markets, based on our own research and our empirical results, what we've come to realize is this: we don't need to actively monitor portfolio Vega anymore. If our portfolio Delta and our portfolio Theta are in line and on target with what we're trying to achieve, then portfolio Vega just naturally takes care of itself. But to bring this whole point, full circle in terms of how we use portfolio Vega at Tasty, it plays much more of a support role than it does a lead role. All right, so how do we use Vega to increase our returns? Well, rather than focus on how Vega increases our returns, I'm actually going to focus on how Vega impacts our returns. Now, I recognize that might be a little bit misleading, but hey guys, we are already committed to this subtitle series inside of this crash course of increasing returns, and there's just no turning back. When it comes to option profitability, it's very important that we all recognize that there are only 3 ways to make money when you buy or sell options: Delta, Theta, or Vega. Okay, now of those 3, Delta, Theta, and Vega, Vega is by far and away the most hidden of those 3. It's never as clear as Delta, it's never as obvious as Theta, but it is always there, and it's always kind of working behind the scenes. All right, now that we understand that, let's move one step forward. The market, just as a whole, is usually in a state of contraction. Volatility contraction. 80 to 85% of the time, the volatility in the marketplace is indeed contracting. Okay, we are option sellers at the core. We are option sellers most of the time. Remember, when I sell an option, I'm negative Vega. What does it mean if I'm negative Vega? It means that I want volatility to go down. I want volatility to contract. So this is definitely going to help my returns in the long run. However, as we're all well aware of now, being 3 episodes into this crash course, every gimme has a gotcha. And that whole volatility contraction business, that's a pretty decent sized gimme. So you might be wondering, Jim, is there an equally sized gotcha just lurking in the shadows? Yes, there is. The market is normally contracting. The market does usually contract, which helps us a lot. There's your gimme. But it doesn't always contract. It's not always just perpetually in this state of volatility decrease. Volatility can increase too. Volatility can expand as well. And sometimes this expansion happens quickly. Sometimes this expansion happens quickly and forcefully. And that situation can put us premium sellers, short Vega holders, in a bit of a bind. The gotcha. So that brings me to our next section. All right, so how do we reduce our risk exposure with Vega? Well, this one, guys, This is going to be the easiest segment that we've had thus far inside of the Greeks Crash Course. And this is why. You've already done it. You are already in the process of mitigating your risk exposure by way of Vega. And specifically, what I mean is this. If you've been following along with what we're doing, as I've already mentioned just a few minutes ago, if your delta is in check, as we've talked about in this crash course and previous crash courses, then you are on the right track. If your theta numbers at the portfolio level are in check and on target, like we've talked about in this crash course and previous crash courses, then you are on the right track. If both of these things are already taken care of, you don't have to actively monitor your portfolio Vega numbers at all. They are going to take care of themselves. They are going to naturally mitigate your risk levels by way of delta and theta at the portfolio level. And just like that, guys, we are done with episode number 3 inside of the Greeks Crash Course, all about Vega. Be sure to share this episode with one of your trader friends. Be sure to save it for yourself for a future reference. And then whenever you are ready, I will see you inside of episode number 4 of the Greeks Crash Course, Gamma. We'll see you guys there.
I'm running Snow Leopard with this. I'm a Mac. I'm a Mac. I'm a Mac. G. Multitask, MacBook handler, brother. iPhone in one hand, iPad in the other. Pop open top, Apple logo shining on the back. That's why all these player haters know that I'm the Mac. Easier to see a nun with VD than to see me ever typing on a PC. So if you got one, you can play a sad tune and play it back later in your room on your Zune. Windows made to break, and I'm here to crack it. And if I'm a Mac, that means that I'm immaculate. Style so clean like it's disinfected. Clean surfaces where white light is reflected. Plastic case, Apple Store, keep my phone protected. Check my toolbar to see if networks are detected. Use my side swipe, applications hidden in it. This is Mac world, bitch, you're just living in it. I'm a Mac. 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 Roll into the coffee shop, know I'm on a power trip. Strapped with my laptop and my own power strip. Eye outlet, about to make your cable drop. Apple logo shining off the marble on the tabletop. So if you seen me, then you seen a star. Any place I sit down, call that the Genius Bar. Looks like I'm working hard, but to really know the truth, just taking pictures of my fine self in photo booth. Interface simple, why I need a Kindle. Working on that pad keeps my fingers mad nimble. So if you think I come up short, you must be wrong. More than one reason that these ladies call me Justin Long. I'm a Mac. I'm a Mac. I'm a Mac. Yeah, Justin Long, son. You catch that? Known by the ladies as the toolbar. 10-hour battery life. Force. Quiz.
I've got some huge news for traders everywhere. On June 4th, the pattern day trader rule will be replaced by new intraday margin rules. Tasty Trade has been advocating for an updated PDT rule for years, and we're ready to go on day 1. You'll have more flexibility to manage risk when and how you want. Join Tasty Trade today.
So what are some things that we know? We know that time will pass. We know that the hourglass will empty. We know that the calendar will march forward. So what do? We sell premium. We generate positive theta. We take the short side of the options contract. Before you ever think about generating returns, you need to control that risk. The returns will come. You need to make sure your risk is mitigated in the most efficient way possible. Now, the fun stuff. Let's talk about managing those winners, right? You have a long put spread on and the stock goes down. That's going to work out pretty well. You have a long call spread on and the stock goes up. That's also going to work out pretty well. You set your profit target at 50% of max profit. When it gets there, you take it off, you move on, you find another opportunity.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the board. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Pay for backtesting? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
Hello, everybody. Well, the dates here is Nvidia Day. I've got a funny feeling it'll be kind of a non-event, but we'll see. Everyone's kind of on the edge of their seat about this, but typically there's not that big of a move afterward. This is the largest company in the world, as measured by market cap, and it's closely followed and tends to be pretty reliable. So I have no position. In fact, I don't think I have any semiconductor position at all in any way, shape, or form. My dumb guess is that'll probably go up some, nothing explosive. I would love to see it fall, of course, because that would promote a lot of other tumbles elsewhere, but I'm certainly not counting on that. It'd be kind of nice to get out of the way. It's a green day. As I mentioned yesterday, I came into the week super hot, super short, 220%. I trimmed that down by more than half yesterday. I trimmed it even more this morning. It's down like 70%, something like that. Just kind of holding back because, as I suspected, the bond sell-off we saw yesterday was bottoming for now. So we got a big rally going on with bonds, relatively speaking. 1% on the ZB, that's a big rally. And I'm just kind of holding back, waiting to get aggressive again. I'll be a little more comfortable after Nvidia's done. This is kind of a big event, but that's kind of the only thing to wait for. There, of course, there's this in perpetuity. The Iran deal is, always 2 weeks away, or we're reviewing the final draft, or what have you. And as I've said before, paradoxically, the most bearish thing that could happen would be the deal's done. Here it is, it's signed, it's notarized, done.
is history now. I would love that. The smartest thing they could do from a bullish perspective is just keep that 2-week timeline going for years. It's coming, it's coming, it's coming, it's coming, because people tend to idealize the future. Just keep that 2-week timetable. We're still working on the final draft. That's the way to play it. We'll see. None of us have any control over that. But in the meanwhile, let's jump into the charts and see what's cooking. And we will start off with the spider, which has pretty much undone the past 3 days of damage. We had our lifetime peak here on Thursday, and then we slipped a little Friday, slipped a little Monday, slipped a little Tuesday. Today, Wednesday, we've Control-Z'd that whole thing. So here we are, pretty much back to Friday's open. As I said yesterday, I did cover quite a bit, especially the really zingy stuff like Micron and Sienna and SMH and other wild ones. That was good. Today I'm down, but not badly at all because I have so much less risk. IWM is rallying mightily, 2.29%. I'm watching this gap closely. If we can continue to respect that gap, good. That could be a good trade right there. Closer we get, the better. And it's very much driven by bonds. So today's big bond rally is definitely helping the IWM. It also has a very close, well, it goes without saying, a close correlation to TLT because that's bonds, duh. But so there's the rally there. But take note of the gap. There's a reason I'm saying this. Take a note of that gap, and then we go to the TLT. And wouldn't you know it, there's a nice gap right there too. In fact, TLT has that whole progression of gaps since this peak back in February. So big gap here, then another one, and another one, and another one. And along the way, none of them have been sealed. And so we're getting a big rally now. As I said yesterday, I've got TLT September puts. I trimmed that yesterday morning, and I will happily not untrim it, but get even heavier into it than I was in the first place if we can get close to that gap without violating it. I don't think I mentioned, but I'd also sold my TBT, which is the ultra short. I had one portfolio all in TBT. I got rid of that completely yesterday, just because it seemed to be a little too easy. Bonds were falling nice and fast, and I figured it was time for a counter trend rally. As I also said yesterday, home builders, XHB, probably were also ready to rally, and that is exactly what's going on. Here's XHB. This is one of the last charts we looked at yesterday, and it is up almost 4%. And it has also undone the damage from Friday and Monday and Tuesday. It's going right along with bonds. But in an outsized fashion. As I said, ZB is up 1%. This is up about 4%. So it's all going as you might expect. And I believe this is all counter trend. This will be reversed, but they are fighting back strong at the moment. And just the last bit on bonds here. Here's TBT itself. This had likewise has gaps. Here's a big gap here, and I'm seeing another one here. Obviously, all along the way, you're going to get the same gaps that we saw with TLT, except in the other direction. And so I sold TBT yesterday. Like I said, I had one portfolio fully dedicated to it. We're falling hard on this today, down 2.14%. Let's see if we can get close to this gap here. That'll be another interesting entry point. We may not get that far. This is as close as we got last time. This is as close as we got the time after. So we may not, it'd be kind of better if we didn't get all the way down, because that implies strength, which in this case is bearish, because this is an ultra short fund. Okay, so with all this Iran talk, crude oil is having a weak day. The front month on the futures are down almost 6%. The peak remains back early in March, which was this completely wild day. You can see from a candlestick perspective, this little bitty body here, and these long shadows, they're called. So that shows the open and the close were pretty tightly coupled, whereas the highs and lows around those were just scattered in this tremendous record-setting range. But since that mayhem, things have settled down into a series of lower high, lower high, lower high. So just slowly easing down as the focus on Iran goes elsewhere, as the war, or whatever people are calling it, seems to be dying down to nothing. And this perpetually almost ready peace deal is, still at the printers. So crude oil's down hard today. And in turn, and I also mentioned this yesterday near the end of the show, XOP sealed up its price gap and then a little bit more yesterday, and it is turning south. So XOP is down about 2%. And this too, for obvious reasons, has also engaged in a series of lower highs. So there's the peak, a lower high, and a lower high. In a way, we've seen this reflected with a particular country fund, Brazil EWZ, because its main component, its largest component, is PBR, the Brazilian petro company. And so the tippity top on this one, weirdly, it was about a month after crude oil's peak, but since the mid-April peak here, we've slid hard and basically unwound all those gains. So kind of an upside-down V going on with Brazil. The only energy short I've got is APA Corporation, which is down a little more than 3%, and kind of the same pattern we saw with XOP. Naturally on a day like this, I'm glancing over my portfolio. About a third of the underlying equities are red, but nothing really. It's obviously a very green day, so pretty bad day for the bears. But INFY down just barely right now. Long term still doing fine, but just barely moving. A little better results from Green Plains GPRE, which is down a bit more than 3%, like so. But yeah, not a banner day for the bears, and it's good to have plenty of cash instead of aggressive positions. And it all boils down to Nvidia, of course. SMH is one item to keep a close eye on because of, there's that word again, a price gap. We zoom in here, and the tippity top was set on May 14, just a few trading days ago. I shorted SMH on this day. It fell nicely the day after, which is Monday. Fell some more open week on Tuesday. I covered. So, obviously not a huge move, but good profit. Covered as it got close to this price gap. So here's this price gap right there. So I covered it and have no position. So up it goes and up it goes. And this is the next gap. These are very minor gaps, of course. But it would be nice if we didn't violate this. Nvidia would have to, I'm not even sure if I'm going to use the word disappoint, but the reaction to Nvidia would have to be weak in order to respect that price gap. It could easily be brushed aside. Going to lifetime highs on SMH tomorrow would be a cinch if Nvidia does it all well. One item that's already doing quite well with lifetime highs is ARM Holdings. So there's a huge pop in that one. It's not at lifetime highs, but Intel is having a good day too. Big recovery, up over 7%, and getting in the neighborhood of its own lifetime high, set like so. And one other item that I covered yesterday, thank goodness, is Micron, MU, which also has a price gap worth noting right there. So let's just pretend the SMH gap is not sealed yesterday. The Micron gap is not sealed yesterday. Those would all line up nicely for maybe semiconductors are done for now. But let's wait and see. Because I'll just say again, all of these can be brushed right aside very easily with a even middling good reaction to Nvidia. Marvell also covered that yesterday, thank goodness. Lifetime high on this one. And one stock, I don't trade this, but one stock that just can seem to do no wrong is Apple. Another lifetime high on this already. Nvidia or no Nvidia, it's already there. So over $300 for Apple. And they also have had the good strategic sense not to get buried in debt, hyperscaling. They've sort of sidestepped that whole thing. So if the entire hyperscaling effort goes kablooey, Apple's going to be very unscathed in that, relatively speaking. I've been clicking refresh all day long on the SEC site waiting for the SpaceX S1 to drop. Oh my God, I'm using that word. I hate that word. To be released, excuse me. Hasn't come out last I checked, but anything with a rocket attached to it has been doing very well. And in anticipation of this, Planet Labs PL up 2.3%, Rocket Lab up 5.3%. ASTS is also up, but among these is probably the most, to me, it's the weakest looking chart because it's already established a long series of lower highs. But those are all proxies for SpaceX right now in a manner of speaking. But it'll be interesting to see what the details in the S1 are all about. Bitcoin, I don't know if I mentioned yesterday, but I'm pretty sure I did. I covered half of my short yesterday to wait for better prices. It's for Bitcoin is barely moving today. It's up less than 1%, just kind of hanging out. It's got its own minor price gap right here. I haven't even bothered to draw it. The more important resistance is up here. I have bothered to draw it in this one, which is the actual ETF heavily traded for this, IBIT. That's the minor price gap right there at 44 and a half. But ain't much going on with Bitcoin today. And finally, we've got to close with Nvidia. There it is. Really hardly changed because obviously, why bother? Everybody's waiting for the results. It is bullishly configured in as much as that it broke out of this long jail cell of its own making for about 10 months. And the easy path would be to push higher, even to lifetime highs. The surprising path would be to re-enter this prison cell it was in, to dip into that pattern again. That would be kind of a 5-alarm fire if we see that happen. But to be clear, no position, not even anything related. And I'm inclined to think it's going to go up, although I would love to see it go down, but I don't think it's going to happen. Okay, well, it's the bottom of the hour. That's kind of the survey right now, and we can see what really did happen yesterday. Tomorrow, once Nvidia's out of the way, and maybe even the S1 on SpaceX will be out as well, so lots to talk about. So thanks for coming by. Good luck to those of you out there playing this beast, and I'll see you on Thursday. Bye-bye.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards, become a trading mastermind. Get the guide at tastylive.com/guide.
I've got some huge news for traders everywhere. On June 4th, the pattern day trader rule will be replaced by new intraday margin rules. Tasty Trade has been advocating for an updated PDT rule for years, and we're ready to go on day 1. You'll have more flexibility to manage risk when and how you want. Join Tasty Trade today.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Nikki Batt, University of Kansas. Number 20 because that's how many underlyings are in my portfolio.
Rick Welch, Illinois Institute of Technology. Number 23 because I'm trading 23 hours a day.
Dr. Data, Louisiana State University. Number, square root of 1 over 365, because that's the square root of time for 1 day, which is multiplied times the stock price, multiplied times the implied volatility, which gets you the projected stock price for 1 day.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Investors Business Daily raves about us. Stockbrokers.com says we're best in class for futures trading, and Broker Chooser thinks we're pretty great too. So what else can we say other than trade like a trader? Tasty Trade.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page. I can go right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
Mr. Vecchio, we are back for the biggest day of the year, the Super Bowl of earnings. We've got Nvidia earnings after the close. But first, let's take a look at the market here. E-mini S&P 500 futures at the highs of the session here, flirting with 74.50. I think the high of the session, 74.58. We are just a skosh off there right now. The NASDAQ up 416. You got the Dow up 657 and the Russell up 65. The Russell up about 2.33%. It's the strongest of the group here. On the backs of the move in bonds, we've had bonds move a full point. We're at 110.31, just under 111 here. Volatility futures coming in, /VX 2005. You have the VIX itself at 1742. Oil falling out of bed, 98.32. The new deal of the week is near signing, apparently. You know, we've got one every week or so. So this week's very, very close. It's around the corner. You've got gold and silver both higher. Gold's had about a 100-point range today, sitting at 45.48 right now, up $37. You have silver up $1.25. And Bitcoin, I guess, sort of participating, up $700 on the future, spot up 400. How do you feel, Chris? How does this feel to you?
Great that oil's falling. That being the driver of the bond move, right? The market definitely doesn't want to see oil stick around above 100 for a long time because it means the Fed's probably going to have to hike. So that is also the knock-on effect here. Hike odds are getting pushed out a little bit where we're no longer favoring December, just a 50-50 chance as opposed to being like 60 or 70% priced in. Mm-hmm. So that's the good news here. And maybe Nvidia gives us the kick in the pants that we need. Nick, I see that we have a new catalyst to chase though. If Nvidia was going to mark the top, I see here that Friday OpenAI may actually file for an IPO. Does that make you interested in this rally anymore?
I saw that. I don't know. It would be later this year though, right? Like it's not going to be. I don't know. I haven't read into it much. I saw that they were filing to go forward with an IPO. I didn't see any time indication. Do you have more info on that of like the target?
It looks, no, you're right. It would be later this year, but it sets up an interesting dynamic where, we talk about these earnings releases being big events.
Yeah.
So the Cerberus, IPO being a big event that marked the top locally for maybe a week or so. What is an OpenAI or an Anthropic IPO? Andres Karpathy just moved over to Anthropic. He was one of the folks who helped lay the groundwork for OpenAI. He's now over at Anthropic. That to me is a signal that Anthropic's winning the race, by the way. So
among many others, there's tons of indications that OpenAI is not the leading horse here.
No. So, Coinbase marks the top of the crypto cycle a few years ago with its IPO.
Okay, good call.
Anthropic OpenAI IPOs probably become something the market has a fixation on in the future and doesn't want to let go of its rally. So just something to think about, as those are catalysts that we can push out that are not like Iran or politics related.
Yeah. I'm actually, it's good that they're kind of spread out a little bit, but the IPO situation spooks me. I've said it before. It feels like it's a situation where there's just a lot of liquidity that needs to be found, for lack of better words, to fill this hole of value. And so that kind of spooks me a little bit. I think from the IPO perspective, if I'm OpenAI, I've got to front run Anthropic, because you gotta figure that the first one out the gate is going to at least have a little bit of a head start in liquidity. I don't think anybody's going to be, there's going to be money that goes into SpaceX, obviously, that I think that, is very clear. By the time you get to, past Databricks and Cerberus and OpenAI, and then now Anthropic, at the end of the year, if they're the last one, it's going to be, I think it's a race to get out there. So it makes sense that OpenAI is trying to get out there.
But today's really not just about the AI trade right now, Nick. We've long complained, at least over the past 2 weeks, that the breadth in this market wasn't fantastic, even as it grinded higher to the upside.
Mm-hmm.
Breadth is back today. Lots of different sectors are up. When you look at what's down, it's all the energy-related sector ETFs: OIH, XLE, IYE, consumer staples, healthcare. Who cares if those are down with the energy ETFs when literally every other sector ETF is up? Mm-hmm. And it's led by your semis. You're looking at home builders. You're looking at retail and consumer discretionary. These are all having very fine sessions. So maybe that's all a knock-on effect of the drop in rates, which I would argue it is.
Yeah.
And the rates are dropping because of oil. So for the bull's sake, President Trump, please reach a deal.
It's around the corner, Chris. You don't have faith?
It's Groundhog's Day, my man. It's always around the corner.
I will say the move in the market today, Nvidia, SMH, the semiconductors, I've actually felt a little bit better about the earnings event tonight. I still am holding firm that I think for Nvidia, in terms of price, where the price of this stock is tomorrow, I think it's inside the expected move. I'm not sure if it's up or down, but that's how I'm playing it, is inside the expected move. I think we've gotten to its value. I think the little bit of a pullback that we've had from the highs is a good thing. I don't like to see stuff skyrocketing higher into an event like this. I think that is the most bullish outcome for markets in general. I think we need to take a little bit of the skew off the table on some of these names, semiconductors specifically. Even the market skew has kind of gotten flat. Nobody seems to have any fear to the downside at this point, and it's all speculation to the upside. I think an inside move for Nvidia is the perfect thing to give some pain to the YOLO call buyers, the YOLO put buyers, and Tasty Nation to take all those profits. That's what I'm thinking.
Yeah, we talked about this. It's up on the YouTube page for Signal versus Noise today, looking at ServiceNow in the context of the Nvidia earnings. But right now, we see that the options market, talking about maybe a 6% implied move. The average event day move over the past 25 quarters is only about 2.2%. So recently you talk about how the stock has performed, small pops the day of, inside day, and then kind of leaks out over the next few sessions.
Yeah.
We're talking about nearly $79 billion in expected revenue, 80% year-over-year growth with EPS growth north of 100%. Those are very high hurdles to clear. But I'm gonna bring up a point that I raised with your dad and Tom for multiple earnings reports over the years, which always drove them crazy. We're looking at now folks who have been buying the stock head over heel, hand over fist at 30, 40, 50, 60, 70 PEs. The current trailing 12-month PE ratio is sitting at 45.
Mm-hmm.
With this earnings report, with an expected EPS of 175, it's going to lob off the last quarter, and that last quarter is about 81 cents. So you're going to add $1 onto EPS on the trailing 12 months. And if prices stay the same, what does that do to PE ratios? The PE ratios are going to fall. So if you liked Nvidia today at a 45 PE ratio, what are you going to do tomorrow when it's sitting at like 35 or 37? You probably like it there too. So just there's a cushion right now. The best outcome for me, in my view, as a bull, let's just digest this and knock it one of those pop and drops and then leak lower over the next week. That'd be fine. Rallies are better, but no weakness would be acceptable as well.
Yeah, I think it would be crazy to say that that anybody thinks the numbers are not going to be anything but astronomical and unbelievable. They've all been. Any of these stocks in the semiconductor space have just been through the roof. I think at a certain point, you have a little bit of wind that has to come out, right? You can't just go up 5% every day in everything, in all the semiconductors every day. And I think this as kind of the, breath of fresh air. Okay, we're not in a bubble. AI is still what we think it's going to be. It's bullish, for years to come. But as this kind of a way to dull some of the fervor, I think it's setting up too perfectly.
Would it shock you if the Nvidia earnings report marked the top? I mean, we're 3 months to the day from the last one, and of course, we had a war that started a week later to really help put pressure things to the downside. But who's to say that that's not the same case here, where you get an earnings report, it doesn't do enough, and then we get some retracement in oil back above 100, and all of a sudden, that's it for a few days. This is actually a bad time of the year seasonally, Nick. May 16th through the 25th. Is a period when stocks typically fall. The only up day since 1950 on average is May 22nd during that window. But then you get into a good window where for the rest of May onwards, post Memorial Day through June 10th, stocks have typically put in rallies. And over the course of any given year, it's usually when the market cycles into a new relative high for the year. So, we survive the next few days, volatility stay low, volumes drop off again. We're in summertime. We're pretty close to summertime trading conditions.
And that's always just grind higher, at least a lot of the time.
It's been working buy calls and go fishing.
This year again. There you go. What are your thoughts on this oil move? We're below 100 here, 98.21. It was a swift move. Volatility in oil has been suppressed for the better part of the last month or so. We've been sitting here at 72, 73. It's actually up slightly here, despite oil down a little bit. When you look at OVX, are you interested in oil here, or you need more downside?
I'm not going to look to get long oil per se. What I've been doing is every time oil bumps up a little bit, I sell some call spreads or calls. If it drops down, I've been looking to sell some puts or put spreads. There's a reality here, Nick, where the molecules aren't moving. And if we get a deal already, we're not going to get demand destruction because energy is going to start moving through the strait again.
Yeah.
But we're going to have all this infrastructure destroyed still on the other side of the war. So how can we possibly get back to the same levels of supply that we had pre-war? We can't. So to me, that means that we have a floor into oil. So 70, 75, 80 in the short term. Well, in the short term, 80, 85, 90 seems to be a floor. But when you look out to like the Z contract, CLZ6, you could see that 70, 75 has been really nice. So you could still get some decent risk to reward down there right now, where you're risking 1 to make 3 or even risking 1 to make 2. Depending upon the structure that you're using, if you're using the right type of duration there. So selling oil on rips also selling the downside when it drops, just playing ping pong here right now because it feels like it's going to be stuck in this ethereal state of Trump-driven headline trading for a while. But why would it go through? Why would it break through 120 given what we know unless the war resumes again?
I agree with you. I have a ton of short volatility in USO on the upside here. I actually, into the move today, I sold a put spread to finance buying kind of a tight call spread in CL, playing on that downside like around 80. I think my strikes are on CL are, I did $3 wide. So I'm selling the 80-77 put spread, and I bought the 100-101 call spread. I did it for basically a scratch. It's just kind of a way to play this ping pong. I also was I was looking at ways to get a little bit smaller, but do kind of a similar thing, or at least a similar thinking here of playing for a little bit of a bounce, but also playing into the volatility component here. I went out into MCL and I bought one of the futures contracts, and I sold 2 of the 110 calls against it. So you basically, you're selling volatility, obviously, because you're selling the 110 calls. You're synthetically naked 1 extra call on the upside, but you're basically 0 delta. You're basically a straddle here at the money, but you're selling that upside vol long the futures, the micro futures contract as a way to kind of hedge some of that upside delta exposure. But, it gives you the opportunity to kind of play the best of both worlds. If this continues, that volatility comes out bigly on the upside, you're selling, $3-4 of premium on each of those contracts, gives you a break even at like 90 on your one contract to the downside. If you get that up move, you're far enough out of the money, or at least it feels far enough out of the money to not really have to worry about it. But you have that intrinsic value of the oil contract moving higher. So I think the move today has presented those opportunities. Can we go lower? Of course, that's a possibility, but I thought those were kind of an interesting way to play it here into this move.
I'm curious, do you find yourself looking at changing how you approach futures trading when the PDT rule changes?
No, I think, for the most part, PDT is going to be people that are affected by PDT. I think they'll have the flexibility to get smaller and go into equities. So, you might have been doing micro E-mini contracts just so that you can trade in and out of them. I think you'll be able to go into like a more liquid SPY or SPX, make that a little bit, more of a more liquid product versus kind of the micro E-mini options, or even the ES options, which have wider bid-ask spreads just from a notional value perspective. But no, nothing's really going to change for me. I think it's going to change for a lot of people, though. We have a ton of research that we're going to be doing the week of the Liberation Day, as we're calling it, for PDT there on June 4th. We got a bunch of stuff on SPX, how much it's going to change the game for people. It's going to be a great one, man. Is it going to change anything for you?
No, not at all. I know that a lot of traders got forced into trading futures over the years because of the PDT rule.
Yeah.
And the advantage of futures are still going to exist, right? There's actually a significant tax advantage for trading futures. You get taxed at 60% the long-term capital gains rate and 40% of the short-term capital gains rate by trading futures, which means if, like, let's just say over the course of a year, you make $100,000 trading ES, you will make more money than if you did that doing SPY, right?
Yes.
And so there's that favorable tax treatment still. You're not subject to the wash sale rules, which is great about futures. I also like the fact that you still get the 23/5 around the clock, although maybe we're moving towards around the clock trading in stocks too. But if stocks go there, then futures will also go there. So that will persist.
Yeah.
And then you get the whole, as someone who pays attention to the macro and likes to trade oil and gold and bonds, I much prefer that than being hamstrung by GLD or USO or TLTs, 9:30 to 4 p.m. trading hours. So I'm going to continue to use futures, but it's really interesting now that like the forcing mechanism in regulation that pushed traders who really just may have wanted to trade stocks the whole time. They felt trapped by the PDT rules, so they got into futures trading. That's no longer going to be there as a mechanism. So it's, you're now going to have that decision. Do I trade USO or CL? And that all comes down to your individual risk tolerance and your account size, no longer because the market isn't affording you a more appropriate option.
I think this will end up being step one in some of the easing of some of these, legacy rules, some of the stuff that's in cash accounts, settlement stuff, like all those things are going to kind of start getting looked at here, which is a good sign. As we go into the close here, we got about 8 minutes left. You got E-minis, pinned around 75 or 74.50. You do have two other earnings tomorrow morning that are pretty interesting. You have Walmart. I have some long delta there, as well as DE, which I just put on some long delta as well, figuring maybe you got some upside there if you've ever looked at a chart of CAT. It seems like that sort of business is doing pretty well. I know
Putting together your little zoo portfolio.
Yes, exactly.
Deer, cat.
Yeah.
Okay.
I don't have cat. It's just the deer, and I'm not eating them. I got the venison in my freezer, but I'm not this. I'm not eating.
Data dog.
There you go.
That's it. That's really all I have.
Do you have interest in either of those two? How could you?
Not right now. Yeah. Caterpillar is interesting because of the AI infrastructure spending demand, but I don't know. Some of the public polling I'm seeing here in the United States about this, people really hate AI. They really don't like these data centers being built in their local areas.
Yeah.
And it's unifying people across the political spectrum. So I don't know. But if the data center infrastructure build out's going to continue, which I think it will, come hell or high water, it's just going to have to maybe land in a different spot regionally, so to speak, where there's less regulation and more open land. It's going to go on. And, what are we going to do to meet this demand, though? We don't have the transmission lines yet. So we're going to need batteries. We're going to need nuclear. We're going to need more types of energy. So if you're thinking that I think there's a long-term play for Caterpillar. I would just rather get that exposure through a broad basket of stocks rather than the idiosyncratic, this particular company's the best way to express this point of view.
Sure. I'm with you there. Also have Elf Beauty into it after the close today. Into it, I saw they were laying off 17% of their workforce. Those come after the close. Nvidia will report 20 minutes after the close. So we'll have some time to stew there. What do you think for the rest of the space? And I will tease, I will be staying on to hang out with you guys for overtime here. But what do you think for the rest of the space? Is this is there a sympathy move on deck here? Or is this, one and done for Nvidia? In the rest of the space, you look at stuff like ARM is up $1 billion today. It's up $14 and change. Qualcomm had a nice move. You look at an ASML, TSM. These stocks are up, 5, 6, 7% pre-Nvidia earnings.
Yeah, they may be getting sympathy bumps, but if Nvidia continues to show the world that demand is ever increasing for their products, as we've seen repeatedly for the past year or two, hasn't it had positive knock-on effects for all these other businesses that exist somewhere else within the supply chain? What's different about this than the crypto build out, which I've seen a lot of people try to compare this to, and I think that is very short-sighted. The crypto build out never reached the place where it became a point of national security interest. Hell, aren't we still struggling to pass stablecoin legislation right now?
Yes.
All these years later? And yet everything related to AI is moving at breakneck speed like it's a national defense priority or it's related to energy security. Trump just signed an executive order yesterday talking about the necessity for the government to have access to frontier models that these companies are putting out. And, if you read about Claude Mythos, are we at ASI? Are we close to AGI? You could make an argument. So this is totally different. This is a completely different ball game. Mm-hmm. We're no longer in a boom bust semiconductor cycle where it's viewed like a commodity that eats its own tail. There's limited supplies. The production is not there. So prices go through the roof. It invites in competitors. The supply causes the price to go down. This is now being treated like it is just ground level infrastructure, like it is freaking water, man.
Yeah.
And it's really odd I'm a longer term perspective person, but the way that these chips are behaving and the evolution of their forward PEs recently shows that the market is starting to view the space holistically different. And that's not nothing.
Yeah, I hear you. I hear you. I've been looking at some of, I mean, you were talking about energy. I jokingly mentioned XLU to my dad this morning, how like, I get the whole argument that, the energy stocks have high dividends, lots of debt, and that gets kind of, watered down by, the big move in the bonds. Bonds were lower, rates higher, less of an interest in some of those utilities. Are you looking at utilities in that sense? Are you looking at, CCJ nuclear stocks? Are you looking at for solar energy stocks? Are any of those starting to pique your interest a little bit more than usual here?
Yeah, so last year, actually, there was a few stocks that we had traded around, in particular in the energy space. Exelon was one of them, to take advantage of changes in regulation and where the bottlenecks were in power supply at the time. Last year, we had a lot of the data center build out in the Mid-Atlantic region, and Exelon is a power supplier in that area. And sure enough, that's where we're seeing a lot of the data center build out get approved and get moving right now already again. So
what's the ticker on that?
EXC. It's a decently traded stock. 3 million traded today, 64 IVR right now. It's sitting where it's fallen back to near like 42 or 44 in recent weeks. It's really the top side of trading range. It was back in 23, and that flipped over and has been support throughout 25 as you start to edge up through 40. So utilities near the bottom side of the range. It's an interesting play right now, particularly if you're long stocks and you've only been long like biotech, or rather semiconductor stocks. We're kind of recreating the S&P 500 through first principles here. I own too much tech. Let me buy utilities. Let me buy energy.
Well, it's all getting tied together now.
Exactly. It is all getting tied together right now. So utilities, even nuclear, I've had some interesting conversations with various electeds, all public information, but it feels like that's going to be the next shoe to drop as we get to the next bottleneck: transmission, energy storage, energy production domestically.
I appreciate how you acknowledge this is all public information. Nothing.
I have been making sure to source the very specific things that I'd like to reference on air publicly before I say those things.
As we go into the close here, get your helmet on and get ready here. If you want to make your trade, you got 30 minutes to go. You got E-mini S&P 500 futures up 74 at 74.51 here. You got the NASDAQ up 465. You got the Dow up above 50K, $637 to the upside. You got the Russell up 68, almost 2.5% move. Oil at 98.51, down $5.64. Volatility futures just ticked below 20 for the first time in quite some time. Bonds up a full point. You got gold up $38, silver up $1.14. Bitcoin as well participating to the upside here, up about $800 on the futures. Mr. Vecchio, I'm ready. Are you ready?
I'm ready. Let's bring in the person who's going to spoil the fun.
Let's do it. Let's take a quick little 90-second break. We're going to come back for overtime. Myself, Chris, and Ilya here. We'll see you in a second.
We wanted to call in because recently, some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted, and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you.
This was not a paid, you're not getting paid for this advertisement.
I've got some huge news for traders everywhere. On June 4th, the pattern day trader rule will be replaced by new intraday margin rules. Tasty Trade has been advocating for an updated PDT rule for years, and we're ready to go on day one. You'll have more flexibility to manage risk when and how you want. Join Tasty Trade today. First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
It's what we're all here for. We're here for Nvidia earnings. It's still Wednesday, May 20th, 2026. You're watching Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Nick Batista in Chicago, getting ready to take you through the biggest earnings report of the quarter. Nvidia reports at 4:20 Eastern, 3:20 Central today. Hopefully not like last quarter when it was delayed a few minutes time. Today, though, stocks are getting a little jumpy here ahead of the gate or out of the bell, whatever we want to say, because stocks are running higher ahead of that Nvidia earnings report. S&P 500 right now, currently after hours, trading in at 74.47. That's a nice little healthy gain here, Nicholas, 69.5 points. And NASDAQ here is up 1.5% right now, up 435 points. The Russell's the strongest on the session, up 2.4 points, or percent rather, up to 28.19. And that's all on the back of the oil move lower today. Crude falls by around 5.5% over the course of today's session, which has the knock-on effect of dragging down those global bond yields, giving some breathing room for foreign currencies. Ultimately, gold, silver bounce, copper bounces. A decent day for the war off trade, if you will, all around. But we're focused on Nvidia here, gentlemen. That is the thing that's holding up this market, or one of the many companies that's holding up this market now. Nick, I do want to start with Ilya first, because you and I just had all of last call here together. Ilya, on Futures Power Hour today, you were noting that there was a little bit of a divergence in a good way here, right? Breadth was getting better across the sectors, but more importantly, QQEW and RSP were performing well.
Yeah.
Does any of that even matter when we wait for Nvidia, which is obviously going to decide the next, 2-3% in this market, as it were?
Probably not. I think Nvidia matters not just as obviously a huge piece of market cap, but also as a kind of sentiment check. We have now had every possible good thing told to us through this earnings season. All the money has been splashed out. There's been mountains of it. And you look at something like an SMH and you go, right, so the market's heard about the money and they're going to do the thing with the money. Okay, got it. But all of that has been very one-sided. It's been happening on diminishing volumes in the headline indexes. And the moment the markets got an opportunity to rethink about the war trade last week after the Cerberus IPO, they took that opportunity. And so Friday was ugly for all the war trade reasons: higher yields, inflation expectations, stronger dollar, weaker gold, all the stuff. And so you look at Nvidia here and you go, okay, yes, this is a big part of the actual nuts and bolts of the AI idea, but who's not expecting astronomical numbers out of this company? And so the question really will be, will they deliver enough that the market goes, I can spin the wheel again? Or is it going to disappoint just because it's already so hypey?
How good do these numbers have to be to surprise us? I'm looking at the estimates right now, 177 on EPS, just we'll call it $79 billion in change in revenue, which is like, it's almost double what we had last quarter for them in both accounts. What are we doing here?
I'm with Ilya. I don't think anybody is on the side that they're going to miss any of these numbers or not guide higher or, something to be wrong here. I don't think anything is going to be wrong here. I just think, I think in similar fashion to what Ilya's kind of saying here, I think it's going to be a big volatility event. I think it's going to be the volatility contraction that is really needed in not only Nvidia, but the space as a whole. I think it's gotten crazy on the upside with the call buying, with the volatility and the skew that you see in the upside. It's got to kind of cool off. You've kind of seen it happen in some of the memory names in the last, couple sessions here, where they're back to kind of where they were. The vol is not nearly what it was. And that took, 2 sessions really to kind of squeeze out. And I think that's kind of due here for some of these semiconductor stocks and SMH in general. We'll just use that as the basket.
Do you mind pulling up Intuit here? Sorry to interrupt you. Their earnings just came out. We might want to show that on the screen. Their stock's down, I think, 10% right now.
Yeah, we got it
after
down.
hours.
Yeah.
1280 versus 1257 expected on EPS. So they beat by 2%. The revenue is just a hair higher, 855 versus 854 billion. So we'll just call it a plain beat. That's an EPS up 10% year over year, revs up 10% year over year. That's EPS up 208% quarter over quarter, and revenues up 84% quarter over quarter. And yet that doesn't mean anything for a company that apparently is still laying off 17% of its workforce. The memo Nick, I mean, that may be for efficiency reasons, but anytime a company lays off like 1 out of every 6 people that work there, it does raise some eyebrows about the business maybe being a going concern, even if it's to ostensibly pivot to AI, as the memo today showed. Do you buy this dip?
Not in Intuit. No, I don't. I have enough brain power going towards trying to trade around the volatility in the semiconductors that buying dips in some of these software names. I actually have some short delta in CRM, IGV, which have both had really nice bounces. I'm long Microsoft, so I guess I'm in that basket. But no, I'm not going bottom fishing here. I think a lot of these stocks have some serious problems, especially if you think the AI narrative is real, if not understated, which I kind of do think at this point. You got to think, tax software, that's got to be like the first shoe to drop. I know they do a lot of other things, but.
Did either of you guys use any of the LLMs to help with your taxes this year?
No.
I have a guy that does a lot of things under the table, so I trust him.
Same. Oh, to me, I'm joking too.
Yeah, of course.
Right. Yeah. So no, I did my taxes through H&R Block, and then after I finished them, I said, I'm curious what Claude and ChatGPT would say, and they both spit out the same exact tax return information, like literally same exact thing.
Really?
Everything,
was it the same thing as H&R Block?
Yeah, no, it was like the same exact analysis,
Okay.
same number, do this, and it took that 3.5 minutes, whereas like me manually typing everything in and doing it myself and like calling up an accountant and like picking the brain. My mom's a tax attorney, so like I pick her brain. I don't need to pay someone to do it.
Mm-hmm.
That takes me like 2 or 3 hours. So now I'm like, can I just use these things to do my taxes in the future?
I mean,
the lawyers,
sort of
the lawyers say don't do that
robo-advisor.
yet. It's a robo-advisor for investing.
Business model, right? Like the Betterment and the wealth front of the world. It's like, well, I can give you modern portfolio theory in an algo and charge you 25 basis points instead of 200 basis points because the person on the other end of doing it in person is just going to give you the same modern portfolio theory allocation out of the same algo. He's just going to manually type this stuff in.
Yeah, we can subtract.
Is it going to be any different? Not really.
No, we can subtract your age from 100 and tell you what percentage of stock allocation you should have.
Yeah.
Which sounds like a joke, but that is literally one of the ways that wealth advisors, historically, they have done it. Like that was we should allocate, you're 30, so 70% of your wealth is in stocks. So,
I'm going to raise it. This is a little off topic, but I'll raise this question because we had it for Confirm and Send today. And it was a really interesting question. And TP had an interesting response that I did not expect from him. But the question was essentially, because bonds have been moving, rates have been going higher. To your point, what do you allocate towards to stocks? What number on rates would you have to see to not be in stocks? What would be your out?
What time frame? Where are we? 2s, 5s, 10s, 30s?
Any of them. 2s. Let's say 2 year. Short-term yields. If you what interest rate would you say, you know what? It's time to get out of my Nvidia, my long-term Nvidia, or my this or that.
Remember those I bonds a few years ago?
Yes.
Where you could clip a 10% coupon.
Yeah.
Right. And there's a cap on that. You can't just park all your money in there. But like for me, that would be, give me an I bond that's fetching like 8-9%. Post World War II era, the stock market.
See, that's the thing.
Over 8%.
I think you're saying exactly what I would say here is for regular rates, like the 10-year, to go 6%. to go to levels like this would be so problematic that your thoughts would be about other things. You would go, why in the world is the 10-year at 7%? What have we done?
I think that's
fair.
By then I will have thought about exiting stocks several hundred basis points earlier.
That's probably true.
Has clearly gone terribly awry.
That's probably true. TP gave me 15%. I was like, 15%? TP, you're an older guy. I was expecting, a 6-7%. Someone that was a little closer at the money here. But it's an interesting question with the way rates have been moving.
We have double-digit interest rates in the United States. Then something has gone so terribly wrong that I've probably dug myself into a bunker and invested primarily in canned food and ammo.
You're a loan shark that doesn't charge you single-digit interest rates? It's shocking.
Anyway.
Yeah, so we're about, 5 or 6 minutes away from when they're supposed to be released. Last time around, they were delayed, I think, 10 minutes. If we recall correctly, Ilya, we spilled over into macro money, as my brain seems to remind me here.
Yes,
Nick, obviously it's too late to put the chips down. You could theoretically get some futures trades on here. The action today in the market, broadly speaking, was constructive. So it's not just about an Nvidia, right? You're not buying, XRT, for example, the stocks that are in the retail ETF because of what's happening with AI. That's a different catalyst here right now.
Presuming that's your logic. What if your logic is Nvidia, as we've just said, is just a sentiment marker? It has little to do with AI and more to do with overall market mood.
Sure. I'm more curious about what's happening in, say, oil right now as the broader driver here, because if Nvidia doesn't shock us, let's say they beat, it's $85 billion in revenue over the past quarter, and it's $2 in EPS. So the AI infrastructure trade is clearly intact. Is there what's the more compelling case to trade the index right now rather than something like oil? Because oil feels like it's about to, if we are going to get a deal here, we could be looking at a huge move in oil futures that could really subsume anything that's happening in Nvidia with its, historic tendency to kind of give us an inside lower leak to the downside post earnings. Nick?
I can see it.
I mean, I will say this morning was a whole different situation. We had kind of a flat market. It looked like, we even ticked down at one point this morning. We didn't start to skyrocket until we got the deal is on the table tweet for the 14th time. So I think a lot of the move...
Is that what the tally is? I was asking Chris how many times the deal has been on the table. Was it 14 now?
It is? I threw a number out. I think you got to say at least one a week, and we've been doing this for...
You got to say double digits, right?
It's got to be at double digits at this point, I would think.
Right. Okay.
I that was just, my own thought on the deal, but I think it's been.
It feels like a good guess. It feels right.
I think I've been making markets, so to speak, here trading for a little while. I think I'm close enough, but I mean that was really the move this morning. Was that kind of risk off movement, which I thought we were going to just pin around 7,400 all day because you had this Nvidia announcement after the close. This big kind of volatility event, you kind of go nowhere. It almost felt like they were trying to, put some fuel on the fire, so to speak. You put another big news event today, you get get everybody kind of juiced higher. I don't know. That was, I guess I should have expected it. It was a day late from Taco Tuesday, though. We didn't get that yesterday.
Yeah, it's an interesting thing. It's like we were just saying with Chris. I almost get the sense that they're not thinking about Nvidia as such. That basically Nvidia, AI, and just the stock market have become basically the same thing.
Yes.
And so Nvidia is not about Nvidia or chips or who's going to build what data center. It's about, will the stock tick higher? And if so, hey, we're going again, everybody.
Both of you guys are very foolish. According to ChatGPT, Trump has only said that he, on 9 separate occasions, on the verge of
almost double digits. Oh,
this and that doesn't count the follow-ups. That's probably just like the initial.
That is, if he says it on one day, if he says it multiple times that day, I'm not counting it. But close, near, final stages, good chance. Anything proximally that the LLM would suggest is related to that type of language. 10 to 12 if you include repeated same-day remarks, true social posts, and indirect allusions, but otherwise 9. You guys are getting sloppy. 14?
Now, how long would that take you to figure out a year ago or 2 years ago without AI? That would take.
We have it.
I don't know. Awkward TV. I've been like, Ilya, you vamp for like 10 minutes.
Yeah.
While I search, figure this out.
There we go. It's working.
There we have it. There we have it. It's working.
Nick, we have just 2 minutes left here. S&P 500 pre-market 74.44, NASDAQ 29,336. Bitcoin had a pretty nice day today, Nick. I feel like Bitcoin has been something that's a little disappointing recently. It had its kick higher and stocks are holding up-ish and Bitcoin starts kind of falling apart. Do you have anything going on in IBIT? Because it feels like Ilya and I both have things in there that are disappointing us.
Oh, I'm very disappointed. It's the stick figure with the stick poking, like do something, that kind of thing. I feel like it's been an awful trade. I mean, it's gone nowhere and there's no juice to it. You had the Clarity Act stuff kind of come across the table, give a little bit of some upside volatility, but I just think it's just not the story anymore. I think we've moved on. It's Nvidia, it's AI. That's the big story. I've got some Bitcoin, a spot via IBIT. If we go higher, fantastic. If we continue to bleed lower, I'll continue to curse it.
I think, that's probably spot on. It feels like it's dead right now. Right. I mean, I'm like, not for nothing, folks. I'm talking to the audience here at this point in time. We've seen what you guys like when we make content. Yeah. People just do not engage with anything crypto.
Nope.
Right now. They're just not, if it's tweets, if it's social media, if it's emails, if it's YouTube videos, not for nothing. Like I thought I had a pretty good interview with the CEO of Binance US recently. That's a good guest.
Yeah.
Didn't perform as well as we thought it would. And we have conversations about like what people are trading in Micron, and that's getting thousands of views more. So crypto right now feels like it's not just in a winter, but like it's really kind of been buried a little bit here, which is a perfect time for me to say that it's now 4:20 Eastern, which is when Nvidia earnings should be out. Nick, if you want to pull up that 5-minute chart here, we can get a brief glimpse into this world of Nvidia earnings. Stock is trading a little bit lower here right now. I'm trying to see if we actually got the earnings numbers out thus far, and it does not seem like it yet. Nick, you were talking about the best possible move here for Nvidia, which
they're out. Here we go.
We just got earnings 185 versus expectations.
I see 187.
We're doing this again. We did this last time.
177 expected.
I'm going to trust the fact set here. Okay.
Fair enough.
Fact set estimate was 175. The adjusted EPS was 187. Okay. Revenues came in at 81.615 billion versus 78.97 billion expected. So EPS is up 131% year over year. Revs are up 85% year over year.
The casual 2 billion beat.
Yeah, 6% beat on EPS, looks like 3% on revenue.
We made an extra $2 billion.
Whoa.
We're starting to, you get this reaction here, Nick, 220. It's a little bit of an inside lower. We talk about a 6% move in either direction. So what, $12 here?
Yeah.
Would be the downside against 224. So 212 is where the expected range would be. And then all the way on the other end, we talk about 236. So a little bit of an inside and down here right now. Are you waiting for Jensen Huang to come out and speak? He's been doing the circuit, of course, speaking at like the ServiceNow conference where he talked very glowingly about what ServiceNow is able to do with AI and how it's really helped their efficiency even in the production line. Do you care much about this initial reaction given the scope and scale of those very impressive numbers?
I will probably take my Claude notes on it. I don't know if I'll watch it. I'll watch it live. I mean, those numbers are incredible. We've had Jensen in China. We had him on with ServiceNow. The stock is basically unched here. I think this is perfect. And then the next step, I think the interesting part will be the overnight trade. What the NASDAQ will tell you, what we're doing, obviously, but volatility is really one that I'm going to key on. I'm going to see if they take out some volatility here into tomorrow now that this is kind of out there on the street. E-minis only up 52 here. They've sold off about 20 handles. NASDAQ down about 100 from its high, with Nvidia at 216 and change here, down about $6 or $7 from the closing print. How do you guys take this? What do you guys think? It's right in line, if not better. I mean, they beat everything. I shouldn't say right in line.
What we said, right?
$2 billion's a big amount of money.
It's what we said, right?
Yeah.
Nobody in their right mind would think that this number set is going to be bad. It isn't, and the stock is going down.
You know what's so interesting? I was looking today at the initial estimates for what Nvidia's earnings would be like for this quarter, and they just got ratcheted up basically week after week after week as other companies reported. And we still managed to beat that elevated number. So we've come into the quarter expecting like 70 billion. And by the time we get to earnings, it's 79 estimated. And it's still at 81 and a half. This is the most important story in the world still. It's no longer, it's beyond speculative at this point. Obviously the money's being spent right now. How do you justify getting in front of a market where a single company is going to make $250 billion in a year?
I don't think it's getting in front of it. I think it's realizing that at some point the market has priced in those numbers.
Do you think the market has priced in Nvidia becoming a company that makes $250 billion in profit every single year? Oh, sorry.
I think what the market has priced in is that happening in a straight line. And I think the reality is that it's not going to happen in a straight line because nothing ever happens in a straight line.
I think
Nick, I hear that, but what really just the fact that this has been elevated to a national security level issue tells me that we have a lot of price insensitive participants in the market now, which changes the game dramatically, which can't be underappreciated in my view.
I absolutely agree.
I think to your point, Chris, you got it basically unchanged here. We're sitting at 221. Obviously, things can happen in the next minutes, if not through the overnight session. But to your point, I think, it's kind of the numbers have validated, okay, this company is priced where it should be. Like there's no shock here. And I think that's ultimately a good thing for the space. You're going to get a massive vol crush here. I think you're going to get it across the space. If you look at some of the other names, the high-flying names, I was looking at Micron here. It's moving around. SMH is down a handful here, was down a handful. It's bounced back a little bit. ASML and TSM are other ones I've been looking at. If you look at like AMD too, TSM is trading down about $1 here. AMD basically unchanged. Intel basically unchanged. If we open like this, you're going to have volatility get smoked in all these names. Like this is where like at a certain point, you get to Ilya's point, it might not be a straight line, but we've gotten to, the spot here, at least it seems like.
It feels straight line-ish as the market is priced here, I think.
It feels straight line-ish because of the rally since the end of March.
Right.
If you told Ilya, if on January 1st, I would have said the S&P 500 is going to be up at 74.40, you'd be like, okay, that's a pretty modest rally. We're up near like 7,100.
Yeah, that's not crazy.
That's not crazy. It just because of the nature of which we went up and down this windy mountain the last few weeks, it feels very aggressive. But here's a funny stat. I talked before, Nvidia is now positive after the earnings report. right after the earnings come out, I just reran the PE ratio. So coming into the earnings report at $225 a share, Nvidia had a trailing 12-month PE ratio of 45. So we lob off the 81 cents. We lob in the 187. Now its trailing 12-month PE ratio is 37. So if you liked it at 45 yesterday, and its forward PE has now dipped down to 21 as a result. Forward PE of 21 for Nvidia? Interesting. I don't know, guys.
I mean, that's
maybe it's a summer market coming up. Maybe we guys got to float higher and forget it. Learn to love the bomb again.
Oh, but that's right in line. That's right in line with a lot of the Mag 7s. You look at Apple, Microsoft, Meta, they're all right around there.
That's reasonably priced given the growth. The market is still operating as if this is not like real in the future, like it's going to fizzle out at some point.
Yeah.
It's a national security issue now. It's happening whether we like it or not.
223 and change. It's up 50 cents right now. Unbelievable.
Yeah, there we go.
But this is the perfect thing, guys, because it's going to be the pain trade for all the YOLOers on both everybody that's calling for crashes, all the YOLOers on the upside. This is what you need. I don't know. I feel good about this one.
Ilya, what are you covering on macro money today?
We're going to talk about how the growth context works out against the backdrop of all of this. I mean, obviously, we've had this massive response to inflation risk with yields scorching higher and everything else spilling out. But it's an interesting place to be when, for example, the Eurozone economy is shrinking and the market now expects them to hike rates 75 basis points. What's that going to do? It's going to make a recession. In the US, you're now looking at hikes, not cuts. And growth has been better in the past maybe month, but the trend has been down. Consumers have been slowing for 2 consecutive quarters. Really, the only thing keeping anything afloat is this relentless building of data centers, which also succumbs to things like fuel shortages and plastics shortages and more expensive freight and all of these things. So I'm going to be looking at the PMI data here. We're going to get Australia. We're going to get Japan. We're going to get the UK, the Eurozone, and of course the US. And that'll be good context on, okay, so we have inflation. Central banks aren't going to cut. Are we already squeezing and choking on all of this stuff growth-wise? And are we going to end up having the wrong kind of disinflation where the economy fizzles and crashes?
Stat of the day here. In the last 30 seasons, when NBA teams were leading by 22 plus points in the fourth quarter of a game, they had lost basically all of them, Nick. If you were losing by 22 points in the fourth quarter, you were 1-in-594 over the past 30 seasons. And then my New York Knicks. It's the only time I've mentioned on air today. Oh my, I'm going to be so insufferable, Nick. Get ready for it. It's going to be bad.
Here we go.
I figure
4 times out of time.
I'm surprised we didn't get that earlier today. I'm surprised I didn't get any texts or anything, but thank you.
I was a mess last night. Overtime's out of time. We'll be back tomorrow, same time, same place, 4 Eastern, 3 Central, right after last call. So for Ilya Spivak and Nick Batista, I've been Chris Vecchio. Good luck trading. Stick around, though. Brief break, and Ilya's back with macro money.
See you there, everybody.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one.
Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
Gonna go to Florida. I got Rob. Rob in Florida. What's up?
Hello, Tony and Nick. I am a big fan. My wife and I watch you guys for hours and hours every day. You can be very, very proud of your son. He is doing a great job. I really didn't know anything about stock prices or options or anything until I started watching probably 500 hours of Mike and his whiteboard from years and years and years ago, and learned all about it. And we've been trading actively since February and just couldn't be more pleased.
Awesome, man. Thank you so much for the kind words. Really do appreciate it.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Pay for backtesting? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
I'm still coming down from the weekend. Saturday night like we should. I know I should work a bit harder, but baby, your love is too good. You knew what you did when you planned it, you scammed it, making right off like a bandit. I know that you worked a bit harder, 'cause baby, your love is too good. Touch me, hold me, love me, know me. I like how you do it, you're helping me through it. Baby, your love is too good. You knew what you did when you planned it, you scammed it, making right off like a bandit. I know what I know, it's time that I go, 'cause baby, your love is too good. Baby, your love is too good. Touch me, hold me, love me,
Well, Nvidia has come and gone, and so have the FOMC minutes. Where do we find ourselves in the markets, and what will this mean going forward? That's what we're going to try to figure out here on Macro Money. I'm Ilya Spivak, head of Global Macro here at tastylive. And as ever, we're going to get into the price action first, just to see what the markets actually did before we try to explain why they did it. And so we'll anchor ourselves there, and then, of course, look at what the FOMC minutes did, look at what the situation is now that Nvidia has reported, and then see if we can't figure out how the markets might interpret the next layer of event risk, because, of course, there is always a next layer in this environment. We're going to be looking at the incoming S&P Global PMI data that has lined up here to give us a look at what is going on with global growth at the time that we are getting all of these ructions across markets in interest rates, and see if maybe the way that we get with a resolution on this inflationary story is all the wrong kind of resolution. Because if, after all, growth were to succumb, that would be the wrong kind of way to get rid of an expensive oil and an inflation issue. So let's take a look first and foremost at what the price action is telling us here. Here's the S&P, and we can see here certainly a notable pop here, but also a notable backfill in the sense that we don't really run off to the races. We take a step back from what looked like a downside continuation yesterday, and we end up with a push that seems to retest the bounds of the turn that happened on Friday, but doesn't really do anything to negate it as such. And so what we end up with is a situation where the market seems to be kind of waiting for the next shoe to drop, whatever that is. But we've sort of pointedly cut off continuation for the down move. We've not overturned the actual case for this being some sort of larger change in the relentless rally that we've seen over recent weeks, and what that change will bring so far, we've yet to see. Parallel to this, of course, was a pullback in crude oil, and one might say this is a likely catalyst for what happened in stocks ultimately. They didn't start off strong on the session. In fact, they were quite defensive, and where we really started to get meaningful push higher was as we started to see once again some hopeful headline generation out of the White House, where they were coming out saying maybe there's a deal with Iran that's coming up close. Of course, we've heard this story enough times already, but one of these times perhaps it'll actually lead to something. And so the markets get a little bit of the kind of news flow that they might need ahead of key event risk, like the FOMC minutes, like the Nvidia earnings, as an excuse to say, well, let's back up. The most recent things we did was to bid up oil. Let's not be on any one side of anything here, when maybe this one's the one. Maybe this is the time. And so crude oil pulls back. It doesn't ultimately go very far. It continues to hug the middle of its wartime range, and is, of course, still something on the order of 40% higher than it was before the war. And so we see here seemingly a bit of a relief day, but nevertheless a story of the cost structure having been shifted higher meaningfully, and in a sticky way that's now persisted through all of these types of headlines for months. It's a similar story for natural gas, which pulls back after yesterday's upside breakout, but pointedly holds at former range resistance here, the top of this former range that it just broke, pointedly holds that as support. As if to say, okay, we've broken out, we've had a correction, but the path of least resistance now perhaps favors the upside. We still have a series of higher highs here. And so, again, the sort of energy complex to inflation story seems to be very much intact here. Not surprisingly, with a pullback in that complex today, though, we get a pop in bonds. Yields get a little bit of relief. Of course, the pressure on bonds and the pull on yields has been really all about this energy story as a sort of first catalyst that powers the inflation expectations train here. So not surprising. Bonds have a little bit of a pop. We still are very much within the bounds of a large wartime decline. This is where the war trade begins. We can see when we got that first ceasefire, the markets toyed with it for a bit. We got about a third of the way back. And then, of course, we've now extended substantially lower. Rates are substantially higher. The path of least resistance is just a stair step in a direction. So maybe we'll get a little bit more corrective activity here, perhaps to retest these bottoms. But for now, it looks like the trend continues to point to higher inflation and higher rates, much as it does in oil, much as it does in what we just saw in that gas as it rounds this bottom. The situation in gold, likewise, feeding into the same story. We are starting to leak to lower lows here. So this pullback after the late March, early April bounce that happened across markets when that first ceasefire came out, that's starting to look less like a sideways drift and more like a down move that's developing. So lower highs, lower lows here. We come back, much as we do in a lot of these markets, to retest the underside of a break that's just occurred. But it does look like maybe the path of least resistance now is down to here next. So sub 4,400 into the sort of 4,300, upper 4,200 area, somewhere over here. And at this point, yes, there's a bounce, but the price action doesn't suggest that there need to be much made of it. It hasn't crossed any trend-defying Rubicons. Similarly for the US dollar, we're for the fourth day now consolidating at the top of the range that we've carved out since the war trade went on pause, as it were. There was, of course, a strong dollar rally when the war initially broke out, high rates and pull for yield, all of those things working in the dollar's favor. We've had about a halfway pullback, and we've attempted to use that as a springboard to build higher. And we're back at the top of our range. We're going to see if we get extension on yields, if we get extension on energy back to the upside. This is going to look to perhaps break higher, much as gold is going to look to break lower, but in a holding pattern here as we are there. And Bitcoin seems to have found the top of the range that we've been looking at here. It stalled once again in this area. This is where it started to break out. This was, of course, the down move late last year. And we broke out of that down move, say, about here somewhere, where we started to set higher highs. And the cadence here, stepping lower, was interrupted. And now that we've pulled back a little bit, we're sitting at former range top resistance becomes support right there. And we'll see what happens. This has been marching to the beat of its own drum largely. It's been ignoring a lot of the macro narrative. And so here it's just seemingly watching the charts and the ebb and flow of price action. And at this point, it looks like the upside break still looks valid, albeit it seems to be at its deciding line. As far as the markets are concerned, the inflation story is very much intact. The break-evens, which are the inflation expectations implied in bond markets, they continue to sail higher right alongside crude oil. If we look at the expectations for where inflation is going next, this is the Cleveland Fed's inflation nowcast model. We can see for the next month here, the May inflation report, we're looking for still higher prices. And as the hit of the war really starts to take effect, note the actual results have been outperforming the model. So the model is, if anything, understating at its calibration back from March into April, where the hit really starts to take, how much inflation there is in the system. And this is largely because what we've seen is that the energy inflation that we just got from the CPI and PPI numbers that were just out, we can see that it's not just staying in the energy component now. It's going into core inflation. It's going into services through the cost of warehousing, the cost of transportation, and analog services, the expansion of wholesalers' margins when those wholesalers are selling fuels and lubricants, so petroleum-based products. We're seeing those things already. And of course, the implication for policy, as we've seen, has been a hawkish shift in expectations. The Fed now on the menu for at least a better than even chance of a rate hike this year, and that's a little bit diminished by today's action. But nevertheless, we're looking at better than even odds that we get a hike this year. And when we look at sort of what has been the main check on those types of ideas as a consequence of today's bounce in bonds and pullback in the dollar and so forth, we can see that it hasn't really materialized so much as diminishing significantly the chance of a hike this year. It's more the introduction of another hike next year. So if anything, the timeline maybe has elongated a bit. But now the markets are not just seeing about a 50-50 shot, give or take, a little bit higher for a hike at some point late in 2026, but about the same chance next year. So it seems to be less about whether that hike will appear within the calendar year, this year or next year, rather than whether they were biased in the direction of a hike at some point in that space. The April FOMC minutes gave us about as hawkish of a story as you might expect, setting up for what is going to be a very interesting sort of situation when we ultimately get a policy announcement out of this new Fed that, as of Friday, will be chaired by Kevin Warsh. We're looking at a situation here where we can see, for example, many policymakers would have preferred to remove the easing bias from the statement. Now, of course, only 3 of them actually dissented, but many implies that there was a sizable group that was there, just not prepared to formally put their name behind a dissent. Now, this part is perhaps where last week's inflation data becomes so interesting. Some participants were concerned about a scenario in which elevated energy prices and tariffs could result in inflation pressures becoming embedded more broadly. Now, of course, when we talk about the energy shock starting to spill over into services inflation, this is what we are talking about. Now, several participants still said that cuts would be warranted later this year in a scenario in which the conflict was resolved soon and inflation pressures dissipate. Well, yes, perhaps that's exactly the ingredients for rate cuts, but also considering that what we're watching here seems to be the polar opposite from the numbers themselves, and indeed the markets are only driving this higher, the logical conclusion from that statement is that rate cuts are basically off the menu at this point. As far as Nvidia is concerned, not shocking, really, that the darling of the AI space has been a major blowout on the numbers once again. A 6% beat on EPS, 3% beat on revenue. EPS is up 131% year on year. Revenue is up 85% year on year. So massive results. But as we've been talking about here, no one in their right mind probably expected anything less. And so what we end up with is a situation where we have a kind of initial sell-off that's moderated a little bit, but ultimately the response from markets so far in the after hours seems to be kind of nonplussed, where the markets look at this and say, okay, well, sure, but what have you done for me lately? And that perhaps is really what starts to stand out as the most kind of directly sentiment relevant part of this equation. Because what you start to then ask is, well, if the markets on the stock side were open to re-engage with this inflation narrative when we talked on Friday last week after the Cerberus IPO and through the meat of the big explosive earnings season, well, that's where you got space to have a down day like this. Well, notice also that was the place where volumes started to come back. We see today, as we get this correction, volumes relatively tepid again. And so if Nvidia becomes one of those sentiment types of markers that passes without influence and essentially just leaves the market saying, right, Nvidia is growing really quickly, there's an AI boom, we know. Next, well, then perhaps then the market defaults back to these inflation dynamics, because then really and truly all of the scheduled programming on exuberant AI headlines will have passed. Now, where we might get some interesting headlines on the macro front is the incoming set of PMI data. We're going to get Australian numbers first, then Japan, then the Eurozone, the UK, and then, of course, we'll close out on the US. What's been interesting to watch here is, of course, these numbers, as ever, are PMI style. So 50 is neutral, above 50 is growth, below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. You can see here that at least for the situation in the major economies here, you have the ingredients of something that, and the Eurozone is perhaps something of a poster child for this. You have a situation where you're now expecting the ECB, as we just saw, to hike rates by 75 basis points, basically, this year. That's 3 hikes. Meanwhile, the PMI here is expected to give us a second consecutive quarter, this is the composite index, where the economy shrinks. So the central bank is on the hook to fight inflation. Incidentally, the ECB doesn't have a dual mandate. But at the same time, the economy seems to be withering on the vine. And so the policy prescription for what happens here really starts to be wait for the recession to break inflation and then act, unless there is some sort of credit crisis or other market turmoil that requires you to front run it. It's a similar story across a lot of what we're seeing here, and if we just focus on the U.S. as a sort of key driver, the Fed being a sort of pace setter on policy here, we can see for the U.S., the trend in growth has been declining since the middle of last year. Does that have anything to do with the unveiling of these tariffs? Well, the timing certainly looks interesting. You get all of the kind of back and forth with the tariff rollout here, but from about the middle of the year, the regime is pretty well established. We've had all of our back and forth, and we can see there is then a kind of concerted decline in the pace of economic activity. We bounced a bit in the March numbers here, but it's not perhaps the kind of bounce that anyone might find terribly encouraging, in the sense that the trend is still, of course, toward a decline for now, but much more importantly, the underside of what's going on here is that same inflation threat. So we have the composite PMI output price index here, and we can see we're at this point at the highest level since mid-2022. And following the cadence here with US CPI, we can see, not unlike what we've been watching with the way that oil spills into CPI, there seems to be a bit of a lag for where this actually starts to show up in headline inflation numbers, but it does tend to show up eventually. And so what this would suggest is indeed there is more inflation on the horizon. So with that in mind, you start to really ask yourself, well, okay, so if Nvidia was unremarkable, at least as a sentiment check, the numbers were, of course, astronomical. But if that's now table stakes, if the market has said, right, okay, we know we've had a 50% rally in semiconductors since the beginning of the year. We know these numbers are big. We know the capex from the hyperscalers is going to be big. It's in the price. It was there in the price last week, Thursday, and then we had a sell-off on Friday that was not prevented by it being in the price or the AI story having somehow magically changed. So we know these things, but at the same time, the outlook for monetary policy has become aggressively more hawkish because of this sticky inflation, and growth maybe is already getting squeezed. This seems like a recipe that makes it difficult to repeat what we saw in the first quarter, which is a second consecutive quarter of deteriorating consumption, but growth stays up because the hyperscalers are building data centers that quickly. Business investment growth was 10.4% annualized in the first quarter, as we've discussed here before, as compared to household consumption growing at just 1.6%, slower than GDP itself, in fact, which grew 2%. So from a positioning perspective here, I've got a lot on, so I've had to contract the view here a little bit, so this text is actually visible, but I'll break down how these things are structured. For the futures, the gold futures here, I'm just outright short, and these are essentially just direct exposures. Same thing with the currencies here. I'm short the Aussie, short the pound, short the euro, and so all of this basically comes down to a higher interest rates bet. So long the dollar, short gold. The same idea follows in terms of what is expected to drive this. I've got call verticals in UNG, that's natural gas, and USO, that's crude oil. So looking for them to continue to power higher despite the pullback that we saw here today. Looking for that to have an impact on rates. So I've got puts in IEF and in TLT, looking for interest rates to go higher, and so for the bonds to weaken in the middle and at the long end of the curve. Still a little bit short in stocks here via selling calls in the Russell, that's IWM, via both having old and soon expiring put verticals in the NASDAQ and the S&P, and then as of last week, Thursday going into Friday, selling calls in here to reduce the cost of these essentially now dead in the water positions while still keeping the bearish exposure in place. Long IGV, which has been beaten down with a call vertical there, and the long IBIT as Bitcoin continues to kind of creep higher all by itself. A call vertical there as well. That's sort of the core of what I have on here, and that's Macro Money for today. We're here as ever, Monday through Thursday, right after Overtime. That's a show that I co-host with Chris Vecchio, looking at the Wall Street close and where things may go therefrom. Likewise, writing for the News and Insights portion of tastylive.com. And commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money returns tomorrow. Happy trading.
Come on, you know it, how you feeling? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Nicky, we are back, son. No. Good morning, you knuckleheads. Hello, Vanetta.
Good morning. Are you okay?
Yeah. You know, sometimes if I read or I get a little sidetracked for some reason.
He's losing it slowly, day by day.
Do you think?
No.
I think I'm holding up better than I expected.
You are.
Yeah.
You've actually. I was
like a shooting star. I think I was getting like, you know, I was dying as like a star was dying, and now I'm shining bright, and then I think
he's had a little bit of a come up
recently.
recently.
That's not how astronomy works.
Why let facts get in the way of a good story, Vanetta? Why let facts get in the way of a good story?
Okay, you're right.
Anyway, how are you this morning? I know you're going to the eye doctor. My other son is going to the eye doctor. What's going on with the eyes today?
It's a good day for eye doctors. So
Yeah.
No, I've just been having an issue with my retina. I see a retinologist yearly for past shenanigans, but I'm having to see one a little more regularly. But let me tell you, my eye doctor is the most gorgeous man, and I have never seen this man in focus in my life.
So what are you wearing there? You got the little something for him?
He looks like a Disney prince.
A doctor, though, that's a good pull.
Did you get this doctor from your girlfriend? Because that's how my wife got her knee doctor.
Yeah.
My wife has a knee doctor.
And the physical therapist.
No physical therapist yet that looks like, you know, a Disney prince. But
be careful.
Yeah. My wife got her a knee doctor the same way. She always
good for Chrissy.
Yeah. Did you get it from a girlfriend, though? Is that how you found him?
No.
That's how she found him. Yeah.
But what's wrong with Vinnie?
He needs to miss school. Test today.
Finals. If he misses the final, he gets to spend more time. Yeah. One eye is a little, for about a week, it's been like red, but he has allergies. This is we've had drops from 4 different doctors from 4 different ages. Every once in a while, this time of the year, he gets them. Now he's convinced it's pink eye or something else like that, but it's not. It's his allergies. But he's going to go to the doctor.
Well, it's good to get it checked out.
Yeah. It's been a week. It should be checked out. I agree.
Yeah.
I agree. But he'll be fine.
Pink eye, he could be getting into some shenanigans. Who knows?
Let's hope not. Let's hope not. Anyway, what about you, son?
Vanata's just like,
you would give your sister pink eye all the time.
I don't know. I don't remember ever having pink eye.
She didn't get pink eye, but she said you would give her pink eye by the things that you would do. It's true. It's true.
Yes.
It's the memories. It's the memories I have. 13, 14 years old.
What is happening?
Oh my God.
Nikki, save us. What did you do last night? Please tell us a pickleball story.
I can't save us. No, I did play last night. I watched some of the basketball game. That was the first time I've watched a basketball game in
Knicks. I watched it too because of Vecchio, I think. Yeah.
I got some buddies that are
about women's basketball. Now I'm not interested.
No. I was watching the Knicks Cavs game. I mean, it was a wild. I mean, the Knicks were down 20, I think.
Yeah.
Like
they looked
6
horrible. I
minutes
can only imagine what Vecchio was doing, spinning around.
He must have been. Well, he did he put out the meme of Roaring Kitty when he is kind of like this, and then it
lean forward.
The lean forward, and then lean back, like he's back awake. But I saw
was it the last game of the series?
It was game 7 for right, wasn't it? They win the series, didn't they? But they won the series. So. It's over. That was it. Overtime, game 7. Yeah, that was it.
I was just curious. I wasn't trying to trap you. I just haven't.
No, that was the first game. That was game 1. Yeah. It was
you're right. Oh yeah, I thought it was game 7.
It was game 1.
I saw it went all the way to overtime.
Yeah. But I saw that it was the probability on it was 99.9% predicted had Cavs winning with 5 minutes left or something like that.
I love it. And then the chart just falls off a cliff.
And then the chart
last.
Yeah, exactly. It was pretty crazy. And the Knicks.
You didn't bet it?
No, the Knicks were 7.5-point favorites. I saw some stat that 95% of the money came in on the Knicks, whether it be Knicks money line,
right.
Knicks spread.
Wow.
It was 90
so people
or
got
90.
Paid.
Mm-hmm.
People ended up getting paid, but it looked like the book was about to clean house.
Oh.
I mean, because the Cavs were outright winners.
Yeah.
With 10 minutes left in the game. So, but that was a good game.
Do you have FOMO?
Not really. Basketball just doesn't. It doesn't. I guess because the Bulls are just not competitive, so it's not interesting to me. But I don't know the product. Too many games. Nobody plays in the games. It doesn't seem to matter ever until the playoffs. So it's just not.
I agree with you.
And we are mad at Klay Thompson for what he did to my girl Meg.
That is right. I can't stand him. Ugh. So horrible.
I'm going to abstain.
I hope he never wins anything ever again.
Definitely.
People are writing in the Porsche didn't fix the pink eye.
Oh.
It's
so funny because the Porsche. So we've already started the money hemorrhaging here. New key.
Yeah, new key. Needs a key. Oh, he only has one key. I think.
Tires.
One tire has a little bubble on it. I don't know if it happened before I bought it.
What's the next thing? Those are the 2 updates in the last.
That's it.
So we've had it for
2 weeks. Week and a half. Yeah.
All right.
Yeah.
So we got nothing.
And who is the financier of these adjustments?
He's working it off. Back in installments.
Yeah.
No, I did.
Okay.
The
key will take him 4 weeks. It makes about $200 a week.
How much do you think a key is? Did I tell you?
I mean, I know a key for a normal car, and by normal I mean one that a normal person drives,
average.
Yeah, an average car.
Average
is probably $200 to $300.
Yeah.
The Porsche probably doubles. Everything is double. So a tire, $200 is gonna be $400.
No, about $250. Yeah, for the tires. Balanced, blah, blah, blah. Yeah. But you need two because you can't put just one.
Oh, yeah, there you
right?
go.
You got to match kind of thing.
Yeah, of course.
Right,
Of course.
right. Key 700.
You got to talk to my girl, Tracy. Her husband is like the tire king of Ohio.
Oh, I didn't know that.
Yeah, really?
We had an in.
Yeah.
Shoot.
I told him Costco. I was like, hey, I found out this Costco's got tires too.
I like to go local. I go to Loyola, just a little local place. But
that's good.
Yeah.
Support your local business. It's good.
Support the kids that went to private school.
Yeah.
You know what I mean?
It's good. It's good.
For sure.
That's funny. Hey, this is crazy. I like to watch YouTube, in the evening as I'm putting the show together, and I watch